You write Cat Daddy on there.
Oh my
That's
God.
good,
And then
man.
just
That's
a bunch
good. I
of
didn't even
cats.
think of that. That's horrible.
And a bunch of cats. Breaking news here. I don't know if you are aware. I'm a little bit nervous about this, but the NFL schedules came out last night, and your Chicago Bears, 6 primetime games, probably the jewel in that crown, Christmas Day, Bears, Packers,
Ooh.
Soldier Field. Do you forsake your family?
Well, it helps. I mean,
I will not be at the game. No,
no, I won't be at the game. It'd be help to have it on, though. It'd be nice.
It'll be great.
Yeah.
And the Bears also will play on Thanksgiving, the Lions. So, and then again, 6 games total in prime time. What are your estimates of what the Bears record is going to be?
Yeah, so let's go conspiracy theory here. Does the NFL know, is the fix in? Are the Bears going to be primetime worthy? Are they going to be good enough, or are they going to make the mistake like they did last year with what team do they have on all the time?
Maybe Washington.
Yes.
I don't know, but no, yeah,
Is the fix in?
I don't think so. I mean, they have us at 9.5 right now. That's our line for the futures. I just looked that up now. Which is a full game higher than what we were last year. So that's a good indication.
Good, better, best.
Yeah, good, better, best.
A full game. So is it 8 or 9?
9.5.
9.5. Wow.
Yeah, last year it was 8.5.
All right, I could remember.
You don't remember that? I think Tom took the under. Did I?
No, I think
I think Tom was an under.
He won. I think I took the under.
Oh.
I think.
Oh yeah, you've always been a Caleb hater.
Yes, I have been.
Yeah,
yes.
you're such a boomer.
Yeah.
You don't
Well, you're gonna get an I Heart
nails.
Caleb shirt right in about like 5 minutes.
Yeah.
There you go. Perfect. Good, clean fun.
Yeah.
Are you gonna try to go to games? Because is this our last season at Soldier Field?
Oh, that's a good call. I didn't even think about that.
I don't know if that's true. I don't know how any of this works.
It seems like it.
Yeah.
It seems like it.
Mikey and I were talking about
Arlington Heights, here we come. Go ahead, bud.
depending on who we played, but we do play Tampa Bay. That would be a nice little, mid-year getaway. Play some golf, watch the Bears, so we might plan out a little boys trip. Not quite boomer spring break. It'd be like middle-aged, I don't know. I'm trying to think of something that kind of like rings with that, but yeah, middle-aged getaway kind of thing,
You got a lot more stuff to pack now when you go on vacation, so make sure your bag is big enough. You know what I mean?
For me, if I had to cherry pick a game on this schedule for weather, for vibes, for whatever's going on, it's going to week 3, Bears versus Eagles. It's September 28th. Weather should be good. It's a Monday night. Got to take that Tuesday off though.
Yes, for sure.
Nah, you got to go to preseason. That's the only thing you can do for the Bears. The rest of the season stinks.
Oh, you're such a hater.
Weather sucks.
No
It's horrible.
way.
Travel. Go see them someplace else. That's what you should do.
All right. Well,
Yeah.
also, I think The Office is going to be torn that week 15, Bears versus the Buffalo Bills.
Ooh,
That'll be a good one too.
So if you were smart right now, Nick, you'd buy yourself about a dozen of those Bears tickets, and then you can upsell them to everybody from Buffalo in the office.
Well, the game's in Buffalo, so
Scratch
and their
that.
beautiful new stadium.
Scratch that. I just want to know, is Chris going to come to town for the Jets game? That's what everybody's asking in the chat room.
Ooh, I mean, is he able to watch the Jets without like convulsing? I don't know if he wants to.
Yeah, you could come. We got the Jets week.
Yeah, you
4.
stay with me, Chris.
Yeah,
you stay in my second bedroom. You just hang out.
Probably the most shocking. I don't know that anybody wants to be here, but January 10th versus the Vikings. It's a home. Do you know how cold
that's going to be?
Will be on
awful.
January 10th.
That's going to be awful.
It was 45 degrees yesterday in May. January should be a balmy 0.
But guaranteed, some guy from Edina is going to be wearing shorts.
I don't know. They might be more adjusted to the cold than we are.
That's
Their
true.
stadium's a dome.
They play in a dome, but I mean the people.
The people, yes,
the crazies,
who are very nice.
Crazies,
They're Minnesota nice.
Yes, they are.
Yeah.
Yes.
But if that's too much, because the football season is a little bit far away, starting tonight this weekend, you got the Crosstown Classic.
I'm going to the game.
Cubs versus White Sox down on the south side. Nikki, come over.
I know. I try not to go outside the fences, but I'll be there.
You try not to go south of Roosevelt. I get you.
Yeah. I mean, it's going to be a fun time. I mean,
are you bringing your lady or are you going with the boys?
No, I'm going with the boys.
Okay.
Got a little, boys
she can come hang with me. We can do crafts and then talk shit about you.
I sense a little bit like, you're talking about going on a trip.
I just appreciated that Vanetta just gave the invite.
I would love to meet her.
We
are practically sisters.
I mean, pretty much, yeah.
Yes.
I mean, but that says a lot. I mean, like she's already leapfrogged me in terms of our relationship here. I mean, you barely tell me where you're going on the weekend, and you're willing to hang out and do arts and crafts with her.
Yeah. Also, I want
incredible.
That invite to the Aspen condo. Thank you.
Yeah, I don't know. I'll see if I can squeeze you in. We'll see.
I'm just kidding. I would love to meet her, sincerely, though.
Of course.
But yeah,
I mean, you're talking about a guy's trip, and now you're talking about another trip. Is this like, the last hurrah before husbandhood?
What
is wrong with you?
Seriously.
He's allowed to go on trips
going to the
with
Sox
boys.
Cubs game. All right. I got 4 hours of freedom.
I don't know. I see some messages there.
Oh my God.
Yeah,
were you able to get tickets face value or like what's?
I know people. I know people.
Okay.
I pulled some favors in.
What you call Brit?
No. I didn't get the tickets. So one of my buddies got the tickets. I don't know how he got them.
Did he have to go to someone's backyard and lift up their grill?
Are they that expensive? I mean, I know obviously the Cubs Sox it's going to be full
the Cubs
house.
are over 500, or the White Sox are over 500. That's rare. And obviously the Cubs are good, and then they turned around a losing streak last night, so they won, and so I don't know. It's kind of exciting. It seems more exciting than in recent years.
I just always thought like Comiskey was just like never full. It was it didn't matter.
They have really good theme nights though.
Oh.
Ooh.
Okay, interesting. Well,
there's going to be a Hello Kitty night later this year.
Are you going to go for that?
Hells yeah. They're opening a Hello Kitty cafe on Whacker. I don't know when, but I saw it and I was like, oh.
So do you know what the giveaway is? Is it some like socks?
Yeah, it's like socks, Hello Kitty branded. They're also having a Barbie night.
Oh, wow. Okay.
Then of
they're
course
really trying to trying to double the audience because right now it's all the husbands. They're trying to get the other half to go.
I think there's an Italian night.
Really?
Hey.
Oh, hey.
Hey.
We all have to wear our Dago tees.
I don't. That is not my culture.
I could have called them something else. I decided to be politically correct.
I was like, that is not my culture, but I love that for you.
Too good.
Anyway, Bat, how was your evening last night? How is Vinnie doing with his new car?
Vinny's doing good with his new car. He's a little pissed off. His hockey stick doesn't fit. It's an outrage, actually. His hockey stick doesn't fit in the trunk or the frunk of the car. So he has to keep the top down or put it through the window when he drives.
Wow.
But then he could take the Ford Explorer.
The horrors of his 16-year-old existence. Oh my God! The
trouble this kid's seen. Oh, the trouble I've seen.
No, sir. I'm going to stop you right there. You will not sing an old Negro spiritual over the woes of your child trying to fit his expensive sports equipment into a Porsche on the North Shore. No, sir. You are vetoed.
Thank you, Vanetta. Thank you, Vanetta.
No, sir.
To that point, I sent the picture around, and my girlfriend says, what is he going to write about his overcoming hardships for his college admission letters?
See, this is why I want to hang out with her.
What's he going to use? What's he going to use?
And what was my answer?
That was his hardship. He couldn't fit his hockey stick into his Porsche.
He didn't know that. He didn't know that before.
Well, no, sort of similar to that. My dad said, well, all the other kids had new Porsches. He has an old Porsche.
Okay.
It was a hardship, you know?
You know what?
He had to drive the old one.
Welcome to Cornell.
Yeah, exactly. Yeah. So good.
So does he pull up to his job at Dairy Queen in a Porsche?
Yeah.
I'm being sincere.
We'll find out tonight.
Okay.
Find out tonight which car he takes. I don't know. Is it going to rain today? Is it going to snow?
Okay.
He may take it. No, he'll be all right.
Man.
Is this summer? I mean, because it's his.
It is going to rain today, though. I think so.
Oh, I don't know. Then he
might have to take the Range Rover.
Oh, the horror.
All right, enough shenanigans. We got a great show for you today. A lot of good stuff headed your way on this fantastic Friday. We did it. The midway point of the month, the end of the week. Let's go. At the top of the 8 o'clock hour, we're going to do some confirm and send. We're going to delve deep into some viewer submitted questions and see what the vibe is like, answer some questions. Because has anyone checked on Jamal?
No, we should send out like a flare. Somebody should text him and be like, just like, pulse check. Are you alive? Like,
how much Miami is too much Miami? Asking for a friend. I'm
pretty sure he comes back with some Miami Vice type shirt on. I think this will be the change we've been waiting for.
He's just gonna start dressing like Pitbull.
Yeah, exactly.
No. I think he's gonna do it like from Miami Vice, the '80s. He's gonna come with like big shoulder pads on, jacket and stuff. He's gonna be cool.
Then it is hashtag Fan Friday, so that means fast market at 8:40. This is where the bats do viewer submitted trades. Will be interesting because we are at new highs. And then it says 9 o'clock market measures. I don't have the description of the market measures. It just says market measures.
It's a 0DT piece on Jade Lizards. It's going to be a good one. I mean, it's obviously going to be a strong performer just because the way the market has moved over the last couple of years, which is our complete data set for 0DT. But it's a good one. We've gotten into other strategies. I mean, this is going to be very similar to an Iron Condor, but has more upside because it's
an interesting strategy today with even the S&P down 90 or so, back to Wednesday's numbers of this week.
The horror.
The horror. Yeah. And then we have around 9:20. We have live from the trade desk. We got Q in the house counting down the top trending tickers over at Tasty Trade. Hey. Do you want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
across
the wire. Leading story, top story, just in.
In today's headline,
this just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's May the 15th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. I'm under-caffeinated. Are you ready for the news?
Ready for the news.
Ready for the news.
Stocks in this S&P 500 sector are getting more attractive. Healthcare back on the radar. The healthcare sector lagged the S&P 500 from 2023 to 2025, but momentum is shifting in 2026. GLP-1 drug pricing fears are overblown. AI is driving diagnostic efficiency. The average healthcare company has 17% outperformance in modern election years, and the PE gap in healthcare is right around zero. Healthcare makes up 10% of the weight of the S&P. Is there any opportunities here that you see?
We've traded some UNH here and there. I don't have.
It's in XLV.
Yeah.
Yeah.
I mean, it's one of the biggest healthcare providers. Not exactly in the like a healthcare stock like an Eli Lilly, but it's been relatively strong. It's trading right under 400. 391 this morning. Eli Lilly back to 1,000. It's been super, super strong. The other side of the coin, you kind of mentioned too, with some of the technology that's going on. If you look at some of the biotech stocks, if you just go like XBI, it's basically at new highs here, or just off of new highs. XBI, which is kind of like a proxy for small caps as well. It's a higher volatility kind of small cap play. Reaching new highs. So I mean, you got to expect AI is going to have some effect on those sort of stocks as well. Some of that is being present.
And I personally, like when I went to the dentist, they used AI to scan my X-rays, and I'm like,
really?
Yeah.
I went to the dentist. They no longer put the lead weight thing on top of you, but I asked for it anyway.
Oh, sweetie, you're too far gone.
True story.
Why don't they put the lead thing? How does that change?
It's so concentrated now. It's digital. They say the teeth scrubber lady, because it was just
the
clean
dental hygienist.
Yeah,
the teeth scrubber, not tooth. The teeth. The teeth. You should say it like a real Guido. You just go to teeth.
It's
a teeth.
It's a teeth scrubber. She said that it's real concentrated. I says, I don't know if you're really a technician on this apparatus here. I'll put it on me, please. But getting back to XLV, healthcare stocks are so much better on an option side to trade individually than like an XLV that's going to have 18, 19% implied volatility, and these stocks are going to have 30, 40, 60% implied volatility. So the individual stocks, XLV, great thing, blah, blah, blah. But from an option standpoint, the individual stocks.
I will also say, the kids these days, they don't know about the fluoride trays. There was nothing
the foamy fluoride trays, yeah.
No, we were actually talking about it. Like, after people like me are gone,
yay!
Giving me age, and out of my age, nobody's going to talk about the lead.
No, I remember the lead. I remember
why do you not accept Gen X? Like, hello, there's a whole generation of people that you were missing between you and Nikki.
I am millennial.
I know, but I'm saying you're just negating Gen X. Like Gen X remembers.
Well, it's in true boomer fashion. Nobody matters but the boomers.
Yeah.
Hey, listen. Just remember, fluoride, radiation, it doesn't hurt you. It really doesn't. Just look at Josh.
Yeah. That one.
I gotta keep it moving. I gotta keep it pushing. He's trying to set a record with HR. Whatever. Crypto scores a win. The Clarity Act has cleared the Senate Banking Committee. It passed 15-9. It's on the way to the full Senate. It's going to need 60 votes. There are already 130 amendments filed ahead of the vote. Banking groups still say that the stable coin yield rules are too friendly to crypto, but the Clarity Act would be the first wide-ranging crypto market structure legislation. Crypto stocks have been kind of ticking higher this week on the news. What are we doing in crypto?
Bitcoin down 1% with the market here today too. Bitcoin down around $900 or so, hitting that 80,000 number, which it has a few times this week. Even though it's down 1%, I consider it hanging in there. Much like the market, down 1% is. We really are back to Wednesday's numbers.
Yeah, it had a nice move yesterday. I don't want to how does daddy do it because currently not a daddy, but I did.
Wow, you got a lot to reveal after this trip to Florida. Woo.
No,
Arizona.
There was a play. I did a short-term play in MicroStrategy. It was a nice little trade yesterday.
Okay,
you did.
Playing into the FOMO of it. Bitcoin rallied like $2,000 into the middle of the day. It was down on the session to start, and then kind of rallied into it. I don't know, news-driven kind of FOMO trade there. I think that sort of stuff is going to continue for the foreseeable future. I think,
Anything in Coinbase?
I do not have a Coinbase position. I traded some Circle. I have some long delta in Circle, which is kind of in play with this whole thing because it's really mostly about pushing through yield. And so Circle is kind of the biggest one as one of the stablecoin issuers.
Yeah, it's caught a little bit of a bid. It's down about $5 this morning, trading 118 or so. It closed around 123, 124. Coin is down about $2 or $3. 208 closed around 212, just rounding up there in Coin. Coin hasn't gone anywhere fast.
Getting to earnings from last night, Applied Materials beats estimate and raises outlook as AI drives record semiconductor equipment demand. AMAT brought in Q2 revenue of $7.91 billion. That's 11% year over year. $2.86 is their adjusted EPS, and their forecast for semi growth exceeded 30%, stock up around 4.5% in extended trading. DRAM and AI packaging is driving their multi-year growth cycle. TSMC and Samsung are also expanding capacity, and that's a direct tailwind for AMAT.
It's the first one that didn't go up about 15-20% after earnings. I don't know if that's the sign of the times here, but you know, all these other semiconductor stocks, you think like Intel, AMD, LRCX, Qualcomm. I mean, Qualcomm rallied 35% after just like fairly normal numbers that they put out. AMAT didn't go anywhere. And, you know, with today's sell-off, I don't know if you think that not the top being in, but maybe there's a breather here in the market. If you would have done this earnings a week ago, I would have thought the stock was up 50.
Yeah,
that's true.
You know, like those stock, the ones that reported first, they were all 2x the expected move, and this was
but AMAT did catch a bid all the way through this. I mean, it closed at as Vinnie would say, just about new highs. I mean, it's down from those new highs by about $6 or $7, which is inside the expected move.
Yeah, AMD did that too. It rallied up to 350 and then had earnings, and you woke up and it was at 450.
Every day, not every day. If we opened lower or weaker, we've opened on the lows and rallied.
Yes.
That's just about every stock. I mean, just as a blank statement across the board. Of course, it's not every stock.
Sure.
Figma raises their annual revenue forecast as AI drives strong design demand. The stock is up 15% after hours. Their new full-year revenue outlook comes in at $1.43 billion. Their Q1 revenue came in at $333 million, which was 46% year over year. Figma, their Figma Make is driving new paid conversions. They had 690,000 paid customers, and that was also up 54% year over year. Fig.
It's had its first uptick since October of last year when it was a $70 stock. It's $22, up about $1.50, $2. What do you think about this? Have you traded this Fig?
I haven't. I mean, I remember wasn't Adobe tried to buy this?
They did. You're correct, Mickey.
And then it got blocked for something?
Yes.
Or was it
in
antitrust?
the previous administration, it got shut down.
Yeah. And I think Adobe wanted to buy it at a much higher valuation than it's current. I mean, obviously a year ago and change when it IPO'd, things were a lot different. So I guess it was a relatively fair value at that time, which has been cut in half now, considering the stock, was at what, 100 at one point?
Yeah.
I mean, I think it IPO'd around 100. Yeah. 80 to 100-ish IPO day. Haven't traded this one, but
markets are pretty good in there. I'm looking right now. They're not.
I think Liz and Jenny traded this yesterday.
Oh,
look at the girls.
Yeah.
Chuck one up for them.
But also don't get it confused. So Fig is Figma. Figs makes scrubs for medical professionals. So so there's Fig and then there's Figs.
with the S, right?
Yes.
Oh yeah, didn't they open one on that's like the trendy one, right?
Yeah, they're very like fancy, like body yada yada scrubs.
yeah. They have like retail shops on. I think they opened one on Randolph here.
Probably.
Yeah.
I don't know. Anyway, hey, keep it moving here. Let's lost my train of thought. You were right. Okay, Bat, you took all the bets. Cerebras soars 68% in their NASDAQ debut. The stock closed at $311. I saw it up as much as like $370 or something, and I got halted. The market cap, day one, $95 billion. That's close. That's crazy. They've narrowly missed that $100 billion market cap printing on the first day. Where do we go from here?
Well, listen, you can't short this stock, right? It's a hard to borrow. It's a hard to borrow stock, and it was funny. Nikki texted me, goes, "You're not going to believe this. It's 380 right now."
That was the first trade. Was 385.
Yeah, it closed at 312ish. It looks like it's gonna open under $300 here, but again. Hard to borrow stock, no options. We all knew it was going to be, silly, pricing, but I don't think nobody saw this.
This is the point. Like after this is when the bankers at Goldman Sachs, they get on the phone, they call all these junky little tiny AI companies, and they say, "Hey, you guys ready to IPO today? We just got 5x oversubscribed, 10x oversubscribed on Cerebras here. You got to go. You got to put this out there." I think
he's like, "I just bought a helicopter for my boat. This is awesome."
Yeah, exactly. So I feel like this is gonna spur a couple more IPOs that have been on the fence here. I still think everybody's gonna try and get them in before SpaceX and some of these big boys get on the table, because I think they're gonna take some of the air from the liquidity pool.
Yeah.
Fun fact, ARM and SoftBank both tried to acquire Cerebras weeks before the IPO, but they got dikembe'd. So
Damn.
Yeah.
SpaceX, speaking of that, their IPO prospectus could land as soon as next week. The historic $70 to $75 billion offering is being prepped. SpaceX targeting a valuation of $1.75 trillion. The S1 filing deadline is May 22nd. They filed confidentially April 1st, so they're moving things through the process. So before the prospectus, then they're going to do the roadshow. So we will see what happens. And the S&P is considering rule changes to fast track SpaceX's inclusion. And Brookfield disclosed a $2 billion pre-IPO SpaceX shares on Thursday. You can't trade SpaceX, but you can trade Tesla. So that's why it says Tesla.
Tesla's had a nice little rally back to 450. I thought it would kind of languish in that 350 to 400 range that has kind of been its spot. I thought it would sit there for a little bit until the SpaceX IPO, because I felt like it was kind of going to be.
You mean 400 to 450?
No, I meant
Oh, you meant lower, because it's
like near the lower end of where it bounced from it got as low as 340 and then bounced back up to 400, and that's kind of been the spot. I thought you'd stay in that range a little bit until this IPO came out, because I felt like it was going to be a liquidity thing. Like people that own Tesla, they're up 50x on their Tesla shares. They're going to want a piece of SpaceX, and you got to liquidate some of the Tesla. You buy some SpaceX. I felt like that was kind of what was in play here, but nonetheless, it is back to 450 near highs. I was right.
Yeah, but it is down this morning, down to around 430 or so, down about $10, which, like you just said, doesn't get it back to its old, most recent range. You are correct. No. Still relatively high. Even the S&P down 92 on their lows.
The U.S. has cleared the H200 chip sales to 10 Chinese firms, but not a single delivery has been made yet as talks stall. 25% U.S. revenue share would be required, so China chips must pass through the U.S. first. But Jensen Huang was added to the Beijing trip at the last minute. China once was responsible for 13% of Nvidia's revenue. But of course, this is good news for Nvidia. What is Nvidia doing today?
Nvidia has been on a tear to the upside. It's had about a 2-week rally from sub 200 to about 235, where it closed last night. Looks like it's going to open under 230 here, down about $6 or $7.
Always buy Nvidia on sale.
Seriously. But I think it got to 240 in the overnight trading. It was up $5 or $6 in the early part of the overnight session. Not that means anything other than, kind of thin liquidity buying it in the overnight session, but it's been a rocket ship. It's been kind of holding up. The semis have been choppy back and forth. You've had like the CPU pocket of AVGO, AMD, Intel. That one goes nuts one day, and then the next day it's
it. It's like a tag team, old wrestling tag team. Now you get in the ring.
Yeah,
and do it.
yeah. And so they've, for the last week or so, it's been kind of choppy between the different subsectors of semiconductors, and then you've had Nvidia up, $500 billion every single day, and so. That's where the SMH, is kind of lifting itself is through Nvidia, which is playing catch up to everything else.
Yeah.
Sure. Anything in DRAM? I know we talked about that yesterday, maybe looking at some more of that, the ETF.
I kind of forgot. I put that on my notepad and then forgot to look at my notepad to do yesterday. So maybe I do that today. It should be down a little bit.
Is
today.
Down about $3 this morning, down to about $50 and change, maybe 51. It closed at $53 in change. Unlike my friend over there, I did look at the markets in there. They're about 40 to 70 cents wide.
Yeah, that sucks.
So, yeah, that's good. That's Cerebras probably going to come out with options, I would say, in the middle of next week. They usually do it pretty quickly. Might even
it's gotten a lot faster.
Yeah, they're going to get
on Monday. Is my point.
They're foaming at the mouth for those options. Let me tell you.
Let's go.
Yeah.
AI boom puts SK Hynix on the cusp of $1 trillion market cap. The Kospi is up 86% year to date in a historic run. Right now, SK Hynix has $948 billion in market cap. The stock is up 200% in 2026. Samsung crossed the $1 trillion threshold earlier in May. And so now Korea is eyeing two $1 trillion company. TSMC still remains Asia's largest at 1.83 trillion in market cap. But what are your thoughts, Nikki?
Rumor has it Tasty Trade is going to come up with one of these stocks too.
And it's traded. It's an ADR here, so this is I had to look this up. This is the ticker.
Yeah, this one you won't be able to trade it. That it's an ADR that isn't offered on U.S.-based exchanges, so it's OTC. So you won't.
But you can trade EWY.
EWY is the easiest way to get exposure, or DRAM. So DRAM also has exposure to the ADR shares. You get SK Hynix, Samsung in there, TSM. They're all in that kind of.
Plus all of Celine Dion's greatest hits.
Yes, exactly. EWY down $12 this morning. I mean. There's volatility in this sector, so I expecting $5 to $10 moves every day. You should expect that.
Expect the unexpected.
Bat, have you been trading South Korea at all, like Nikki?
I really haven't. I'm really kind of a I don't know, one-trick pony. I like the U.S. markets. I don't like Korean markets. I don't like Chinese stocks. I mean, I just avoid them unless there's nothing else to do. And there's been so much to do in this market. So no, I haven't. I don't do anything there.
I mean, I'm looking into doing more EWY stuff because the sheer amount that I've spent on Korean skincare, like I'm contributing to South Korea's economy, and I look amazing.
Yeah.
Yeah, there you go.
I will say, I did my first trip to Costco last night.
Oh,
yeah, and they have all the Korean skincare.
They do, girl. And
I don't know what happened there. They got it all. They got everyone.
I am locked in, baby.
Yeah. So
you should get some, Nikki. I have some recommendations for you.
Oh, thank you. I'll take it. Yeah,
okay.
I need it. Whatever recommendations is going to fix whatever that PDT AI screen
thumbnail
grab that
hate crime was. Yeah,
that hate crime that they put on me. Whatever's going to fix that guy. Like there were like sunspots on that picture. I was like, this isn't me.
OpenAI is thinking about exploring some legal options against Apple over a strained Siri ChatGPT partnership. OpenAI has expected more ChatGPT subscriptions with a deeper Apple Siri integration, but it really hasn't come to fruition. Apple shares dropped around 1.2% on the news. The two companies came to a deal in 2024. I am what I consider myself a super Apple fan, and even I didn't know there was a ChatGPT Apple integration.
I didn't know that either.
Right,
I mean,
so-
I know you could download the app, but is there something like native in the?
I don't know. I think it was more remarkable because Apple was just trying to be AI agnostic, and they were just like, hey, you could basically drop in whatever AI you want into Apple, and we will work with it. So whatever. But Apple had a record close, and then it fell promptly on that news. So I don't know where Apple is this morning.
It's down about $4 to 94 and change, almost 95. You are right. After making a high of around 300, 294 and a half. It closed 298 and change.
Okay.
Yeah, it's been super strong.
Super strong. Good IV rank 43. Everything is down around 1% this morning after this historic run on the market. Now, Korea the technology kind of throwing a little monkey wrench in there. We'll see how the rest of the market behaves today. We'll talk more.
Governor Newsom of California is proposing a digital software tax targeting SaaS companies for $2 billion annually. He's proposing a 7.25% sales tax. It would bring in year one revenue of $1 billion, longer term revenue of $2 billion. It's an extension of existing in-store software tax to online downloads. Governor Newsom says it isn't fair that physical software is taxed, but downloads aren't. What are your thoughts?
I'm starting to think anytime they say it isn't fair about anything, it's like when somebody says, I'm not going to lie, they're lying. It's probably fair. They're just doing something else. I don't know. For me, I don't know. Maybe they should learn how to buy a Porsche for their 16-year-old and not spend their money frivolously.
I'm talking about the software companies, not like the people. Okay. IGV, Nikki, do you ever trade IGV?
I do. I've traded IGV a handful of times. We were on the long side, and we are long Microsoft, and we've got some long delta in like ServiceNow and Snowflake. So we've been nibbling in a couple of the software stocks. They look like death, most of them.
They do.
IGV has had a decent bounce back from 80-ish was kind of the lower end of where it traded to 90 here. I mean, it was at 120 before the AI apocalypse that they kind of faced. But I don't feel Microsoft does not give me good feelings, and so the rest of the space certainly doesn't give me good feelings.
Yeah, but this is kind of how we always talk about, like when we always look for these pigs, so like you just mentioned ServiceNow. I'll stay in this sector for a minute, then I'll get to other sectors. Those are the ones that usually catch a bid when the market itself and some of the high flyers get kind of beat up. So when you go into something that's a pig, like you're saying, hey, the sector's, going great here. This stock hasn't done anything. You're really getting synthetically short some of those other stocks. Yeah. Like ServiceNow is actually up today. Microsoft is actually, up today. $1 or
some
two.
buckers.
Yeah, it's small.
Small. Another pig like McDonald's, I know, different sector. It's up today. They usually come for the pigs, a place to hide, when the rest of the market is, getting in a little bit of, wait and see mode.
And you say that you're synthetically short the semiconductors, not in the fact that you are short them, the fact that your dollar is being wasted holding ServiceNow.
That's right.
You physically can't take that dollar and also buy SMH.
That's
so
right.
Therefore you are short SMH, long ServiceNow.
I probably shouldn't have. Yes, you are correct.
If you are long ServiceNow, you're also short, silver, which is up 25%, right? Because your dollar isn't there.
Sure.
Hey, keeping it moving, AST SpaceMobile stock got crushed after the Q1 earnings missed. Revenue fell 60% short of Wall Street estimates. Girl, what are you doing? ASTS, Nikki.
Yeah, this is in the space, the next frontier, data centers, aliens. Who knows what's up there?
Sure.
Yeah.
Rocket Labs has just gone absolutely nuts. It's gone from 80 to 130 on its earnings. I tried to play this as a sympathy play. It did not go that much. It did bounce like $8 or $9 yesterday, which was a nice move. But these are I think you put them in the Momo basket. High volatility. They are movers. It's a trade for me. I'm not trying to marry these. I don't know if I'm ready for space, data center, or aliens.
In other news, President Trump has wrapped up his trip to China, and China is all about the 3 B's: beef, beans, and Boeing. China orders 200 Boeing jets, maybe. Trump announced the deal, but the number falls short of the 500 expected. Boeing stock fell 5% on the supposed great news. It's been 10 years since China's last major jet order.
Yeah, Boeing took a little bit on the chin yesterday. It's down about $2 this morning. I mean, after trading over 250 or something yesterday, it closed at under 230. It's 227 and change right now. Good IV rank of around 58 in there. Markets are okay, not great in Boeing. I mean, sometimes you got to trade by appointment, so be careful in there.
Yeah, I legged out of the put spread right at the open.
Nice.
We had an iron condor, and the stock was up maybe $1 or $2. Mm-hmm. I had a put spread that was a real cheapy put spread, but by the middle of the day, when that kind of news hit the wire, stock was down $10 or $15. Close out of the call side of the iron condor, so kind of scoopy a couple dollars out of that.
Yep.
Nice. Look at you.
Yeah.
Look at you. I'm skipping a story here. Taco Bell is finally unleashing a Cantina chicken Mexican pizza. The mashup launches May 21st, and it comes with a new salsa. Here are the numbers. It's going to cost you $6.49. 2 new salsas are launched. Reward members get access May 19th. Full disclosure, I've never had a Taco Bell Mexican pizza because I don't eat beef and I didn't see the point without meat. But now I love their Cantina chicken. I'm going to have my first Mexican pizza today, maybe.
Wait, you don't?
Well, the 21st, when I can get it. The 19th then.
So wait, you don't eat beef, but you eat the chicken?
I eat chicken, yeah.
Oh.
Yeah.
So what kind of? So it's not what do you call that?
I just call it just being me, being fabulous.
Oh, I love it. Okay, I didn't know if there was.
No, yeah, it's not like pescatarian because
other people would call it difficult. I mean, but
yeah,
they could call it whatever.
Why am I difficult?
I'm just teasing. I'm making a joke.
Why am I difficult?
They should leave the pizzas to the Italians. That's my take.
Yeah. But I'm excited about this.
With the burrito. We're not going to make a pizza burrito, although.
You and Tom had a business idea to make.
There was another
spaghetti burritos.
Not Italian.
Okay.
Not Italian.
Spagotis.
Yeah, spagotis.
No.
Yum Brands. Not sure if it's doing anything there.
I mean, it hasn't even traded any stock this morning. Hard to tell what it's doing.
Yeah, it's a tough one. It's a tough one to trade, but yep. I will say I'm a breakfast defector. I'm here here for the gimmicks. I like a good gimmick, fast food gimmicks.
In a weird part of okay, I guess this is a thing on the timeline. UFC founder Dana White is urging President Trump to reverse gambling tax law that makes it irrational to bet in the U.S., and it moved the odds on prediction markets. I guess in the big, beautiful bill, the gambling loss deduction is capped at 90%, but the odds of a repeal before 2027 surged from 19% to 30% after Dana White, who's later going to host a UFC fight on the lawn of the White House, offered to talk to Trump about repealing it. He said you could end up owing taxes even when you lose money. Again, I don't gamble at all. I've never had to file about the implications of my gambling, so I don't know.
Yeah, it's an absolutely silly thing. It's basically if you make, let's say you make $100,000 in betting, you can only deduct losses from other bets that you lose up to 90%. So if you lose $100,000 and then you win a bet and make $100,000, you net out a $10,000 loss because you can only deduct 90% of your losses. So
maybe be better. I don't know.
it's just, you would, if you don't make or lose anything, you could actually end up losing.
That sucks.
Just by paying taxes on it.
Sure,
So,
I got you.
It's kind of I think it's silly. I mean, the gambling space and gambling in general on literally everything has gotten outrageous. I mean, I think people have to, watch themselves in general. You can gamble on everything now.
And then finally today in the NFL, group led by Silver Lake's Egon Durbin is going to buy 25% of the Las Vegas Raiders at a $9.9 billion valuation. Well, now I got to root for the Raiders because they got my boy Fernando Mendoza.
I mean, what the hell? Why wouldn't they just round that up to 10 to make it sexier?
I don't know.
9.9, that's like, you put 10 and everybody's like, oh man, 10 billion.
So the Durbin Group now owns 40% of the Raiders. So Mark Davis will retain controlling interest, but the deal needs approval by the NFL May 19th. Tom Brady also holds a 10% stake that he acquired in 2024 at a $3.5 billion valuation. So the Raiders' value is up 6x since 2015.
Yes, and Nikki, you're not thinking about this right. It's just like when you're selling a house. If you put it at 10 billion, those people that can only spend 9.5 or 9.9 billion will never see the listing.
Of course.
9.9 billion, they get to see the listing.
Yes.
That's why they do it.
Of course.
Today, because it is a fantastic Friday, I have for you, I like to call Trader Taste Test. I searched the internet for food for fat traders, and you guys almost got this because you kind of were like, oh, we like a mashup. Like, is this a burrito? Is this spaghetti? Is it a spaghetti? But a new taste sensation. I believe this comes out of Southern California, but it's pizza dough sandwiches. Look at this, paisans.
Okay.
We'll see if you guys will get into this. It looks pretty good. I mean, it seems like I'd want to take a nap afterwards, but I think she's working on getting the video up. Maybe.
All right. I might tell you when these sources say, don't worry about the Taco Bell thing, Vanetta. It's not real meat.
They all come on this amazing Neapolitan style dough. Such a great spot that needs to be on your list. We're in LA trying the first ever pizza dough sandwich restaurant. So this place serves only one thing on their menu, a pizza dough sandwich that uses a 48-hour fermentation process. I tried the pastrami and provolone, and this is one of the juiciest sandwiches I've ever seen. The bread is soft and chewy with crispy edges, and it pairs so well with that tender and fatty pastrami. The chicken Caesar sando comes with an addicting, creamy and tangy dressing.
Oh, that has my name.
And this made me realize that Caesar salads belong on pizza dough, not in a wrap. This one was my favorite thing on the menu. There's over 10 different sandos you can choose from, but the bottom line is they all come on this amazing Neapolitan style dough.
All right, thank you.
Such a great
I gotta say, as the oldest Italian representative here on the show, I'm going to give these people permission to use our pizza. Whatever they like. I will not allow Taco Bell.
I gotta say, I was kind of scared because I thought they were gonna put the pizza components in there as well, and then you're doing too much. Yeah. I like the idea.
Well,
of the
at that
bread.
point, it's just a calzone.
Yeah, it's like a calzone with a chicken Caesar wrap in there. Like, that's just too much. We're getting too crazy here, but I like it.
I liked it a lot. I thought it looked really good. Good job out of you, Vanetta. We're going to take a quick 90-second break. We're going to talk a little bit about yesterday and what it means for today in today's market. Button up your chin straps, ladies and gentlemen. We got our first down tick. We'll be back in 90 seconds. Tasty Live is the top in.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Son, and you know what that means. Time for a little bit more tasty life. You know, your grandfather, you were talking about the taxes and the gambling.
He didn't pay any taxes.
He never worried about those taxes with skewing the market or anything like that. He was absolutely fine.
I know. I always see Donnie moved on to greener pastures. He's alive. I didn't mean to say that like he died. He used to be like my tax guy. I used to sit there and talk with him and be like, man, taxes stink, bro. Like, you think they would just you think they would find you if you just didn't pay them, or you took a little off the top or something? So we always kind of had that rapport together of just really hating taxes and trying to figure out if a small fish like me, come on, it's nothing. They really going to come after me if I take a couple extra dollars? No.
Well, it is what it is. Hey, let's take a look a little bit about yesterday, but really the big news is all about today. First red day. I want to talk about yesterday, of course, and then I really want to get into, is the top in here, son?
Oh, don't put the kibosh on it, okay? We need to scare the children.
And I want to know what your game plan for the morning is. I know it's subject to change when we finally open. We can open here with the E-mini S&Ps down 85 or 90 handles. We can open down 120, or we can open down 60 or 40. It's everything's subject to change. But what are you thinking about right now?
I'm sitting on my hands at the moment. I'm going to be able to manage a couple positions in the morning, which I think is going to be prudent, and with the move today is going to be very, very fruitful and advantageous to do something with. I wish I'd waited on some of the stuff that I did yesterday to do today. That would have been even better, but I think that'll be the first focus. I think it'll be interesting. You have volatility up about 3%, which is a pretty decent move here. Oil is near 100. It's up, about $3 on the session, and was strong all day yesterday and has been strong.
It was. The volatility was bid all day long too. It never really kind of sold off. Didn't really rally, but didn't sell off much either. I don't think it was an indication of what was going on. I think it was more an indication of the news that was pending than the market itself. But what now? That's the big case. So I think the first thing you came up with is you're going to look at existing positions before you really do anything offensively in the market itself. And you're going to look at positions that were going wrong that you might be able to mitigate some of the delta in there, or maybe even, Lord have mercy, take some profits on. Then I think you have to think about, Is the U.S. portfolio over? Like, is it done? Have the highs in there? Have we gotten to a ceiling here? The Intels of the world, is that upside risk of exponential moves gone and over? And make.
I mean, let's pump the brakes here. Intel's down $5.
Yes.
Okay.
Back to Wednesday's numbers. It's the first thing I've said. And
I had some people kind of, chatting in the chat here, like, talk about markets. Like, why are they down? Like, what's going on? It's like, come on, guys. We've gone up 50 points every day for the last, 45 days. We're up 35%. From the lows here in a straight line. You put this in a weekly or a monthly chart, it's a straight line up. It's a 99th percentile upside move. To be down 90 handles today is a paper cut. I mean, this is you could chalk this up to people taking profits on stuff that has doubled in 48 hours. This month. I had
a buddy of mine write to me, I forget who it was, but if we were down 10% tomorrow, meaning today, we would be back to April 9th. We wouldn't even be back to the lows or anything like that.
And volatility's off the charts. We've watched, and by volatility off the charts, I continue to think actual implied volatility, the volatility number that we see, the VIX number, is outrageous. It's the silliest number. I think the VIX is.
You said yesterday that, forget about like today. Now it's up, 3%, 4%. Maybe it'll be up 5 or 6% today. Who knows? I don't think so, but we'll see. You said yesterday that it was cheap, so it was a good call on your part.
Yes. I mean, I've thought it's been cheap for a little while here, and it really hasn't gone anywhere, which has been helpful. But when you look underneath the surface, the realized volatility in the basket of names, I think, 80% of retail traders are trading, your Apples, your Googles, your semiconductors, your, even like a Microsoft or Meta. These stocks, the Microsoft and Meta, not so much. These stocks are moving. Cisco was up 3 times the expected move on earnings. That is volatility. That is huge volatility. And, the VIX itself is not really anywhere to be like scared about. Which kind of spooks me a little bit. So I think you got to get a scare the children moment. We can't just continue to go up 1% every day. I mean, like when you talk about bubbles, or is this a bubble? Are we in a bubble? Is this the early part of a bubble? You go up 1% every day for 40, 50 days without a downtick. That's you gotta kind of think that's problematic. I mean, you go up another, you have another set, month like this, and we're at 8,500. Then you start to kind of get worried.
Mm-hmm. Yep. Totally agree.
Let's get to our little recap here, and if people have if you got questions, throw them in the chat. We'll use a couple extra of them to fill for because Jamal is still out in Miami. Partying it up. Yesterday, another strong day in the market. Today, not so much. I think obviously a lot of the commentary is on bonds. Bonds down over a full point here at 111. New lows that we've seen. It's been a huge move in the overnight session. I think that's kind of weighing on the markets here. I think we're above 5% now on 10-year.
I think you're right. You look at bonds. They're 111, as low as 111. They're 111.01 right now. That's about as low as they've been. And the bond futures that we're looking at are going to roll next week. So we're really 110, and not really. The futures will be trading in a week are 110.5, just about as low as they've been. Those are the U futures. Right now we're trading the M futures.
Market as a whole, very, very strong yesterday, as has been the case for basically every day, 50 to 100 basis points every day. It's been free money for a month. Everybody's a genius. There's no need to trade. You just buy high, sell higher.
That's correct. You're a genius. I'm a genius. We're all geniuses. You out there are geniuses.
Yeah.
Makes it good. Yesterday was just kind of, I mean, we finally rallied up early in the day where we were up like 60-ish handles, and for the first time getting a little bit like kind of like bearish-ish in the market. Like this is enough, but it was a death stare. I mean, we stayed within 10 handles of the high for most of the afternoon. I mean, it was very difficult to stay and lean short.
It's been the same MO pretty much every day. It's you get that one little like 20 or 30 handle dip an hour to 2 hours after the open. Yeah. And then from there you V bottom, you get to wherever your round number spot is, and you just chop there the whole day.
Wow. Yep.
When we look at the Mag 7s yesterday, Nvidia has just been on an absolute tear. It's been kind of holding up the SMH when we talked about this a little bit earlier. Some of the other stocks in that basket have been kind of changing leadership day to day, and Nvidia has been the one that's kind of just been blasting off to the upside. The rest of the basket a little bit choppy there. Nvidia just a huge move down a little bit today. Microsoft and Meta have both kind of seem to have bottomed out at around 600 and 400. Who knows if that holds? Apple, Google, small little pullback. Tesla as well. Amazon's been pretty choppy. It's been a mixed bag in the Mag 7 land.
Mm-hmm. Yeah, it's been a mixed bag, but it's been the usual suspects, right?
Yeah. I mean, it's chip AI related. Everything else is kind of just like meh.
Yeah,
Microsoft and Meta are not in that space.
Is your generation allowed to use meh? Because I know.
Hey, you know what? I'm Unk. Unk can do whatever he wants. All right, Unk floats in the middle.
There you go. Perfect. All right.
When we look at the sector breakdown here, so it's tech and semiconductors. Those have been the leader to the upside. You had energy catching a little bit of a bid yesterday. Oil has been super strong. Financials, tiny bit of an upside move there. On the downside, you had metals and mining. Gold has been looking gross. It looks even more gross this morning. Silver down to $8, a huge move there. That I'm sure that gold silver ratio has widened out even more today.
Oh, it has. I actually looked at that this morning before the open.
Oh man, you had me close it. We missed out on 6K.
It's almost 59. Yes, we were doing it in a 54 handle, about $1 off of its lows. Listen, you participated, you played, you led them to the promised land. That's your job.
That's right.
That's all you're supposed to do. And you did it. It was a good one. Now I think it's back to no man's land.
You're in no man's land. This is where it's been for the last month or so.
Yeah, here a little higher. Yep.
Yeah. When we look at the biggest movers here to the upside, you have a bunch of the names, tech names. I mean, you got Cisco in there after earnings, huge move to the upside. You had Ford, which has just been randomly skyrocketing. The stock is up 20% in 3 or 4 sessions here. AVGO was super strong. Robinhood was catching a little bit of a bounce. But you can see it's not as sexy as it has been.
Nope.
On the upside here. This list was pretty much all tech earlier this week. It's gotten kind of mixed.
Yep. It's been as you said, look, these are the top 10 gainers. They're easily. AppLovin was one that was kind of selling off. I mean, they came for everything yesterday, and they have for some time now. I mean, look at Hood up $5. Another one that was kind of going nowhere for some time with all the crypto worry that we had. So they really were looking for anything, buying just about anything. I'm really curious to see how things are going to behave today. I think you're finally going to get a little bit of volatility. It'll be interesting to watch our 0 days today. I know we've got a good segment on it at 9 o'clock. We'll be seeing how we lean there if this market and volatility, which continues to keep upticking here, 21.30, about 10 cents off of its highs. We'll see if that continues to rally. If that continues if that rallies, goes higher intraday, maybe we'll do a little two-sided in the 0 day. If it kind of catches a little bit of resistance here, maybe we'll just do the put side. It's going to be interesting. Maybe we'll do like a broken wing put. I don't know. Today's going to be a great day.
Yeah, today's going to be an interesting one.
Yep, and it's expiration. You forgot about that too.
Yeah, that's why I'm not like super. expiration days, you get a little bit of extra volatility. You get a little bit of whippiness to it. I want to see what happens with volatility. I think keying on volatility through the rest of the day. You have the weekend coming up. The Iran situation is certainly kind of escalating again. I think we're getting to a point where, you got to shit or get off the pot type thing. And so, it'll be interesting to see that into the weekend, what oil and volatility are kind of saying relative to the market. I don't take anything out of a 1% move in the market after a 35% face ripper to the upside. It doesn't scare me. It'll be interesting to see what oil and volatility do. That'll kind of dictate what my thinking is to the early part of next week.
Yep.
To the downside here, couple of names. Qualcomm has had an absolutely incredible move. SanDisk, Intel. I mean, this has been kind of the momentum space. You have some materials in there like ALB. Some of the biotechs, Biogen is in there. Definitely a mixed bag in both the up and biggest up moves and biggest down moves. And then just to give you a little heat map here, it's been another mostly red day here. Amazon, Tesla kind of a little bit weaker here. Micron, Intel as well. Financials have been real choppy, but it's been tech driven. So, you see Nvidia in a dark green, the market's going up.
You certainly can, and it certainly does look like the market's going up. But you know what? Let's talk about what's going on today. Right after we take this break, we'll get to confirm and send and a lot more market talk right after this. You got the opening bell in about 20 minutes or so. The moment you've all been waiting for. Button up your chin straps. We'll be back in 90 seconds. It's Tasty Live.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
one.
Nikki, we are back, son. And you know what that means. Time for a little bit more Tasty Live with Confirm and Send on this May 15th expiration Friday. And the first downtick of May, maybe the first downtick of any significance in since April?
Forever. It seems like forever.
Well, we'll see where we end for the day, but even the S&P is down 87. You can see that they got down to 74.29 and change. They're about 5 to 10 handles higher than that, down to 1 and let's just round up and say 1.25%. NASDAQ is your leader to the clubhouse to the downside, down 500 and change, bringing us back to Tuesdays, Wednesdays numbers of this week. Russell.
Yeah.
Russell down 45. You can see Russell doing the same thing at the lower end of its market, meaning that over the last week, it's been a little bit weaker than everything else. We've talked about that, the Russell and the Dow being weaker than the rest of the market, but the Dow's actually mid-range for the week. Volatility finally up almost 4%, 3.75%, about as high as it's been. So this is a little bit interesting to me. You got volatility trading 21.30, 10 cents off of its highs. And if you go back to Tuesdays or Wednesdays, or even if you go back to Monday's numbers, you had a high of 21.05. We're higher in volatility, to your point, Nick.
Yeah.
We're higher in volatility today than we were the last time we were at these same numbers on the way up. Now, as you're going up, volatility contracts, so it's not that big of a story. But what I'm trying to say here is yesterday when you were talking about volatility or realized volatility being a little bit, seemed like it seemed to be cheap. What does that mean? Does that mean you go out and buy volatility? Well, you could if you wanted to in /VX or something else like that. But really what that was for me to do means less aggressive positions that sell premium.
Yeah.
Now it seems like you got, almost a week's worth of premium that's going to be built into this market here today alone going into the weekend. And I don't expect the weekend volatility to come out unless you get a rally of biblical proportions today. Now, if we get a rally or we hang out here down 90 to down 50 on the E-mini S&Ps, I don't think you're going to see a lot of volatility contraction. What about yourself?
That's an interesting question because I think if you get to down 50 or down 40, something like that, I think volatility is going to be lower.
Right.
I think you got to kind of stay down here for volatility to stay high. I think I'm on the other side of your coin. I think if they get bought up into the weekend and volatility contracts and oil comes down and is up, $1 at the end of the session, I think it tells you that, it's a big old nothing burger into the weekend and it's probably, off to the races again.
Well, I think buy the rumor, sell the news. This is all about Korea selling off 6%, everything like that, their technology market, stuff like that. You had everybody going over to China. You had all the meeting. That's the buy the rumor. This could be selling the news here. I think you're going to see a little bit of continued weakness here. I don't think we're going to really go anywhere, but I think you're going to see some continued weakness.
I would like that. I think you need a nice, big, beautiful 200-point, pain. Mm-hmm. Like where everybody starts to doubt everything. And I mean, I think it's worse for the market to just keep going higher every single day. I think you need a little bit of pain. You got to get the speculation back in. You got to get the fear back in. Right now, it's all just upside speculation. It's all just FOMO. So I think you got to scare the children, whack some of these stocks.
I agree with you. I think we're going to have the type of price action that we had in the middle of April here, from like April 15th to April 30th, where we had a little bit of two-sided up and back forth action, see what volatility does to see if we get another leg up. I actually think, like a 200 handle move.
Perfect.
To the downside
would be perfect.
Right. So for those people who sold, let's say, put spreads yesterday. So you were taking what we were talking about. You wanted to lean long. Let's not cherry pick it here and say you got short, but you wanted to lean long. And instead of selling naked puts, you were selling put spreads. What would I do today with a position like that? I don't think I'd be thinking about, because remember, your assumption is that you're leaning a little bit long here. Like you did it with a spread. Maybe it's $10 or $20 wide instead of a naked put in something like a SPY or anywhere else. I would, if I was that individual, I'd be looking to lift that long leg today. Like if that was my assumption, I wouldn't be looking to put on another contract. I might look to put on another spread. Like I wouldn't mind doing the same spread at the same strikes. It would be a little bit more delta, a higher price, but I wouldn't be looking to add more units. Does that make sense?
Agreed.
Okay.
I totally agree. And I think, if you've been leaning short today, this isn't like you're not going to get your money back today.
No.
You're going to get an opportunity to manage some trades.
Some money back because the delta is going to be there, but the volatility is going to expand.
Some of I think this goes to kind of what we've been talking about with the Intel and AMD positions, which is what I'm going to look to do today. Today might be a good opportunity for you to put on a call diagonal spread or a call calendar spread. If you've been net short, I don't go and sell more short calls. Like that is not going to hedge you anything to the downside, even if you're bearish. Like I would go and do a diagonal spread where
front month vol relative to back month is going to be bid. So you're going to get some mulligan to it if we continue lower, but it'll help you if on Monday we bounce and reverse this whole move. On Monday, if we have an 80-point up move, you'll be short still, but you'll have a little bit of money that you can take off the table from these sort of long hedges, so to speak. And that's what I'm going to be looking to do. And let's do one more. Bonds here. Bonds trading 111. That's as low as you can see, as low as they've been. We're still on the M futures here. These are the futures that we're trading. They expire in about 7 days. They roll in a couple of days. The U future, which will be trading the middle of next week, is trading at 110.5, about a half a point there. Lucky for me, the day after I sold the puts in the back month future. I got 9 ticks out of them and closed them. You saw that come out on the follow page. Might be looking at an uptick in volatility here in bonds. Might be looking to do something in bonds today too. So maybe something for option trades today. Let me go through the rest of the market real quick here, and then we'll get to confirm and send. Bitcoin hanging in there just above 80,000. Oil, you mentioned, just under 100. It was 100, almost 101. Let's round up. Relatively, I know this is a 2.5% move here, but oil's been hanging in there throughout this rally in the market. It's actually been hanging out in the higher end of its range for quite some time. Here's gold down $2.75, but look at silver down almost 10%, 9 and change. That gold silver ratio spread that we put on, went up around $4,000 or $5,000 per contract after we put on. So good job there. Nat gas finally lifting its head up a little bit, flirting with 3. Let's get to confirm and send. We'll get to the opening bell.
Cool.
Maybe we'll take calls with Q in here if we have a busy market today.
Sure.
Yeah. Confirm and send. There we go. Friday, May 15th. Go.
While I feel comfortable in trading options across a variety of strategies and knowing what delta means in the option chain, I'm not super clear on what it means when you guys mention long delta, short delta, static delta. All right, so you kind of not clear on delta, or when you describe making a delta adjustment when managing a position. Can you clarify?
Sure. Delta is just saying what the equivalent stock, long or short stock in that position that you have. So if I'm saying I'm putting on a long delta position, I'm putting on a synthetic long stock position, I want the stock to go higher. The opposite for short delta. And static delta, well, static delta is stock because it's a 50-50 shot. It goes up or down. There's no gray area. There's no premium involved in it. There's no volatility expansion or contraction in it. It's just price. Very much like futures. Same exact thing there. So those would be static delta. Just about every trade that you watch us put on here, or maybe 80 to 85% of all the trades that we put on here, are not static delta. They're more dynamic delta, which is option related, which has the component of, premium involved in it, volatility involved in it, time decay involved in it. So more dynamic delta than static delta.
Yes. Well said. I have nothing to add.
Next one, please. What is the upside ceiling on a covered call if I'm waiting to roll if the call goes in the money?
So I think one of the things you can do, people get freaked out with like in the money options. When you look at an in the money option, The value of that option, the extrinsic value is your break even to the upside. So if you have an in the money option, let's say it's in the money $1, but it's trading at $5, you're no worse off at expiration if the stock is $4 higher or less. So you have $4 of value that's going to decay. So people look at an option and say it's in the money, like this is a bad thing. All else equal, if the stock stays there, you're actually going to make money every day that it stays less than $4 higher. And so you're okay. In terms of rolling, when you roll an option, when you're rolling further out in time, it allows you the flexibility, if you want to still be long the stock, to roll up and out on that strike. So you can roll from the 100 strike to the 105 strike, do that for a small credit or a small debit, and that gives you $5 of extra room to the upside, potential value. The caveat is it takes off, $5 of extra hedge to the downside. There's a lot of flexibility there.
A lot of flexibility, 100%. This is a high-class problem. You want this to happen on every covered call you have.
Yes.
Next one, please. I mean, you might not maximize your return if it happens the next day after you put it on, but you're up money, and then you have a decision whether you want to hold it or not.
Yes. With more and more stocks offering shorter expirations and the liquidity in those cycles being good, do you still think trading in monthly expirations is the best way to go, or should we switch to shorter expirations because we can generate more occurrences?
I mean, with the way that we trade, if you are going with a longer term view, buying a back month, selling a front month, that's the way that you should do it. Maybe you should get short. It takes a lot more work to do. You actually get paid a little bit more for that work. So it's a zero. More work in equals, more work on the beginning equals more work at the end, which equals more pay, hypothetically speaking, if you get the right direction. So sure, I have no problem with that. You got to remember, a lot of these stocks that offer these expiration cycles do not have the liquidity in them. Now, SPY, of course it does. Qs, of course it does. But some of the other ones do not. So watch the markets in there.
Yeah, I mean, you can treat these as zero DT positions, and when the PDT restriction is lifted, I think this will be helpful for people that want to just trade on a day-to-day basis. You can trade Tesla, Apple, Nvidia. Yes, go for it.
Yep, totally agree. Next one, please. I've noticed over the past couple of days, volatility is either staying flat or even moving higher, to your point, Nick, despite prices moving higher, meaning the stock market. I thought volatility and prices were inversely related.
Yeah, so volatility is a reflection of both up and downside speculation. So it's it looks at a distribution. And when you have just unbelievable call buying day to day, and it's very much focused in a lot of the FOMO names, your semiconductors, tech stocks, stuff like that goes up, 5% a day. There's a significant amount of call buying. It's going to keep a floor on volatility. Like, volatility is not one-to-one with up and down. It does not mean market up, vol down. That is not always the case, and that's because it's a reflection of speculation. So, there are when you have markets that are flying around, you're going to see volatility stay bid like this.
Very good. Let's take a quick 90-second break and come back. We'll talk about this opening bell in just 90 seconds. It's Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade. pro-level tools, intuitive design, total control.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Back. My producer, very quiet there. Let's take a look at what's going on here. You just caught your first bid in even the S&Ps.
I just closed out of some of my natty gas position. I've been long the micro natty gas contract, a handful of them. It's very small, a couple $100 in buying power. They move, it was maybe $100 that I took out of that, but I'm still long some natty gas. So that was my first scoopy of the day.
Very nice, very nice. Good job out of you. Even the S&P is down 76 or so. That's about as low as that's about as high as they've been since we've been on the show. Nasdaq 440 down. You can see that we were 100 handles lower. The worst thing I can see here, at least for my trading, is a V bottom here today. The low being in already. I would like to see us back down near our lows again.
The dip buyers are coming in strong right now.
Yeah. Volatility 20.
I don't blame them either.
I do not want to see that. I do not want to see for me. It's gonna put me. I'm in a good mood. I'm in a good mood. I don't want to be in a bad mood. Don't put me in a bad mood.
Yeah.
Even the S&P is down 69.
Going into the open here. Oil moving a little bit.
How do you like your gold long now? Since you talked about my gold silver ratio spread, which worked out phenomenally for you. You picked up a couple of $1,000 over the last couple of days, but you want to be long gold. I told you on as a spread is off the spread. What do you say now?
GFY. I say you got hands. Do you, boo? Yeah. Put your money where your mouth is.
Silver down 9%, huge move there. And my boy Frankie's talking about bonds like he's been investing in them and he's getting screwed over. Bonds haven't been in the 111 handle for years, everyone. So that could be the canary in the coal mine, right? As bonds go lower, rates go higher. That usually dries up money. We've been talking about this for the last couple of weeks or so, that money's flowing into the market with every new IPO, new AI, everything. That could be the one canary in the coal mine. It doesn't happen on one day. It takes a little bit of time.
Yeah.
I personally would like to see a little bit more weakness in the market. I think it'll be a little bit better for the market. If we do this little V bottom here today, this could be the hook that everybody's looking for.
Yeah, I mean, it's a huge move in bonds, and all signs point to the people in charge are not looking to raise rates or have rates higher. So
right.
It's going to be an interesting. I'm sure there's going to be quite a lot of commentary today about that move.
Yep. I think so. And as we open here, even the S&Ps are down 73. NASDAQ is down 440 and change. Oil, 99 and a half. Volatility up 60 cents, 21.12 off of its highs of 21.40. Russell down 43 and the Dow down 300 and change. What else we've got here? Bitcoin hanging in there just above the 80,000 level. Ethereum at 22.45, down 60. That's a little bit weaker than Bitcoin on a percentage basis. Gold down 133. I think with everything that's going on in the market being lower, that gold being lower almost by 3% is a surprise. It's a surprise to me.
Yeah, I mean, you got the move in bonds. Higher rates generally not good for gold, at least in the short term, because it's just when you talk about cash, non-yielding cash being gold, yielding cash being bonds. But it would, if there was a problem, you would think gold would be higher regardless.
Yeah, if gold is higher, they'll say it's a flight to safety. I mean,
Yes.
it's the BS around. I just think a 3% move in gold is much larger than anybody would have thought, even the bears. A 10% move in silver, which has been going higher than gold at an exponential basis, I think is less of a surprise to me. I mean, even though it's a much bigger move on its magnitude of move, almost 3 times as much as gold. Let's see what's moving across the market here. Let's go to the downside because that's where we are so far today, as even the S&Ps are down 70 and change, and then we'll get to what you just did in Intel in a moment. SanDisk down 35, MU down 26, BE down 22. These are your high flyers. SMH down 18, Crowd down 17, Goldman Sachs down 16. Big numbers here across the board. Tesla down 12. That AAOI, hard to trade, impossible to trade on options. Always around in the list here for stock moves, and then you've got your gold, your Qs, and your coin finally going lower. Remember, it was only down a couple of bucks when Vanetta talked about it just a moment ago, down almost 10. Upside, much more muted. Adobe, surprisingly enough, up $6. Lilly up around 2.5. Vanetta talked about coming for the pigs. Microsoft up $4 and change. Netflix up 2 and change. ExxonMobil, there you go, my horse, up $1.60 and change.
Yeah, I'm putting on some diagonal spreads, but I'm selling a couple extra units in the front.
Even the S&P is down 84. Yeah, I agree.
In AMD and Intel, I hope these trades go to zero. I hope I make zero money on these trades because my delta is pretty decent to the downside here. So there's no price on the bottom that scares me.
Even the S&P is down 89 and volatility up 50, 60 cents here. Is this so do you believe it's day one?
Day one in what regard? Because that was used as like we're crashing, 20%, 10%. I think this is day one of a nice, healthy, beautiful pullback into the weekend. If volatility stays bid, the volatility is going to tell you whether this is real or not, in my opinion.
Okay.
And it's not, I mean, like it's higher, but it's not, this is not scary, Vol.
Let's look at what you just said a moment ago about doing a diagonal spread today in a position. Let's just go from the bullish standpoint here for a quick second, son. Would you go to June, July?
I would do long July and then sell June.
You typically like to go around the 40-ish delta here, so I'm going to change this to delta for everyone.
Yes. 40-ish delta on the long option in July, sell a 20-ish delta in June.
So you're looking around 750, 755. Let's just go to 755 for argument's sakes, right?
Yeah.
And then what would you do in June, right? Because you're going to find something a little bit weird here when we get to it. So let's go to it.
In SPY?
Yeah, so let's just say
you're looking at July, you're buying
755.
755. I would go in June and I would sell the 770, 765, like something like that.
That's good. I'm glad you said 765. Do 765. It's trading for around $9. It's relatively expensive. Would you agree or not?
I mean, it's expensive because you have 63 days on the long option. It's all relative to the time.
Yes, and you've got a little bit of a vol differential of just about 1 point here. So for that reason alone, I might be looking to go a little bit further, as you first said, which I think when you were looking at the numbers, that's where you were to the 70. That's going to give you your 21-ish deltas versus the 16-ish deltas, but not like a huge player. You might actually want to add, which you've done in the past, maybe like another call spread.
You could do that. Yeah.
Like a 770 even.
And if you go to, so if it's equal width, so you're looking at the 150 is your long option?
Long option was 755.
755. So if you went to the 85 strike on the upside, you'll use buying power equal to your debit. So selling that call spread won't do anything because it's a butterfly. Essentially.
Yeah, it's a butterfly. Right.
From a risk perspective.
Yep. So you would say sell another unit at 780.
Well, no, you could do this. You could do 2 units at the 770 and then buy the 85. And
okay,
that
I was going to buy the 80. Fine, 85.
You could do the 80. The 85 is where you are equal with your long spread. Synthetically, that your long is 15 points wide. Your short spread is 15 points wide. It'll be a debit that's equal to the debit will be your buying power. I know it's showing on our account it's no buying power because we have other positions on, but if you're looking at this sort of trade and you don't have anything on, or you're in a Reg T, a normal margin account, it'll just be the debit paid is your total risk on the trade.
Yeah, 100%. So whatever you're paying for it, around $8 or so, is your risk on that trade.
Yes, exactly. And that trade, if we go down another 100 handles, you probably lose $1 on that trade.
Yeah.
It doesn't go anywhere. You're not long. You're long delta, but you're not like it's dynamic delta to that question that we got on confirm and send. It's really dynamic delta because you're short so much short-term premium that it goes quick if you get that downside move. So you get, when I say you get that mulligan, that's your mulligan. Is like if you're totally wrong on this and we move another 100 points to the downside on Monday, that trade's not going anywhere. Like
it'll be much different than a naked put at a 10 or 15 delta. This has 10 or 15 delta to it. I'm just trying to show the difference between the two because delta is king here. This is a 10 or 15 delta position depending on what strike you're using there. This would be more the dynamic type of trade that I'd be looking to put on today.
Yes.
Please ask what would I be looking to do today? That's what I'd be looking to do today.
Yes, for sure.
Down 93, much better than before. What do you think about a little 0-day trade here, son? Volatility 2105.
What are you thinking? Well, do we do a Jade Lizard?
You certainly could. You could do
I know the research is stellar, given that we've gone just like straight up, basically.
Yeah.
What do you want to do? Like 20 by 10?
Sure.
Okay.
I agree.
Maybe like I'm looking at the 73.75, 73.55, and then maybe on the upside you do like the 74.45, 74.55.
Okay. I like it.
I like $6.
I like it.
Let's see. You have a little bit of extra risk on the downside.
I don't hate it.
I'm basically using the 25 delta for the short options and then just widening out the put spread a little bit.
Beautiful.
I'm trying 590 here. All right. We're in 590.
Beautiful. Even the S&P is down 93 here.
Yeah. Sorry. Go on.
No.
I'm just looking through the rest of my positions here.
Yes, okay. You should do that. That's what you're supposed to do. Even the S&P is down 92 as we sit here. Volatility up 52 cents. Really hasn't moved.
No, I don't like that.
I don't like that either.
It seems like yet another of the buy the dip days.
Yeah. Unfortunately, it does. Again, volatility actually contracting a little bit here. Let's see. Did you push your SPX trade through? I'll put that through for you.
I think I pushed it through for you.
Yep, I'll see whatever. I'm just going to put it to show everybody what you did here. That's a trade that you just did right now. The higher credit you receive, the better off you are. You can see as even the S&Ps have rallied about 10 handles off of their lows. This went from 590 to about 575. It's a small-ish delta trade, but it's 3 deltas in SPX. That's 10 times the size of SPY, which makes it a much more bullish trade than you would in an SPY.
Yeah. I think I'm going to take the money and run on this service now trade.
Mm-hmm. Mm-hmm. I don't hate that.
Did this one yesterday.
Yep. Yep.
All right.
Oh, there you go. Look at you.
So we took like 100 and something out of that.
Beautiful. Again, just like we talked about when we were doing the show earlier, the first thing he's looking to do really is trades that he has on. And you're looking to kind of go through those ones that were probably the ones that were hurting you to the upside, right?
Yeah, I mean they're coming for the pigs a little bit today.
They are coming for the pigs a little bit today. Yeah, you are correct. When you look at everything here, they are looking like they're coming for the pigs.
Yeah.
Let's take a look here at.
I mean, we needed this move. This is a very nice move.
This is a better move than we could have asked for coming into yesterday for sure. You know, you got McDonald's up 50 cents. I only mentioned it because I'm long in it. It's been a pig. I could use more. But Microsoft up almost $7. I've had long delta in there. I think everybody's been kind of buying the dip in Microsoft that they've been listening to us. You're finally getting a nice move in there now. Everything that you had on is probably positive. Nike is a pig. I need more in there. It's unchanged. Again, I'm just showing you, even the S&P is down 90. They're kind of coming for the pigs. Nvidia, which has been a high flyer, it's down $10 in Nvidia. Palantir's basically unchanged. It's been going nowhere. SMH is one that's been a high flyer in there. As actually through my short strike on the call side is now under my short strike on the call side, down $21 in there. SPY, of course, everybody's looking at that, down $9. If even the S&Ps are down, 90 handles, SPY is down about $9, just extrapolating out. And then all your oil related stocks have caught a bid here today. I got twisted in the wind a little bit in XOM, but I'm hanging in there, son. I'm hanging in there.
Good. You should.
Good. I'm trying.
You're doing good. You're doing good.
S&P is down 94. Volatility up 53 cents.
Yeah, you got a funky one today.
You do. Volatility 30 cents, 40 cents off of its highs.
Took some money out of Snowflake too. We did I think that was a what's your assumption trade or something like that.
Okay.
Just close that one out.
Very nice. Very nice.
Yeah. Let's see.
I like it. Even the S&P is down 93. Bonds 110.26. 110.28. I apologize. That's bad eyes on the boomer. Trading right on their lows. Do we need to see bonds catch a little bit of a rally before the market catches anything?
Probably.
Mm-hmm.
I'm waiting for Trump or somebody in that.
Oh man, I hate
to tweet something about rates. Rates are too high. We're going to cut rates. That sort of thing. I feel like that's coming shortly.
Please, baby Jesus, no. Here we go. Even the S&P is down 97 as they come spinning out of the turn. Here.
I'm up 10 cents on my CMG stock. Should I take that?
Probably not.
Seriously.
Not. Your spread that you did now that we've rallied or sold off a little bit is right back there to $6.590. Just letting you know. Look at the expected move here in SPX. 39 handles here for your 0-day options here. Usually this has been in the 20s. I think a little put spread to the downside here, son, might be in order.
Yeah, we
even a broken wing put spread. If you wanted to.
On the 0 DT?
Yeah.
What are you thinking?
I don't know. Let's take a look at it. Let's do it live. I have it up there for everybody. I typically like to go somewhere around the 25-ish delta. I'll use round numbers as 1380. So if we did like the 1380, 1365 or so, you'd be about $15 wide. And let's see if we really can go down. Let's see. We've got about 375. I mean, I don't know. This looks like let's see, 30. That's about $40. Yeah, you got only a small credit if you go. So I would do something like this. I do the 1380, 1370. I'm sorry.
Okay.
7380, 7370. And buy the 7335 for a 280 credit, something like that. Even the S&P is down 100. Volatility hasn't really moved yet. Now down 101. Bonds.
I know this move. The volatility. It's a little weird.
Volatility is a little weird, is right, but front month is certainly getting jacked.
Yeah. You know what else is paying me finally today?
What's that?
BE.
Oh, to the downside, right?
Down $25.
Yeah, BE has been a thorn if you try to do anything in there to the downside. BE down $25, 277, back to where it was on Tuesday, Wednesday.
Yeah.
Volatility up 56 cents.
What
do you think, son?
I'm trying to. The BE markets are not good, so
No, they're not good. It's not a great trading vehicle here.
Yeah. What do you think? You think we hold this?
I do.
That would be nice.
Yep. It would definitely be nice.
All right. Same thing, but I bought the wing this time. I didn't buy the wing on AMD. Did you put that SPX trade in?
I believe I did. I will check right now.
No, the one that you were just looking at.
Oh no, I did not put it in. I didn't do anything.
Yeah, do it.
You didn't say anything, so I didn't do anything.
Yeah, do it, dude. What do you?
I'm not.
Jesus, man, this is a team.
I'm sorry.
I can't. I mean, come on. I only got one pair of hands.
One pair. That would be two hands, though, right?
Yeah, I got two hands, but I can't do it all.
I'm sorry. I'll put it in there for you right now, son. Give me 1 second. I apologize. I apologize. It was trading closer to 235, 240. Let's see if we can get in there right now around that price. Let me see here. No, we'll have to go a little bit lower. Oh, there we go.
No, that was MNQ. I nibbled.
Let's see.
Tiny.
Even the S&P is down 91. I'm going to put it in at 220, and we'll see what happens here if we get a little bit of a sell-off here. Volatility
there we go.
Filled at 220.
Thank you.
On that spread. On a mid-price that was probably a little bit lower than that. So markets are moving around. Don't go in at your price, I guess is what I should be saying.
Yeah.
And you'll push those through for me. Here, the break even on that is right around the expected move of 73.60, which is 50 handles lower than where we are right now on that trade.
Yeah. Cool. You want to take a quick little break?
Sure. As even the S&Ps are down 90, volatility up 41 cents. NASDAQ down 460. Bonds just made a new low down to 110.23. They're 110.24. Put a little bit of pressure on the market. Oil 99.68. It probably is about the most stable of everything right now. Gold is down $3 and change. Silver down over $10. We'll be back in 90 seconds. We got more Tasty Live. We've got fast market. These markets are going to be different. We'll be back in 90 seconds to listen to Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means? Even the S&P is down 87, volatility only up 39 cents. Bonds of the culprit, 110.25. They're 2 ticks off of their lows. You asked me if I think the market was going to hold, and I said yes. I'm going to ask you, do you think the market is going to hold?
It looks like it. I mean, like, look at Vol.
The hell does that mean, looks like it? Yeah, it looks like it right now because we rallied 15 handles. Big deal. What do you think?
No, but we haven't gone anywhere. We haven't. It's been 80 to 90, 80 to 100 handles down. I mean, it's a nice dip. It doesn't look like it's going to stop the buy the dip.
Yeah, but I don't think we go really anywhere to the upside. That's my call for the day. Maybe, we meander around here somewhere between down
74.50.
Yeah, that's right where we are right now. Yeah. Maybe a little bit higher, maybe a little bit of two-sided action. It would be certainly nice. Volatility is telling you the low is in.
Yeah, it's done. It's over. It's pathetic. There you go. There's 60 handles.
Oh, and your NASDAQ purchase. Good job out of you.
There you go.
You get a Porsche.
Not yet. No. That's favorite child stuff. I don't get that. That's not me.
You'll always be my number one son.
Of course. I'm scalping out of just some of the short, like I did a diagonal spread in BABA. Short option goes from $3 to 80 cents.
What are you gonna do with it now, right? You might as well just close it, is what you're saying.
Yeah. Okay, fast market. Let's do it.
I'm ready. This is where the producer plays some music. There we go.
Mediocre.
Meh.
Not great.
Oh, BABA. You just did BABA.
All right, AM model looks seriously capable, and the AI race is still early. Long-term bullish on BABA, 30 delta covered call in June. Okay, so I have some calls in BABA. So I have some long delta.
Okay.
I just closed out of a little bit of short delta. I'll add to this with a June. We'll do a small July-June diagonal spread here.
Wow.
$6.
Wow. Do you feel like you? Question for you: do you feel like you got ripped off?
No.
No, it was such a quick fill. I would feel like you got ripped off.
No,
I hate
it's okay.
markets and Baba. I hate trading Baba. I'm going to go on record here.
I agree. I don't disagree with you on hating Baba, trading Baba.
I hate it. I hate
these China stocks. I mean, they're pure FOMO momentum. Worse so than the semiconductors because there's nobody that has any clue about these companies.
Yeah.
So,
Agreed.
yeah, I'm in. I nibbled. There you go.
Okay. Good job out of you.
Thank you.
You're welcome. I try.
SPX. All right. May expiration with no major announcements on Friday. Expecting a choppy session and closing before noon using a $20 to $25 wide iron condor. We did the Jade Lizard. We did the put ratio as well. So we're with you. I mean, we're neutral.
We're locked and loaded in there. I mean, we did everything that we probably want to do in the 0 day, right?
Yes.
Your spread at 590 is trading closer to 530 that you did in SPX.
Yeah. We got working orders in both of them. I'm looking to take $100 out of the Jade Lizard, and you've got your working order, which is that spread's moving. That's almost $100 too. You could probably move that and keep it at 50 cents.
I don't know. I mean,
why not? I like it.
I mean, what I do it at 220. I mean, you want to put in $1.20?
No, 50 cents. Leave it.
I don't care. Just ring the register. What difference does it make? Even the
put it at $1 or $1.20. I want to take $1. $100. I want to buy you lunch.
$1.20 debit it is. If the
you know what? It'll buy you half a tank in your new Porsche.
If even
premium,
it's not mine to buy. He has to pay for that gas.
Oh, sold.
I only pay for 1-car gas. I don't pay for 2-car gas.
Yeah. Does he know? Have you told him about premium versus unleaded? Have you explained that? Because you put unleaded in that thing, and you're at the dealer for $5K.
It's an extra buck. It's an extra buck a gallon for him.
Well, okay.
Hey! You want to fly around with the big dogs? This is what happens. Even the S&P's down 93, by the way, moving all of these spreads back to where we put them on. It really is delta sensitive with so much time to go on in that spread.
Please make sure that he understands that it's not about the price. It's the car needs.
Oh no, he knows. Oh man, you kidding me? He's looking for a cold air injector right now.
It is sick. It is sick what you are doing. Man.
You just bought back your NASDAQ futures.
No, I bought them again. I scoopied them.
I said you just, I'm sorry. I said bought back. You re-entered a long position in your NASDAQ futures. You bought them, sold them out 60 handles higher, and now you're buying them back in the same-ish area. Actually better than where you bought them the first time.
Yeah.
I'm just giving context for everybody out there.
Thank you. No high fives.
No high fives. About 40 handles, 100 handles under where you just sold them.
Yeah.
And you just did that. I mean, we moved 100 handles in the NASDAQ.
15 minutes. Less.
15 minutes in 5 minutes.
Oh. Time with you, Dad. It's
like it stands still.
Yeah, it's great. It's amazing. Qualcomm.
Next one, please.
So we have a little bit of long delta here in Qualcomm. We did a diagonal spread. It's actually Qualcomm bucking the trend today a little bit, up a handful. We're out a little bit on this diagonal spread. They're looking at a put spread here. Looking at the 185, 190, the 185, 165.
Ooh, okay.
So kind of like right at the, it's a 20-point wide, but at the expected move.
Yep. Understood. What do you think of this?
I think maybe we just do the iron condor instead.
Okay. Makes sense.
Because we have a little long delta here.
We do.
I'm thinking markets aren't great. I'm looking at here. Here, we'll do the 175.
Volatility up 56 cents. It's about as high as we've seen it since we've been open. Catching a small little bit here.
Are they finally going to Dewey whack them and how?
I don't think so. But bonds hanging in 110.25. Even the S&P is about 15 handles off of the recent low that they made. I think this two-sided action is good.
All right, I did a iron condor here, the 175, 160. I did this $5. Okay, so I have a slight short skew to this. 260, 280. I did it at 455, so about 1/3 the width of the strikes there.
Okie dokie. Beautiful, beautiful. 500,000 Tesla options have traded, almost 800,000 Nvidia options, both 5 times the norm for the day, son. Just letting everybody know.
All right, that's great. Taiwanese sources coming through.
Taiwanese sources coming in great. Thank you.
CRM.
Thank you for all the kind words in the chat room. So thank you everybody who's watching. Appreciate it. Doing the best we can here. CRM. Support now. Selling the June 150 put. CRM sitting at support yesterday. Up $5 today. I hope Pat in Cleveland, Ohio put this on yesterday. Earnings are May 27th. What do you think?
I'm trying to work a put ratio spread here.
Okay. Put ratio spread.
Markets are not great.
No, markets are. You right? Trying to do a put ratio spread in CRM?
Yeah, in June.
$5. You are a stud.
I mean, the stock is at lows, dude. It's up $5. It made 4-year lows 2 days ago.
You are correct. When Pat saw that and Pat pounced, why did you pounce yesterday?
These stocks are dogs too. The reason I went with the put ratio is because
it has a higher probability of success than a naked put.
And I don't love these stocks. I'm not.
You did this for 35 cents.
This is Sosnofian.
You're participating, but ever so slightly.
Yeah, I don't love it.
Okay. So you made fun of me, but you did a trade that's got. Go ahead.
What else are you gonna do here?
I agree with you.
I don't want to sell the put.
Yeah, you're synthetically short the 140 put. I may have looked to do something like that, or just a put spread, or yeah.
GFY, buddy.
Gave it away. Next one, please. We're looking at Nike Classic Poor Man covered call setup here. Well, if you did this trade, son, you'd be doing it better than me. Nike up 11 cents. Unlike the last trade that we did, Nike has not had an uptick.
Nike, I actually, with Mikey Butler, I have a leap call at the 50 strike. Has not moved.
Okay.
And my Nike really hasn't moved at all either. So
no, it hasn't. All
right. So you want to do a poor man's cover call. I actually prefer this over buying shares because this stock is just disgusting.
Okay.
I'm gonna move this more towards. I'm gonna do a higher delta. Well, I guess this is kind of a cheap. This is like a diagonal spread. Poor man's cover call. I'm gonna make this more of a poor man's cover call. I'm gonna buy the 35 in July, sell the 42.5 in the June expiration. It looks to be marked around $6, which gives you a break even. Right around.
Watch your pricing in here too. Be careful. Work the order.
Yeah. I'm gonna work it at $6.
Okay. The July 35 calls the market 760, 805, and that's your probably 760 bid in there. It's an 85 delta option, so definitely more of a poor man's covered call than a diagonal spread, which your long strike is usually 40-ish delta, 45-ish delta. Here you got twice as much delta at 85. Definitely a poor man's covered call. You're definitely supporting Derek in Louisville, Kentucky.
Yes, 615.
Yep, beautiful.
All right.
Even the S&P is down 90, volatility up 48 cents. Bonds 110.25. Oil sitting at 99.73. Hasn't moved.
Bullish on net and the broader sector. A skewed iron condor in June. 175, 155, 240, 260. So you're using a closer at the money put spread, further out of the money call spread.
What do you think about this type of trade in net?
Let me see what I can do here. I mean, net isn't exactly in the
I was gonna say,
cyber.
how do you like the markets in here?
They're not good, but I'm gonna get filled on a diagonal spread here.
Okay. You're going to try to get filled in a diagonal spread.
Yeah, it's gonna be a battle, but I'm gonna do it because I'm gonna get all these on.
I love it.
10-10.
10-10. Beautiful in net.
Yeah, a little bit of long delta. I'm buying the 210, selling the 230 in June.
Definitely supporting Ben in Nashville, Tennessee.
Yes.
Good job. Even the S&P down 90. Go.
Okay. Boeing. What's it?
Get this
today?
Boeing going.
222 here. Okay.
Boeing, this feels like a classic buy the rumor, sell the news setup, and they're a little bit neutral here. Still neutral on Boeing after today's pullback, another one today, and the premium is better now, going with the 20 delta, $20 wide iron condor in June. What do you think about a two-sided trade in Boeing down $6 and change? On top of it, after making new highs at 240 or recent new highs at 240, Boeing has down to its lows that it hasn't seen since May 1, even going back to like the middle of April.
Mm-hmm.
What do you think about Boeing?
Yeah, I kind of like this.
You're going to stay in June, right? I mean, markets are okay in here, about 20 cents wide.
Yeah.
Mm-hmm.
And we scalped out of it good yesterday.
Yep.
So it's essentially just getting back into the trade.
Uh-huh.
I did a 15-point wide iron condor. I did it at $4.45, right around the 25 delta for the short options. So I went a little bit more aggressive. Oh, we just got filled on SPX too.
Yeah, that's my
That's
one
your
by
butterfly.
2-1 that we put on the butterfly. With even the S&P is down 84. That came in $1.
Look at you banging out $1. You are what a guy you are.
I mean, if I thought you could do more than one thing at a time, we would have made like $1.50 or so. But
you could just all you had to do was put it in. That's all I had. That's all I asked you for.
That's what she said. We made $1.20 in a small amount of time. You certainly can keep that on if you want to, or you want to know something the way the market's moving. You're probably gonna get another opportunity to do it. If we go into SPX here just to look at what the expected move is after about a half hour and 10 minutes. That would be 40 minutes in English if I was doing it. The expected move is $35. The expected move hasn't changed. What changed here was the delta, and it was a very small amount of deltas. Even the S&P is down 87.
I like it.
Yeah, I do.
Very
too.
good.
Too. Just to put in perspective, just the two different trades. Your trade is about 10 cents away from being filled too. So they have the same kind of dynamic and component to it. I had no upside risk. You have a little bit of upside risk, but the small move that we've had in the market have moved both of those spreads about the same. Are you there? Or are you frozen?
Yeah, I'm trying to. No, I'm always here, brother.
I know, but
I'm never. I can't get rid of you.
Would you want to?
I'm trying. I'm trying to play the
coin.
Momo here.
Go ahead. You do that. I'll do this.
All right. Coin. What are we thinking? I did a big wide butterfly in Micron on the upside. I've hit these.
I mean, you're doing this
spectacularly.
What's that?
I've hit these spectacularly. This is, I think, the only way you can.
This would be an opening trade in MU.
Yes, this is the only way I think you can trade these stocks. Really wide butterflies. you're playing for obviously the upside move, but you can trade in and out of these. There's so much upside volatility. If the stock rallies, these spreads juice up because volatility tends to expand. This is like it's obviously capital intensive.
Yeah, it's $2,600. I mean, not outrageously capital intensive. I mean, you're doing, something a month out or more. You're in June here, so you're a month out. 14 long deltas. I like it. I mean, diagonal spreads use around the same amount of money sometimes, depending on what you're doing.
Yeah. Well, the diagonals in these stocks are going to cost you 10K.
Yeah, that's what I'm saying. Yeah, depending on what you're doing. Sure.
Yeah.
Right. So I like the play. Long delta play here ever so slightly, but a nice big wide butterfly, 800,000, 1,200.
Yes. And I'm trying to scalp it. Oh, there's my SPX trade.
Oh, often imitated, never duplicated. Good job out of you.
Well, it's $100 out of both of them.
Yeah, that's it just took you a couple of minutes longer. I'm just teasing. Come on. We're having fun here.
All right, crypto. It's been stuck in a tight range. All right, selling out of the money put spreads. What are we looking at? Oh, I'm gonna scoopy this NASDAQ for another 100 too. Don't mind me.
Another 100 handles. Right?
Yep.
Yeah, no, that's a great job at it. There you go.
Okay.
Even the S&P is down 80, 79. Volatility up 36 cents or so. Bonds 110.24, still on their lows. And gold still down about 3%. Silver down just about 10%.
All right, what are we doing, coin? I feel like coin is not in a good spot here.
No, I don't think coin's in a good spot at all either. I hate trading it. Oil hasn't moved 99.5. It's just been a good little two-sided trading market here.
I think I'm going to do another little cheapy ratio spread here.
Beautiful. Those futures you sold at 29,265 after buying them down at 165 area. Nice trade.
All right, so I did the 75-60 June put ratio spread.
75-60 June
in Coinbase.
Yeah, that's type
for
of trade.
$2 or just under $2.
Type of trade your dad would do. Very high probability trade. 85% or so. Coin down $12. You're synthetically short. I don't know, like the 155 put. The stock is flirting with 200. Yeah. Expected move is $30. You're $45 outside the expected move. You got $2 of possible profit if the stock goes higher. Got an embedded long put spread. I like it. It's, 10 delta trade. I like it.
Cool. All right, next one, please.
Now, all deltas aren't created equal. Like that SPY trade that we showed you trading around $8, where we were looking at a little bit of a diagonal spread, has $10, 10 deltas also. But that's going to move a lot faster than a trade like this that's synthetically short of put. I'm sorry.
No, I like it. All right. I think they're looking at the 73 put. This is Kevin, bullish and keeping it simple because the 33 is way out of the money here. I mean, this sector has just been whacked. It has not.
Yeah, it certainly has.
The markets stink here. And nobody's trading this. This is unbelievable. No. There's like zero volume, open interest. I guess there's some open interest here, but this doesn't. I'm going to pass on this. 29% implied volatility, just not on my radar. I think if you're trying to do this, maybe a poor man's covered call, diagonal spread, it'll give you a little bit more bang for your buck if you get the upside move here. I'm going to pass though.
Pass for now.
All right, Microsoft. The whole market feels too hot, so I'm expecting a correction soon. Microsoft has lagged. Agreed. You can look at it, and everybody probably agrees. So it may hold up better in this market. Yes, Microsoft having a nice little day today, and they've been coming for the pigs. Selling the June Iron Condor. I have some long delta here via diagonal spread, so I'm going to stick with what I've got. but I do like, that idea. I think Julia came with that as well. A similar idea. I like it if you're trying to get in here. Good spot.
Yep.
So I'm going to pass, but I like it.
Okay.
That's it. That's our 10.
Oh, there's our 10. I didn't realize it. Nice.
Yes.
Very nice. Very nice. Well, good job out of you, son. Good job out of all of us here at Tasty Trade here. Good job out of the market. Only down 70 now. I say only down 70 because this is about as high as we've been since we've been on the show, at least opened. We opened near the lows and have kind of rallied there. Volatility up 24 cents. Really kind of surprised that volatility is contracting as much as it is at this time. I thought maybe volatility would catch itself a little bit more of a bid going into the weekend. I doubt it goes any lower than this, regardless of what even the S&Ps do from here. I would think that volatility stays here for the rest of the day. No longer an indicator for the market itself. NASDAQ down 357, Russell down 52, Dow down 375 or so. The weakest in the group is definitely the Russell. The NASDAQ's giving you the best opportunity. You've traded really well, two-sided action there. About 200 handles off of the lows. Obviously about 400 handles off of the highs that it made last night. Bonds 110.27 after trading down to 110.23. Bitcoin down 2,300. That'd be the one that's moved about $1,000 to the downside. Has not caught itself a bid today so far. Oil's been the most complacent of all products here today. Still up 2.5%, but really hasn't moved all day as even the S&Ps have oscillated around. Gold doing the same thing, really hasn't moved, down here around 2%, trading at 45 and change. Silver down just about 10%, 9.5%, hasn't moved that much. Net gas has had itself a good little move off of its highs, 297. You got out of there, that's good. You scalped your SPX trades. Been a good morning already.
Great morning.
Did a little bit in SMH. Hey.
Good stuff. Good job out of you.
This is trading. Hope everybody else at home survived this too. We'll be back in 90 seconds. We got more Tasty Live at a market measure on 0 day. Then we'll go to our friends at Tasty Trade. We'll see what Q is up to. We'll be back in 90 seconds. We got more Tasty Trade after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform. Being able to see graphically where your profit and loss zones are. Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better. In fact, I've never seen anything like it in any corporation in the United States.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by Cboe. Cboe is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with a market measure. Even the S&P is down 60.
Sponsored by the Cboe, our friends.
Sponsored by the Cboe. Thank you very much. I mention that all the time. I misspoke and did not. Sponsored by the Cboe.
Next time you're going to pay for that marketing budget.
Sponsored by
you
our
don't say
friends.
the name.
Our friends at the Cboe.
Yes. All right, let's do it.
All right, let's do it.
What a little bounce we've had. This has been nice little trading day we have here today.
Yes. Yeah. I mean, it's like the
Microsoft is rallying.
I almost feel like the day is over.
It feels that way.
This is where I think we're going to close.
Yeah.
And look at volatility up 30 cents, quite a little bit higher bid than it was before.
If they stay here, if they crush volatility into the weekend, you watch out on Monday.
I don't think they will crush volatility going into the weekend, though.
And I mean, watch out as in it could be a face ripper. You got Nvidia earnings next week.
Yeah, you do. The last one really of the group there.
Yeah. So you got to be careful here. All right, let's do it. Market measure.
And how do you be careful? Just out of curiosity, what do you do different?
No, I meant be careful, like being too short into the weekend. If volatility comes in, you gotta think that it bounced on Monday.
Perfect.
All right, let's do it. So we're talking SPX Jade Lizard, short-term Jade Lizards here. So we've started to do Jade Lizard segments. We did one over the last couple weeks here. As short-term trades, we did one this morning, which worked out very nicely. The upside proof structure and the two-sided credits performed well when entered just days before expiration. So it's been good to, kind of combine the just short put spread and the iron condor together. Doing a wider put spread, you're essentially doing both an iron condor and an extra short put spread. And so in an up market, this has been great. At order entry, the key characteristic for the Jade Lizards are the distance out of the money and the width of the spreads. The Jade Lizards credit requirement, collecting at least the call spread width, means there's a natural limit to how far out of the money the short strikes can be placed. So typically, you can't go to your one standard deviation on the downside. You'll have to have a setup like what I did today, where you're not collecting enough to cover the full width of the spread here. It's more in line with like a traditional iron condor. But that's not really a problem, so to speak. So today we're going to talk about the range of viable strike placements and their performance across several spread width combinations.
Beautiful.
So, of course, we're using 3 years of data in the short-term SPX options. We're selling 7-day Jade Lizards with either 20-point wide put spreads and a $5 wide call spread. So this is a little bit longer duration than our typical day of trades. 20-point wide put spread wing with a $10 wide call spread, and then $30 wide put spread to a $10 wide call spread. We're going to examine how far out of the money as a multiple of the expected move these Jade Lizards could receive a fill, and how often the credit mid price was at least the width of the call spread. So we're looking at kind of how many times you're getting the full width of the call spread in terms of your risk. So if you're getting $10 on the whole trade, that would be covering the width of the call spread. And then for those that could form valid jade lizards, examining the results with the winners being closed at 25% of the max profit, and then we check that at the end of each trading day, and then at first, and then every 10 minutes throughout the day on the day of expiration. So we're looking at every day whether you could close it, and then every 10 minutes on the day of expiration. So it's either at the end of the day, could you close it for your 25% of the max profit within that 7-day window, the 5 trading days, or on the day of, we do every 10 minutes.
Okay.
So you're not getting the intraday up until the day of expiration for that trade.
I like it.
So here we're talking about with short strikes at the money, 0.25 times the expected move, 0.5% all the way up to 1.5%. You can see all of these are fillable, so you're collecting enough credit to offset the width of the call spread. Your win rates are fantastic. Keep in mind, of course, the ultimate caveat with all of these is anything that leans bullish over the last 3 years has been really, really high performing. You can see your average
at all-time highs. Anything bullish has been high performing for sure.
Yes, I am not reinventing the wheel here. It's been good to be long. And you can see, across the board, your P&L gets better as you widen out the spread. That shouldn't be a shock because you are collecting more profit and you're able to close these quicker because you're wider on the put spread.
Perfect. Good job.
So when you look at the $10 wide spread, this is where you get into, and the $5 wide spread, you're probably collecting $1.50 on that $5 wide spread, which is what we looked at on the last slide. The $10 width, you're probably getting $2 or $3 in credit, which means that you have to collect $7 on that short put spread. You can see here that once you get past the expected move, you're not able to fill that trade for more than a $10 credit. So those have not applicable numbers there because you weren't able to get filled for $10 or more on that trade. It's telling you when you're doing a wider call spread, you're naturally going to have to go closer to at the money because you have to collect a much higher credit. You will see with these trades, you are taking more risk because you're going closer at the money, but you're getting a higher P&L, average P&L on your trade because you're getting a bigger credit. It's a more neutral to bullish trade that you're collecting more credit on here.
Perfect. I agree.
So, and you can see win rates really, really spectacular across the board here.
Spectacular.
70% win rate. How much better?
Yeah, look. Most of the trades, or at least the trades that we try to put on, are have between a 60 and 70% probability of success. Maybe 65 to 70 if you throw in those ratio spreads like the one you just did a moment ago that has an 85% probability of success, but makes less money than what we're looking at here. So you got to put everything into context here. That's the win rate that we're looking for. That's 70%, 65 to 70%. To manage winners early, because we don't take full profits on things, you got to factor all of that in.
Exactly. So when you're looking at these $10 wide call spreads, you have to widen out the put spread to get that higher credit so that you can move that put spread further out of the money. So if you're willing to put more risk on, you can actually move the spread towards like 1.25, the expected move. You won't be able to get to 1.5x the expected move, but you'll see here, your P&Ls get obviously a lot better. Your average or your win rate gets a lot higher as well, but you're putting more risk on the table. So the caveat here is that there's a lot more capital at play. There's a lot more potential risk on the table. But if you are willing to put, that money to work, going with the 30-point wide is going to allow you to go further out on the distribution versus the $20 wide, which you have to be like kind of right at the expected move for that put spread.
Yeah, you're right. Which one? Looking at this slide, just going across the board here, what do you do and what do you wish you did?
We did. I think we did 20 by. What did we do? 20 by 15.
Yes.
So we had a little bit. It was kind of a. Here, I think for most people that are doing this mechanical, it probably makes sense to do the $30 Y, the 30 by 10 if you're going to do it. I mean, that's more the traditional Jade Lizard. You can see it in the P&L, in the average P&L, you're getting a much higher number. There's a pretty big difference between, $40 average P&L and the 100 that you're seeing here. And so I think if you're trying to do the Jade Lizard type setup, it gives you the combination of being further out of the money, really high probability, and a P&L that justifies the
risk that you're taking.
Yes. The $5 wide, it turned out really well because we just went straight up. Right. If you have a choppy market, both the $20 and $30 wide Jade Lizards with the $10 wide call spread are going to be way, way, way better. The data here is really, really skewed just because, and not skewed in a wrong way. It's just the market, what has happened.
Perfect. Good answer.
So the key feature here for Jade Lizards, collecting credit on both sides while eliminating upside risk, has been an excellent fit for a volatile market, yet bullish, over the last couple of years. So it's been volatile and bullish. That is about as good as it gets for a short premium bullish trade, right? Your Jade Lizard, long delta, short premium. That's exactly what you want. Every combination we tested showed positive average P&L, but that doesn't mean all approaches are equal. Put with drives max loss and buying power. Call with sets the ceiling on how far out of the money you can reach while still collecting enough credit. The $30 wide, $10 wide call spreads were viable out to around the expected move. $20, you had to be inside that, so you took more potential max losses on those trades because you're inside the expected move. And then when you get, to the $20 wide, $5 wide call spread, you can get further out of the money. So if you're a little bit more conservative, that might be the trade for you. Further out of the money generally performed better once you've settled on the width. It may be best to simply look for how far out of the money you can go before credit reaches the call width. With entry parameters, we're going to look at other management in the next kind of batch of Jade Lizard trades. But overall, they've all been really, really good. I think it's a big question on how much capital you can outlay and what your risk tolerance is.
Good job out of the team. Good job out of you. Good job out of me. What do you think about the market? Doing a good job or not? Even the S&Ps are down 71 handles. NASDAQ is down 370. Russell is down 55. Russell, the weakest of the group. Dow down 360. Volatility up by 23 cents. Bonds off of their lows by about 7 ticks, 110.30. What do you think here? Oil hasn't moved. Excuse me, I just went to corn. Oil hasn't, then I just went to gold. I apologize. Oil hasn't.
New hands.
Oil hasn't moved, trading 99.80. It's moved about 30 cents to the upside. What do you think about the overall market? What do you think about, before we get Q in here?
I think you called it perfectly. I think we're done for the day.
Wow.
Which is sad. I wanted more. I wanted more volatility. Oil seems to be settling in here at 100.
Yeah, it hasn't moved.
Oil volatility is nowhere to be found. I mean, volatility today is up about 3% in oil. We're sitting at 71, but it's not expanding. It's not moving like, you would expect with oil consistently sitting here at 100. You would think volatility would kind of expand and the tail would get priced in a little bit more. Upside tail, but that is not the case here. So I think it's, another case of a buy the dip. It seems like
after all-time highs, I didn't think I was going to be saying it, but yeah, it does seem like that's the way the market, at least for right now, is playing it.
Yeah, I did not expect that either, but here we are. We trade what's in front of us, right? I mean,
that's all.
Unless you got the crystal ball.
Unless you got the crystal ball, what was that you just did?
I had a Shopify short put. I think that was what's your assumption? Fast market trade. I took $100 out of it, so I just taking a little bit of risk off the table.
Beautiful, I like it. Even the S&P down 64. Volatility up by 22 cents. You wouldn't think you'd hear those two numbers together after market at all-time highs. We'll be back in 90 seconds. We got more Tasty Live. What comes up next? We got our man Q coming in the house. We're back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform, so I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
One.
Nikki, we are back, son, and let's take a quick look at the market before we bring in our special guest who's always got a smile on his face. Even the S&P's down 62. NASDAQ down 340. Russell down 53. Russell, the weakest of the group, been weak, staying weak, only about 15 handles or so off of its lows. In NASDAQ, for instance, is about, what is that, about, I don't know, let's call it 250 handles off of its lows. Even the S&Ps are about 40 handles off of their lows. Volatility, as low as it's been all morning, up 17 cents. Volatility we talked about earlier today, higher than where it was when the market was closer to its even the S&P price 2 or 3 days ago, and expecting volatility not really to expand, and it didn't. It came in. I didn't expect it to come in this much. I thought it'd be right here for the rest of the day. We'll see what happens there. Bonds going step for step with the market, 110.29, still down significantly. That's about 1.5%. We'll round up here. 0.18, $1,000 a point in bonds. That's a big move in bonds. Been as low as they are for a few years now. Maybe rates are gonna tick up. We'll see. Chris Vecchio will tell us about that later today. Bitcoin down 2,300 at 79.2. That's been the weakest of the group. Opening closer to, when the market opened, we were around 80 and change. Now it's 79 and change, about 5 $700 off of its lows. Ethereum doing even worse today, down 86 on a percentage basis. There's your oil over 100. I think it's over 100 for the first time since we opened here in the market. Oil has stayed steady and stayed bid, hasn't had any effect really on the market on a daily basis, at least.
But look at volatility. I mean, they say no big deal.
OVX CG.
No, not OVX. I'm looking at market volatility. Market volatility.
Oh, market volatility is saying no big deal. Since I have it, I'll put OVX up there. This is bond volatility, up 3% to 71. But as you can see here, really, since oil was $90, it's been the same volatility as what it is at $100. Yes, volatility on /VX. Going to the daily move in volatility, it really is. They really are saying nothing to worry about right now, right?
Yeah. Do you do something in bonds right now?
Yeah. If you get another little bit of a dip down in there, I think you're still going to see a little bit of maybe capitulation in bonds here. So
do you sell the 109s or the 110s?
Well, I would go into June with 42 days.
Yeah.
And I did the 108s last time when they had closer to trading at where the 107s are right now. So I would probably trade the 107 put somewhere, I go in mid-price, 30 ticks if I was looking to do something there.
All right, I'm going to give it there we go.
Yeah, everything seems to get filled at mid-price in there. A little kind of a cheat sheet here if you're looking at it, like you've got this kind of gray color and then a greenish color. Usually that signifies an offer being put in and not a disseminated market by the computer itself, meaning the liquidity providers. I don't know, just a little hack.
Thank you, sir. I put on a DRAM position.
Oh, you did?
Did you push all those through? I added a little bit of long delta in Nvidia. I added a little bit in Amazon as well. But I did a big wide butterfly in DRAM, kind of like what I did in Micron.
Mm-hmm.
Gives you the upside potential. You're short some tail volatility or very far out of the money volatility there. I think it's an interesting spot.
Yeah, 50-50 shot that you hit your middle sometimes over the next 34 days. Much cheaper price to get into than the $800, $1,000 stock that you were trading that was $26, right?
Yeah. It's also cash secured at this point. So like selling puts or buying stock is very, very capital intensive. If we get a little bit of a downside move, then we can, think about something else there.
Awesome. All right. Without further ado, you're a friend of mine, Mr. Q. How are you, sir?
Fellas, how's it going? I'm doing well. How are you?
Doing good. How's the trade desk today? Come on, give me something.
Oh, trade desk is actually not that busy because it's like the first down day after however many, an absurd amount of up days in a row. Like we've never seen, because I was looking at it on the charts, even since COVID, we haven't seen a sustained move like this where there's just so many green bars in a row. Just absolutely parabolic, straight up. And so it's been a crazy move. And when you get the first down day, there's a little bit less activity on the desk,
Yeah, I agree with you. And it's the first day, as you pointed out, right?
Yeah.
I mean, so that's, everybody's trying to look at it as maybe this is a buying opportunity. I would think, you know what I mean? If you hadn't got in, or I'm going to neutralize something here. It's really, at least for the trade desk, I think, and for direction, you need a sustained move in that direction, 2-3 days, and then you guys get pretty busy. Even though you've had, sorry to step on you, even though you've had almost 2 million Tesla options traded today. I mentioned this with you on the show because you're going to go through the list here. I think Tesla's probably going to be, I'm going to make it the number one. I don't want to say in the top 3 or 5 because that's too easy. It's probably in the top 3 or 5 all the time, but I think today's going to be the number one there. And you got almost a million and a half calls and puts trading. Huge amount of volume going through the the market here right now.
Yeah, and then I love you mentioned ZB as well, because that's the only cautions I have about ZB. Like, it's pretty liquid, but still watch out. Don't be afraid to put your price and then just leave it there for a little bit. You don't necessarily have to chase ticks and things like that. And then also just be careful of the size in ZB. It's $100,000 plus product, right?
Yeah.
And so with the span margin, you get a lot of leverage. So it's like the buying power requirement is really low. But if the position goes against you, that can expand really quickly. So just keep those in mind. But it's a great way to speculate. Whereas, products like TLT aren't as, they don't move as much. You're not able to they're not as tradable, right? For the way a lot of our customers like to trade.
Yep. Totally agree. Even the S&P down 71. We've really had a fairly tight range here for the trade desk. Maybe 30 handles top to bottom here, 35 handles top to bottom since we've been open. So any profits or problems that people had really have been, you've been able to do something. You know what I mean? So you usually don't get too many calls when, you get more calls when we open unchanged and go down 100 than you do if we open down 70, 80, go down 100 and come back 70 or 80.
Yeah, when the moves, mainly overnight and then it opens, obviously the phones at the open are always busy anyway, and then regardless of the day. But then, if it's just sort of staying here, that like a 70-point move intraday is way different than a 70-point move overnight and then just stays there.
Sorry for my silence here. My neighbor above me, it sounds like he's trying to invade and conquer my condo here. I think they might be drilling through my concrete ceilings. It is, I don't know what they could possibly be drilling into the floor, and it's literally a concrete ceiling, but it sounds like I'm being invaded here.
He's putting in a putting green, son, and he's just got to make the holes.
Yeah, that it could be it.
That's what it is. Because in our office we had a little putting green, and I remember when we did that, and the neighbors downstairs came up with like, "What the hell are you guys doing?" And that's what we were doing. So I have to only assume that's what's happening.
It's got to be it. Oh my God.
Yeah, so like when people use that, because like we're a fun office. We've got a lot of young people working here. We've got a lot of fun things in the office. The putting green, we got like a little basketball hoop thing as well. I'm sort of
one of the peeps tried to take the basketball hoop away. They were swiftly banished from the office.
Yeah, but I'm like, I'm very much like Tom in this way. I'm very anti-fun. Like no fun around the office. The market's open. You want to take a 2-minute break to go get some water or go to the bathroom, I'll allow it. But you want to go take like 5 minutes to yourself. Go like talk to someone. I mean, the market's open. Got to be working. Come on. What are you doing?
Cracking the whip.
I'm with you, my friend. I didn't take a break for 3 years. I've said
I didn't take a shit on the floor for 20 years.
That's right. I didn't go upstairs and play gin with the other monkeys all the time. Like I worked. It was my time to move and shake. Now, granted, before 8:30 and after 3 o'clock, I might not have been able to be found. But when I was working, I was there. If you called the floor, you could find.
Yeah, me too. The only 5 minutes I get is this.
You know why I did that, Q?
Yeah.
So he could buy his son a Porsche.
That's right. That's exactly where I was going to go.
Why.
It's exactly where I worked really hard when I was young, so I could do whatever the hell I want when I'm older. You're 100% correct, son. You're 100% correct.
There we go. Got to earn it one way or the other.
Yeah.
All right, let's get to the list, my friend. What's that?
One more quick thing before we get the list, and then we'll get out of here. But I will say, when I would sit at the dinner table, back when High Tea Tony was around, he would sit at the table with me as a young a teenager. And he'd say, "What'd you do at work today or at school today?" I go, nothing. I didn't learn anything at school today. He'd go, "So why'd you go?" And I would say, well, I have to, And I would say, how was your day? And it would be like, oh, I didn't go to the bathroom for 10 hours today. Right. That was his MO.
That's right. That's right. Leading by example and trying to get you into the mode that you have become today. I thought I'd be able to get you to do it like when you were 17, 18, 20, 21, maybe in college, but it took you well into your 30s, but you finally got it. And now you don't take a poop for 5.
Oh, hey, woo.
Yeah. Yeah. But I did poop my pants once. That is.
Yeah.
On the floor. So
on an expiration day, right?
On an expiration day.
Oh,
So you have that.
Yeah.
Story for another day, Q. Give us your list.
All right, let's get to it. Top 20 symbols going through the system and their IVR at number 1. Not Tesla, but Nvidia with a 76. Tesla number 2 with an 18. Micron 86. SLV 42. Intel 78. Microsoft 53. GLD 37. AMD 81. Amazon 17. TLC 31. Google 45. AMAT 72. TQQQ 62. Palantir 24, Apple 44, SNDK 77, FIG 52, IBIT 23, MSTR 33, and Netflix 36.
Good job out of you. Foiled by Nvidia. I should have known. That's when you put it all in to win, and you should have wheeled it, first, second, and third kind of thing, and cash in two tickets instead of not cashing in Eddie. That's why static delta versus dynamic delta is better to have dynamic delta, in my opinion.
I agree.
There you go. All right, Q, I'm going to get you off the show here in a minute or so because of you, the market has actually sold off a little bit here. We were down around 70 handles. Even the S&Ps are down around 80 handles now.
No vol still. No vol.
No vol. I think vol's going to stay here all day, as I said, somewhere in this 2080 range, maybe even 2090 range. Even the S&Ps, dare I say, the low is in. Probably a better chance of making a new low than anything else.
This has the smell. You know what this smells like? This smells like a Friday 3:05 tweet. That's what this smells like. This smells like everybody's like, you know what? Trumpy's going to say something right at 3:05, right when the market's closed. The interest rate's too high. We're not, they're going lower. Iran's on the table, ceasefire, something's coming right at the close today into the weekend. That's what this is telling me. That's what I smell.
I like it.
Okay. That would be a positive thing, right?
Yeah.
I would say, yeah.
Well, bullish for the market, no doubt. Yeah.
Okay. All right. Beautiful. Well, we'll see, Q. We'll stay tuned for that. But I'll let you go. Get back to the desk. We're gonna take a quick 90-second break, maybe a skosh longer. We're gonna come back. We got Liz and Jenny next. Thank you so much for your time, everybody. Even the S&P down 74. Volatility up 19 cents. Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. CBOE is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the CBOE's SPX pit. Watch Liz and Jenny live from the CBOE, only on Tasty Live.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an options price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the options price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that options price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. Happy Friday, Jenny. Happy Down Day Friday.
Happy Red Friday. It's not Retro Thursday. It is Red Friday. SPOOs are down 74. We'll see if this holds. The last time SPOOs were down this much, they rallied and were green at the end of the day. So who knows what the day will bring.
You are spot on accurate. They were down about 74, right? When they rallied up?
Yes. Yeah, they were. So that was during our show. We had I don't know, SPOO's down at least 70, and by the end of the day, we were green. So who's to say what will happen by the end of the day? I don't even want to try to predict it.
No, we can't. I mean, like I said, at the end of our show, we were both talking about, you said it's going to be down 80. I said it's going to be down 40, but I go, but neither one of us says it's going to be green. And it was green.
And it was green. I would have never bet that we would have been green on the day, and we were. So who knows what the day will bring. But right now we are down 74. The cool thing is we have a long delta account. Our account is net long, and we're actually up money today.
Woohoo!
Let's go to platform. Let's go to the platform, and we could take a look, manage a couple things if you want to, and then we'll get into the market measure summary.
Yeah, let's do it.
Okay. So we're in the platform, and the very top is he did it again. Is it Punished Pixels who sends this in?
Yes.
Right?
Yes, because then I was telling him to go to bed.
Yes. So Punished Pixels, he sends in some ES trades for us. This time he sent in an Iron Fly, and it was, you can see we were down over $200 in it yesterday. It's rallying back today, so net is up $100. I am fine taking this off.
I am too, to be honest with you.
We're getting close to the center of our Iron Fly, so.
Right. I mean, we have a GTC in. I think we were trying to take 25% maybe. You got to have that, right? So 75 to 60, you have to cut all that in half.
Well, here, I mean, it was such a big credit, 7,500. So half of that, 30, 35, 37, 50. But it's such a big credit, we're up $100. That's only 2%. It's a very small percent, but I don't mind taking $100 out of this trade.
Because it was almost it was through it yesterday?
Yes, because it was a loser yesterday. Sometimes if trades go against you and they're a loser, when they come back and they're a small winner, you're happy to take the small win.
I don't mind taking $100.
Okay. So I'm going to take this Punished Pixels trade off. So it's bouncing around 75, 25.
Sure.
Filled.
Good job.
Okay. So that's closed. Great.
First fill of the day.
And
no, we have quite a few in the money signs. We'll do that maybe after we do the market movers. What do you think?
Sure. I was just going to close our one earnings trade from yesterday.
Perfect.
Fig, we did an earnings diagonal. We actually this was, sent out yesterday as how we set up earnings diagonals. Now, Fig 1 was a winner. It's trading right at our short. AMAT, not so good. That one did not win. But we'll take the $150 out of Fig.
Yes. And can you do me a favor as well? I was trying to push out our trades, and I think we have one that hit. I think PLTR closed.
Oh, sure. Okay. I'm going to close this Fig trade. $2.80. $3 is, the width of the spread. But we'll take $2.80 on that. And you are looking for activity today. Palantir GTC hit.
Yes. Okay. So that must have been for a profit, because we only try to take things off for a profit. So that GTC hit, but it hit at 840.
35. Let me take a look. PLTR in the last 14 days.
Yeah.
Oh, here, 25, 35, 281 credit. So we took in 50%.
That's great.
Yeah. Okay. All right. So that's off. That's it for like anything pressing. Like Liz said, the rest of in the money signs we'll address today on the show, because we do have a lot, a handful.
You'll see this every Friday with a handful of in the money signs, because we've become instant gratification traders where we want them shorter term.
I mean, today being May 15th, is today actually Expiration Friday?
Yes, ma'am.
It's Expiration Friday. I got to give a shout out. Happy birthday to my mom. Her birthday is this weekend. And we have a viewer. She must have it on her calendar. We met her on the road. Terry, we met her on the road years and years ago. Every year she emails me and says, tell your mom happy birthday. And I received the email from Terry yesterday or this morning.
Terry reminds you when it's your mother's birthday each year, each and every year.
So Terry, a shout out to my mom. Happy birthday.
That's awesome.
Yeah. Okay. Are you ready to get into the market measures?
I am ready. Let's do it.
So market measures, weekly summary. This takes the market measures that came out from our research team during the week and gives us the highlights or best of, lets us know anything we missed that might be important.
And we love it. It's a quick little summary recap, and we're going to go over it right now. And to be honest with you, we haven't really vetted it. So.
I haven't really looked at it, so I'm going to be as surprised as you are.
Yeah.
Okay, so what do we have? Sector ETF correlation and options performance.
Okay, that sounds great.
Great, excellent.
Slide 1. They don't get this set up. You can go back and look at all this stuff. Okay, but when individual stock IVRs decline and market uncertainty rises, sector ETFs become valuable trading alternatives. This study analyzes the performance correlation between heavily traded sector ETFs, their top components, and option strategies. Okay.
And I do remember a study from past where this says when individual stock IVRs decline. I remember a study from long ago stating that when vol is high everywhere, you're better off trading individual products. And when vol is low, you're better off trading ETFs.
I remember that. I think you did something like that on the road.
I don't know, but it's all coming back to me. I mean, that was years ago, but it's all coming back.
I think it was one of your talks.
It might have been. All right. So over the long term, their correlations strengthen moderately, falling within low to medium ranges, meaning they tend to move in the same direction about less than half of the time. Utilities display weaker relationships with other sectors due to their heightened interest rate sensitivity and frequent use in defense allocation strategies.
Okay. So you can see that this is just a visual representation of their correlation to each other.
Right. So, and what looks like it's very highly correlated. I mean, the only
XLK, XLF is, well, the 55s. The 56 would be XLK, XLV. Those are heavily correlated. XLF, XLE?
Well, those are just themselves.
No, XLF, XLE.
Oh, XLF, XLE.
It's a 50.
Yeah, but not even. I would say like they're not like that correlated.
No, but that's the highest one on the board, a 0.58.
Right. So anyway, it doesn't look like many of these are not super correlated. So you can be in these different ETFs and feel like you're diversified.
Yeah, a little bit. Okay, next slide, please.
All right.
The 5 primary holdings within each ETF demonstrates an average cross correlation of 0.27, a weak to moderate level. That's what we said, consistent with their parent ETF relationships. This correlation level supports effective diversification when constructing multi-sector portfolios. So this is their largest holdings in each one, which is pretty good. I actually like seeing this.
Yeah, I do. So I do like this. So XLE, if you're in the energy ETF, the top holdings, Exxon, Chevron, COP, EOG, WMB. But basically, if you're going to have a large position in XLE, you might not want to have big positions in Exxon and Chevron and some of their biggest holdings.
It's interesting too, because technology, XLK, I mean, that's also triple Qs, right? So that could have been, those are a lot of their biggest holdings as well in triple Qs.
Yeah, XLK. I wonder like how much XLK is correlated with the Mag 10, because you see right there, their top 5 holdings, Nvidia, Microsoft, Apple, AVGO, and Oracle. I wonder how correlated XLK and the Mag 10 are. Probably.
Jenny, that's an excellent question. Let me look into that and I'll get back to you.
Thanks, Liz. Financials, XLF, we rarely trade it because there never seems to be enough juice in those options.
We get so excited when earnings come with those, and then it's just like, oh.
I know. Healthcare and utilities. XLU. I don't have any positions on any of those top holdings of utilities.
I don't either. But it's good. This is good to have, and I like seeing this. Okay, next slide.
All right. Both ETFs and their constituent holdings exceeded the 68% theoretical success threshold. The success rates were similar across all sectors, ranging from 70 to 84%.
Okay, so they're saying the ETF versus their stock holdings, and they're pretty consistent. I mean, some are greater than the others, but it's pretty consistent. So instead of holding something, you can get the basket, in my opinion. I don't know what the takeaways are going to be.
Takeaways. Here we go. You don't know them, but here they are, Liz. Correlations between sector ETFs remain low to moderate over long-term periods, providing diversification benefits for multi-sector portfolios.
And then premium levels demonstrate minimal correlation with success rates, suggesting that sector selection based on volatility pricing may be less critical than sector fundamentals for strangle performance.
Okay.
Can you unpack that sentence for me? I think it just means it's 6 of one, half dozen of another. That's what I think that sentence reads, because you're okay with the ETFs. You're kind of smoothing it out, but they were very much tracking their big five. Their big five holdings.
Critical than sector fundamentals for strangle. Premium levels demonstrate minimal correlation with success rates. Sector selection, suggesting that sector selection based on volatility pricing may be less critical than sector fundamentals for strangle performance. I think you can sell strangles in any of them.
You heard it here first. Okay.
ETF strangle strategies across all sectors and their major holdings exceed theoretical performance expectations comparable to SPY.
Okay, very good.
Hey, so strangles in these ETFs.
Exceed. So that's just it. I'm gonna say the sentence in layman's terms. Strangles in these ETFs exceeded SPY.
Yeah, because if you take a look here, this is looking at this 16 delta strangle.
Yes.
So 16 delta strangle, good results.
Good results. Very good results.
Good results.
I'm sorry, it's comparable, not exceeded, comparable to SPY.
One time, Liz and I were on the road, and we always like to give something away, have some prizes, and at one road show, we were going to give away 16 delta strangles in XRT.
An XRT, the retail ETF. Well, we thought it was a joke. It was hilarious. It was one of the funniest things that has ever been said on the road, but yes.
Okay, and the next market measure of the week that we're going to do a quick recap on is there an inflated VIX during earnings?
Okay, so this isn't inflated volatility for individual products. Is the VIX, the actual VIX, inflated during earnings?
I think when you've got the big dogs, when you've got a ton of big ones, like sometimes we'll have a day where we've got so many big earnings coming out. I think then you might see a little heightened vol.
There's a possibility to see a little heightened vol, but a little bit.
I'm
very curious to see this.
I would say most of the time, no, but when you've got a day or a week of a lot of big ones, you might.
You might see a little bit. Okay, earnings season represents high volatility. The daily trading range of individual stocks is much wider around earnings announcements.
Analyzing the results from the previous earnings season, including April 2026, we wonder how our fear index, the VIX, reacts to earnings historically. Do we see significantly higher VIX during earnings seasons?
I'm going to say not significantly higher. I kind of agree with you. I think it's going to be minimally higher.
I think like this some earnings seasons we get crazy and we see a heightened vol, but historically, I would say not really.
Right.
Okay.
There were only two more instances of VIX making a new high during earnings season, suggesting market implied volatility is not so sensitive to earnings as expected.
Okay. So you see that number of times VIX made a new high, 26 times during earnings season, 24 times during non-earnings.
Okay, so that's a give and take. That's a toss-up. Okay.
While the market expected higher volatility for individual stocks, the index showed indifference to VIX ranges between earnings and non-earnings season. So if you're waiting for a boost in the VIX to sell premium in an ETF, don't wait for earnings season. It's not going to boost it.
Yeah, don't hold your breath. Well, especially because the VIX is priced off the SPY, right? So, and the SPY, it's got so many products in it that even when you got a heightened implied volatility in one, there's myriad of other ones behind them that don't have that heightened implied volatility. So that's why that VIX is priced off the SPY.
Okay, number of times that has wider range earnings. Yeah, really, it doesn't matter. It doesn't matter.
This is a tough.
I don't think if you're waiting to sell something, don't wait for earnings season thinking you're going to get a big boost.
Unless you're in an individual product, because that's when you do get the boost.
Right, yeah, and the individual products, which is why you'll see us on the show say, oh, we don't want to sell premium in XYZ because earnings are in a couple weeks. But we never say that about an ETF.
No, never. And that's why it's kind of nice that we paired these two together. All about all those ETFs and the spider sector, that crowd that I was in for a long time versus this. So you can kind of gravitate towards those when the implied volatility is lower. Okay, so both scenarios have an almost identical average and mean VIX, and that's what we're seeing right here.
Okay. So the takeaways, there's almost no correlation between the index IV and the individual stock IV during earnings season.
And then both earnings and non-earnings have the same average VIX over the long term. So it's good. Myth debunked.
All right, that was a good recap of this week's market measures, and I'm glad that the research team sends us to this because we can't watch every minute of Tasty Live every day. So if we miss it, we have the recap on Fridays.
It is nice, and it's nice. And I want to give Kai a big shout out for sending this to us because he's the one who packages it. We literally called Kai and we're like, we don't want to see the whole thing. I don't want to see it. I want the takeaways. And he gave us a little bit more than the takeaways in each one.
Right. We don't just want like slide one and the last slide, but just a brief recap of what went
Kai understood the assignment. He did a good job.
All right, back into the market.
And now, while you're in the market, can you do me a favor? Type in MSFT because we got breaking news from Frank the Great.
Microsoft was one of the big green stocks today. So up 3%, the $14, big move in Microsoft.
So Microsoft options trading in big with 741,000 calls and 122,000 puts, which is 7 times the norm for this time of day.
That is big. That's big. Maybe Microsoft is finally getting its little day in the sun because it hasn't had the rally that a lot of these other tech stocks have had.
I mean, I got to tell you, it's been hard. Like, don't get me wrong. I am long Microsoft. Let me see if I still am. But it was a tough battle.
It has been lately. My Microsoft trade is just my baby trade. It's like my long call spread and short put spread. So just going to keep those going week to week.
Yeah, this is a tough trade, Microsoft. You're really challenging them.
And it's funny because mine, I was looking at it yesterday because I've been putting those on, and I looked at it yesterday, and my long call spread was nowhere near coming in, and I considered that just a 0. I thought, well, that one's going to be worthless. It was the 407, 412. But at the end of the day yesterday, where were we?
407.
Oh, where did we close?
We closed at 409.
Oh, I guess it was close. Maybe it was the day before. One of these days I was like, well, that's probably not coming back. But I do like having those every week just to keep you in it, but keep your risk small. What do we have? Oh, we have this. We look at this all the time. We've got this Jade Lizard that's made 35%.
Yeah, it's made 35%. We looked at it yesterday too, and we said we were going to leave it because it wasn't quite through it. It's still not through it. Look at that. Our call spread is the 430, 435. It's 423.
So okay, you go ahead.
I don't mind taking it off now. We're up another $50. We looked at it yesterday, and I was like, whatever. We've taken off so much stuff. Let's leave it.
Honestly, so we've been in this for over 2 weeks. We made $175. I kind of like even if it's small, even if it's 250 wide call spread and $5 wide put spread, because then you could make $250 a week instead of $170 in 2 weeks.
I know. I like it too.
So let's switch it.
Do it. Do it. Do it.
All right, I'm going to get out of what we have, and I'm just going to go to the weeklies. That's all I do is go to the weeklies. So
you go to the 7-day maybe, so it'll be Friday. We'll look at it.
And I'll do a baby one. Here is a 250 wide, paying $1, and then I'll sell a $5 wide put spread to pay for it.
Sure.
Got to bring it up a little bit. There, 7-cent debit.
Sure.
Then if it goes up, this can make $250.
And I agree with this. I want to land on here. Can you do something for me though? I would just want to price out something. You know what we did in SPX? Can we do something like that? I want to see where our break even is on it. Where you're doing
Okay.
Yeah, do a $5 wide and then do a $20 on the bottom. I just want to see.
22.12. Here's a $10 wide.
Not bad.
Yeah, you're getting over $5.
Yeah. But you're only going to make 63 cents, but I guess in the other one we'd only make. Yeah, that's not bad.
So here's a $5 wide and a $12 wide.
So you're risking more. I get it. But we're risking $5 on the bottom.
But if it goes up, you're only making $1.30.
$1.30. Yes. So let's go back.
It doesn't matter.
Like I said, I like the other one. I just wanted to price this out. I didn't know how it would work in non-SPX.
So let's show the difference. This is similar to what we have on an SPX, where we're covering the width of the call spread and getting over. We've got kind of
and you'll make $1.13 anywhere to the upside.
It's like a skewed Brooklyn butterfly.
Yeah.
Versus the other trade where you buy the call spread, and I go just out of the money here, and then I usually go around the expected move and sell a put spread. This one on the analysis page. Oh yeah, there it was. Here it is. You can, you're only going to make money to the upside, where the other one you had a little bit of room to make money. This one you only.
I mean, these are all versions of the same trade. We were risking $600 versus $500 to make 130 versus whatever. Like, pick your poison. I'm okay with either.
Yeah.
I'm okay with either.
This one's a little more bullish. The other one's a little more neutral.
Ship it. I ship this one. I just wanted to price it out. Oh, we do. This is very exciting news. We are going to take, this is not the exciting news. So my level of enthusiasm, hold on. We are taking tweets with the hashtag LIZJNY in there, but let's go to natural gas.
Oh, right. Okay. So,
and then we have and then we're going to speed do the in the monies because I know we have quite a few tweets coming in.
Okay. Well, it's only 10:20. It is only 10:20. We have 40. We have a lot of time.
Perfect.
It's only 10:20. So natural gas, we have this bounce up in natural gas today. And what we've been doing, these broke wing butterflies, did it fill?
It didn't, because this will be super wonky when it does fill. This is what I want people to realize. So here is what's going to happen, because we're going to pay the 9 cents for it. But look at what we have now. What we're going to do is then butterfly it off. But you got to keep in mind, we're crossing strikes. So we have 2 butterflies that will be right on top of each other with no risk to the downside, which we've taken into credit. So let's replace that and then go back to this. So everybody focus on this visual right here. And then we're going to butterfly it off and then go back to the visual. Okay.
So what we're going to do is if we pay to butterfly our second ratio spread or broken butterfly off, we take off the risk. This downside risk is going to be eliminated. But we're going to decrease this profit area. So here it says at expiration, we could be up $430. You're going to have to subtract $90 from that.
You're going to subtract $90 from that, but that red portion will be gone. And then we're going to add to it. So this is high level stuff, but this is super fun in natural gas.
So right now we've got this butterfly here. Well, we've got this butterfly.
You've got the middle butterfly. And then remember, we bought the 205. So that's one butterfly. What we're working to butterfly it off is you're moving the 2.5 to the 2.65. So you got to keep in mind, that's going to be 2. You already have a working order for it. Just cancel.
Yeah, and you see that's 9 cents. That's the 90 cents we're going to give up, but we collected about $240. So
yes,
I'm going to replace this. I'm going to pay the 9 cents.
I don't even care if you pay 10. I want to get filled on this. Okay, good.
Okay, so now we have butterfly here, and now when I go to the curve view, we don't have, this is how some people might ask, because Mikey will often post these, like, look at my position in MCL, and they'll wonder, how do you get that? Well, this is a slow grind to get to this.
Yes, it's a slow grind, and it's challenging to get there, but it is super fun when you can get there. So now we have this forest of greens. No matter what happens, we're going to make money. What do we want right now? We want those peaks, those twin peaks that you see right there. That's what we're rooting for, but we're going to put another one on.
You know what's interesting? It says P&L expiration at 470, but we just booked at 90 cents.
You and I both know that's wrong.
Yeah, because it only has the positions we have now. It's not taking into account the old positions we had.
Correct. Okay. So,
but it is nice that we have this.
And when it gets to this point, and then you can just let it go, because natural gas, we will not be taking oil tankers of natural gas. I've done this multiple times enough to know that no one's delivered anything to me yet.
Liz has never gotten her tank of natural gas, but she wouldn't mind it if she did, because he keeps her pool pretty warm.
I would just be like, put it in the back. Just put the thing in the back.
I
had the pool fired up to 90 yesterday because all the girls were in it late last night. They were freezing. So they couldn't get out because they had their heads in like this because it was so warm in the pool and cold outside.
Oh, yeah. Busy weekend, high school graduation weekend.
Yeah, high school and college. Okay, now let's put another one on. So this is what's fun about natural gas. This is what it looks like now. We have no risk. We're going to add a little bit of risk.
Do we want to, or do we want to wait for a down day?
Well, can you do it and then go to the curve view? I just want to show. Because you could wait for a down day, or you can just we have a lot of protection underneath it. So this is what I was going to say. This is what I will do, even if it's an update, because of the protection underneath it.
So I'm going to make this very wide and go all the way down to this 2.5 to buy.
Well, I mean, you can literally buy the 2.65 if you want, or the 2.55. We know what we've got, and we're going to put an order in for it.
I know. Okay, so I'll shift it around and see.
Okay, so buy that. So now we're taking in another $2.
So I'm going to go to the analysis page with this new one added in.
Mm-hmm.
Now, if I shift this up, to where we don't, I don't know.
No, you're only taking in 12 cents credit. What you're trying to do here is take in a lot of credit. So go back to the trade page.
Then I'll move it down to here. So here we're taking $170.
Remember you're taking in $170. Now zoom out. Can you go out? Keep going out. Yeah.
That's it.
So this is where we're trading right now. It makes it, we're going to take in another 160. We've got the protection to the downside with those twin peaks. It doesn't look like it here.
It doesn't look great.
No, it works. It's weird though. It's not like adding it up.
But you could see this is not bad. Our P&L, because you could see this trade that we're putting on has a max loss of 2,600. But because of everything else we have, this here is only P&L at expiration 870.
Let's just keep ours. It was fun to add. I add to mine, but I use ratio spreads. It's weird when you have to buy something.
I think let's just keep it. This looks pretty nice.
Okay, we'll keep it. It looks pretty.
It's very pretty. Let's just keep this and natural gas. And on a down day, we could look to get back in.
Okay. Well, we don't have time. That we only have 11 days left. You're not. This is where we're at, and I'm fine with that.
Okay. So natural gas, but we butterflied the other one off. We have no more risk in there.
Yeah, great. And that's a nice feeling, isn't it? No more risk and locking in a profit, butterflying it off.
So I want to see. So all the stocks I just want to look. All the people that went over to China, are all these stocks down a lot? So Tesla's down 17. Apple's up 4. So Apple's up kind of like, and look at Apple. For a while, Apple wasn't doing anything, and now it's been on quite the tear.
Yeah, Apple and Microsoft are having a big reversal.
Well, if Microsoft can turn it around, that would be good. You know what is not doing well? We had all those, tens of thousands of call buyers in Ford, and it had that jump up yesterday, but it's right back down today.
You know what though? People could have gotten out.
Who knows? I mean,
that's what I'm saying. You take your profit and run like a thief in the night. I closed my Ford position and changed it.
We changed ours. We changed ours on the show. But let's see if the open interest is still there. Got 45,000 of the 15s. In the 14 days.
It was 200,000, remember? 220,000. So,
but I think that was collectively. I think that was like not just one strike. I think there was that many altogether. But look at all this action in the 15 level. 71,000 in June.
Yeah. Okay. Yeah. Remember Frank told us there was like a June roll.
Right. May, June roll.
Okay. Now let's take a look. Go to our position page and let's take a look at all of our at the monies. In the monies, not at
American Airlines. We bought a call and sold a put. So a combo. It's like synthetic long stock.
And both are in the money.
Well, yeah. Oh, because we have it's not the same strike. It's not a combo. I was going to say because the 12.5 put, we have the 12.5 put and we have the 12 call. I'm just going to close these.
Yep. And just buy a call.
Or sell a put, whatever we want to do.
Yeah. It's only 35 rank. We could just do another combo somewhere else. I don't really care.
Let's see. If in the 7 days, no, there's nothing. We'd have to go to 34 day.
Just sell the 12 put, call it a day.
Yeah, I could sell the 12 put. If we want more profit potential, I could sell the 13 put, like a synthetic.
That'll make me happier. Sell the 13, then we at least have $1 in profit potential. Yeah. And make sure you get out of the synthetic combo.
Sure. Okay. So now we just have this, like, it's a synthetic 13 covered call. And I'm curious, what's our order chain in American Airlines? Oh, and we're up a little bit.
Yeah, it hasn't really done much. It's kind of been sitting there.
Yeah. Okay. All right, so that's American Airlines. Next red in the money sign is Rivian, where we're just short 2 puts. Rivian has been a little bit of a dog lately.
I mean, I'm fine with still selling puts in Rivian. Let's just take those out in time.
Got it. We have the 15 and the 15 and a half.
There's a rally in the alley. Get your stock. SPOOs are only down 68.
Whoa. All right, I'm going to go all the way out to June and just sell. There's still 50 something cents in the 15. I think I'll just sell 215.
Sure. Do it.
We're taking a 55-cent credit for 215.
Sounds great.
Okay, that was easy. Those are easy rolls.
Yeah, the short puts are an easy roll, especially when something is so beaten down.
And SPY was a Delta Buster 31 days ago.
That thing. Just close it. I don't even, you know what? I don't even want to look back.
Well, it's trading $5.
Just close the one. Yeah.
Close this 501. $5 white spread closing for 501 costs us a penny instead of the exercise assignment.
Yep.
31 days ago. So we put it on right at the money. No, the call spread was out of the money.
Yeah. I mean, that's how much it's gone up.
Yeah. We're right around here.
That's how much it's gone up.
Huh.
So it's bizarre because this account was up on the day. It's okay to take losses. I mean, there's going to be winners. Every hand's a winner and every hand's a loser, in the words of Kenny Rogers, right?
And this, TP, we talked to TP about this. Do you need to make your money back in that product? The money doesn't care where it comes from. Like I lost on my AMAT earnings trade today, but I won on my FIG earnings trade. And it's like, am I diving back into AMAT because I have to be in it? No.
AMAT's only down $1.
Is it?
Yeah.
Well, how many things have we seen down in the morning, and then how many earnings have we seen they're down on the open and then up by the end of the day?
I mean, that hurts my heart because I took mine off and just sold puts. It's okay. I'm fine. It's fine. It doesn't hurt my heart that much. But you know what? Excellent segue though, too. Just so people are aware, Monday, TP will be joining me on the live show because Jenny's still going to be at college graduation.
Yes. I am. Oh, I've got boxes and suitcases and everything loading up into the car, getting ready to go because we've got besides go to 3 different graduation ceremonies, we have to move out.
Oh, yes. I forgot about that. You're moving out of an apartment, too. It's not like us. The dorm was easy. We threw everything in. It fits in the minivan.
No, we're moving out of a 4-bedroom house.
Yeah.
That we fully furnished. So
like I said, no pressure. But if you could put some pots and pans, maybe some silverware.
Oh, I've got boxes. I have boxes labeled for you, Liz. JD's future pots and pans. Silverware.
You don't need. I mean, that's really all we need. Pots. Just think pots, pans, silverware. That's it.
I already have the boxes ready for JD. I can't even begin to think about the move out, especially since my husband's just going to fly out of Cincinnati away from work. And it's going to be me and Lily trying to move him out of a house.
It's harder to move out of a house. That reminds me of when Annabelle and I went to Miami of Ohio because it was just the two of us and we put together a tailgate. We were like dock workers taking stuff in and out of the car.
Oh my gosh. Yeah. Oh, and it was raining. And honestly, tomorrow's 80% chance of rain.
Yeah. It's a good time.
So I don't know if I'm ready for this.
You got this. And those boys better be loading and unloading.
These boys, they were big cooks. So they have when the one kid loved plants, they have plants all over the house. They have herbs growing. The whole kitchen windowsill is herbs growing for cooking. So I told them, we're not taking it home, all these plants and herbs and everything. They've got grills. They've got patio furniture. There's so much stuff. There's no way.
No. No. Well, they'll figure something out. I mean, but I do think just put it by the curb. I think a lot of people will pick it up. Okay, but back to trading, Jenny Andrews.
All right.
Any other in the money signs?
We're done with in the money signs. Let's go into Twitter.
Okay.
So here we have Blue Wackadoo. Good to see you. Happy Friday. IVR is 40, whatever. Dogs and cats are living together. Tula Iron Condor.
That's awesome. So he's got 16 Delta and 25 with a free butterfly. It's 7,400.
Nice.
I like it.
Nice.
7,400 free butterfly.
Oh, that was Mikey yesterday. I'm going to go top down. TGIF, ladies, getting those can't lose P&L graphs. Yeah.
It ain't much, but it's honest work. Those are fun. It is really very exciting. And like I said, I look at it and I want to add to it. I want to add to the trees, but I get that it's hard in this account.
You know what's so funny? Like sometimes we do trades in the show, and then I forget it when I'm in my account after. I forget about them, and I'll say like, "Oh, I meant to put this on. I meant to put this on." I might start going to Liz and Jenny on the follow page while I'm in my own account and hit replicate this trade, replicate this trade, which is not hard to do. It's right here. If I go to follow these people,
not a trade recommendation.
Not a trade recommendation. It says it right here. This is not a trade recommendation. But if I forget to put things in, like, oh, maybe I want to put in, because I always do them, the Microsoft trade. Where is it? I'm just going to go here. That was a close. I don't want to go to the close. I want to go to the new open. Click on this. Duplicate this trade. It's in.
Are you going to do it again?
No, but this is what I'm going to start doing in my account after the show, because I don't have in all those natural gas. I forget about them.
Oh, I do. I have different ones though. Like I said, I love me some natural gas.
All right. So after that, after Mikey, Frank, this is coming from YouTube from DTAB. So what is SFO? S4. What is S4O? Please.
I don't know. Would someone speak on Nvidia crashing out today, and will Nvidia back bounce today or what? I'm also trying to understand options of Nvidia. Let's jump into Nvidia. We don't have an Nvidia position. I do.
NVDA. It's down 3%. Not really. I mean, crashing is not really crashing.
We can't call it a crash out, okay? We really can't down 3%. It's a needed move. It's back to where it was, I don't know, yesterday?
I mean, we could have called it crashing up. Crashing up.
Did he say crashing up or crashing out?
Maybe he said crashing up. Where is it?
Underneath.
Crashing
out today. Okay, it is down today, right? So we don't have an Nvidia position. Let's want to go to the trade page and see what we can do.
Yeah, I mean, it's tricky. I think in something like this, you have to, and earnings, their earnings are that late. I feel like
earnings are in a couple weeks. I did know that. And not a couple weeks. They're next week because this is 3 days.
So
they're May 20th.
Yeah, coming up. I think in Nvidia, I don't know. I think it's tricky. They said they're trying to understand options in Nvidia. It's tricky because it's moved a lot. It's hard to trade something that moves a lot, right? So in the last 2 weeks, it's gone up over $30 in 2 weeks, which is a lot. If you look at a 2 week move, it's going to have earnings priced in there, but 2 week move, its expected move is only 19. So it's gone 1.5 times its expected move in the last 2 weeks.
So, but it's an interesting question because you kind of we need more sugar on this, more details on this, because if you're trying to understand options, were you bullish? Were you bearish? Are you buying? Are you selling? Like that's kind of the problem here. If you're following the tasty mechanics, a lot of times we're selling premium, and this is not a premium seller's market. That straight up move with the implied volatility increasing as it's going up, it's acting like gold.
Gold, Jerry.
I mean, the actual metal. Do you know what I mean? So this is like, if you look at this, so we've been trading options for 30, Jenny and I have 60 years trading experience together. If you cover up Nvidia and you show me that chart and you show me that IVR, I would tell you this is gold or a metal.
Yeah. The way it's up and the way
that it's acting, right? So usually when you see a chart like that or a straight up move, you're going to see implied volatility that's dampened, not heightened.
Let's see what the skew is here. So I'm just going out next week because they've got earnings. So if I take the 230 call and I go up $15 to the 245, that's worth $340, and I'll go down $15 to there. It's symmetrical. They're the same.
It is symmetrical, but like I said, that the IVR of Nvidia is telling me it's acting like a metal.
And what's crazy is the expected earnings move is only $16, and it's moved $30 in the last 2 weeks. So these things are
today.
Wild.
Yeah,
Wild.
so it is hard. I understand where you're coming from asking about NVDA options, and I do think people that are newer to Tasty, I will say, if you've gone through the Tasty, the kind of not rules, but the loose guidelines of selling premium when IVR is high, it's real hard in this environment. You do have the high IVR, but you're getting non-normal responses to IVR.
So I almost think like in this environment, in my mind, for me, I'm not going to say, oh, I'm going to go the 34-day and sell a strangler, sell an iron condor. No, they're moving way too much. And the vol's not really predicting the moves. The moves have been greater than what the vol's been predicting. So I think it's like you almost have to trade them directionally.
Well, so right, but so the moves have been greater than what the vol is predicting, and it's still trying. It's like the traders on the trading floor, and they're still trying to get those moves up higher by increasing the implied volatility. So it's interesting.
Okay, I think someone else came in on Twitter on top. Hang on. Oh, the herbs growing in the kitchen. All right, Madalena G, question on your fig trade. Why does one want to pay less than half of the distance between the strikes? So, you know what? I'm going to pull up a durational diagonal, because in that scenario, you are paying more. You're paying more. So if I go to a durational diagonal, let's say an IWM, and I buy the at the money in July, and I sell the expected move in June. So it's, $278, $293, $15 wide.
You're paying
and
more.
It's still only half. You're not paying a third, you're paying half the width.
Yeah, so this is what we usually see. So this is an interesting thing. Durational diagonals, you're going to pay right around 50, maybe a little bit more. We understand that. The earnings ones are the ones that we say they're inexpensive when you're paying a third of the width. Can you do one in Nvidia? Because earnings are on deck, but do the earnings diagonal where you know what I mean? We've never done this, not the night of, but you'd sell
You'd be selling the 7-day.
I'm buying the 11-day, yeah.
So 245. And usually it's week to week, so you'd be buying the 14-day.
Oh no, we've been doing. You could try the 11-day too. I mean, this would be cheap. Yeah, here you've got a $15 wide. You're paying $5 for it. That's all we're saying is it flips your risk reward scenario, because you're selling that in these. The reason we want to have less than around a third is you're selling the heightened implied volatility. You're still buying a heightened implied volatility, but it's less than the one of the earnings move. That's why you should kind of have it be less than the amount.
I kind of decided though with these, if I'm going to go just 2 days out or 1 day out or 2 days out, if I'm going to buy,
do the week out.
I kind of just would rather do the spread. I'd rather do the spread, because what's the 1 day doing for me? It's just making me pay more.
Correct. No, just show how you can do the week out. It'll still be cheaper than.
Yeah, you got $15 wide for $6.
$6. You're paying an additional $1, but it's still not 50%. Like this is what we usually see. But it gives you a lot more profit potential. Here, you've got, $9 in profit potential.
Now, there have been times, and I can't think of when or what, but there have been times I've pulled up a diagonal and I'm almost paying the width of the diagonal.
Yeah, that's happened to me before too.
And then you're like, forget it, I'm not going to do this.
Yes.
Right.
Yes, that's happened to me before too. You do
because you want to know, if the stock goes up, your profit, the stock goes up wildly, the most it can be worth here is the width of that spread, maybe a little more, depending on how much longer your long is further out in time. So you don't want to pay $10 for something that can only be worth $12.
No, you really don't. It's kind of like I think it was, what was it? UNG. This was years ago, Jenny. So I'm really jogging my memory here. When we first started doing the upside diagonals.
Oh yes. And someone was doing them, and they were paying more than the width of the diagonal.
And you can, when you do that and you're paying more than the width of the diagonal, you can be directionally correct and still lose money if it goes up too far too fast.
I think
that's what we're trying to kind of eliminate, was the too far too fast. I don't want to place a trade with a directional assumption, and if it goes my way, I lose money. I don't mind not making money. There are certain situations where I say, okay, if it goes up, great. I don't want to lose money if it goes up too far too fast.
And oftentimes when someone does, if someone's doing longer term, let's say someone says, oh, I want to do longer term SPY. I'm going to go buy the Leap. I'm going to buy Jan. and that's going to be my leap. And then I'm going to sell short term against it. So here is a scenario where it is going to be, if I go the expected move, I've got the 745. I'm just going to keep math simple, right? 745, 765, $20 wide, and I'm paying $44 for it.
100%.
So this
You
is
could lose money.
if SPY like blows through all of these and is through this.
Yes.
It's like, I don't like this setup, but some people just want to put their long far and forget about it and then just keep selling the short term. I don't like that setup.
And so that's why in this situation, I much prefer using, and I forget who it was on Twitter, where they were using the zebra as your stock replacement, because that can't be too far too fast.
Right.
No matter what you do, like a true stock with a call against it, you're going to make money. Or a stock replacement, like a true stock replacement, which a zebra is, you're not going to lose money if it goes up. All we're saying, you can lose money if it goes down, but if you get your directional assumption, you can't lose money, even if it blows through it.
Right. So, all right, we have like 10 minutes to go. SPYs are down 82.
Yes, SPYs are down again. Okay, it's so funny.
I'm not going to be here on Monday. Is there anything we want to do or clean up?
What is profitable? That's what I like to do, because it's hard to with TP we place trades, but sometimes it's hard to be profitable. Natural gas we sit on, which is wonderful. I like that.
We put on the circle yesterday. We put in iron condor and circle yesterday. I'll take 25% overnight. It might be wide markets, but if I could get out for 140,
yeah, do it. Leave that in. I don't put a GTC in.
And the cryptos are all down. So let's take a look at our IBIT, because I know we usually. All right, we have a zebra, and we usually have jade lizards around it. I thought maybe with this down move in IBIT, it would be getting hurt, but no, it must have come off.
The jade lizard is off, but can you go back to the position page again real quick for me? I'm sorry. So I just want to assess this. We've got 34 days left in it. The jade lizard our zebra is just under where we put it on. So this is no harm, no foul. But let's put a premium selling position around it in the 7-day.
So with IBIT down today, if we do the 46, 47.
No, I think you got to do 50 cents. If we're going to sell a real put.
Oh.
And then just go to like the 30, 43 or 43 and a half. 43 and a half. There you go.
So it's just a little 50 cent.
$50. It's $50 every 7 days. I mean, otherwise we're longing again.
Yeah, got it.
Now, the other thing you can do is if you want to do a big lizard, go for it. I don't care, because then you can take more premium in.
45, 46.
That's not bad. I don't mind that either.
No, I kind of like the room, giving us a little bit of room, right?
Okay. Yeah, sure. These are same. Like,
why were we were doing $1? We were getting $1. Honestly, it's kind of weird. We were getting $1, and we were getting $1 on a put. Look at the rank in IBIT. It's only 22. Maybe it's not worth it.
Vol has come down.
Yeah.
I don't mind too. Sometimes when things get cheap like this, and if we're going to do 50 cents, and not that it matters, but sometimes I like to protect it instead of, because you got to remember, a jade lizard and a ratio spread kind of have the same parameters. You just want it to go up. If it goes down, you can make a little bit of money, but here you can't even do that. Even if I did a 50 cent wide.
When she's saying protect it, like put on this little ratio spread for a small credit. So if it comes down,
we make money.
We make a little money.
Yes, we have the capital to protect it for 7 days.
Yeah, and it'll get us double long, but if it comes down, we could make $100 on this.
Yeah. What did you just get filled in something else?
Just the IBIT.
Oh, I heard it twice. Okay, there we go.
And so I took off all of our winning trades, which is why all you see is red now, mostly.
And people ask us that all the time. They're like, oh, well, look at their accounts, all red. When we have a winning trade, we take it off. And then the rest of them, we give it the time it needs to possibly come back into the red or needs to be altered. What did we do in KTOS? I thought we took that off.
What is KTOS?
I'm sorry. It was something else. What was that weird earnings trade from?
Fig?
No, it wasn't Fig. It was something else that we got full profit in. Can you go? I'll look on our history.
Was it 2 days ago?
It was 2 days ago.
And
Klarna. Was it Klarna?
Oh, Klarna was up.
Yeah, we traded Klarna,
sold
right?
puts, and all we did in Klarna was sell puts.
Okay, that's what it was. But I don't have Klarna, and I didn't know what it was.
Oh, KLAR.
Can we look at the IPO from yesterday as well?
Oh, do you remember it?
No, but I'm going to go into Twitter and see if I can.
Here, I'll find it.
Okay.
Because someone came in yesterday. Oh, CBRS. And they were thinking
CBRS.
350. 350 for CBRS. And it's 294. So not good for the people
Wait,
who
can
bought
you
it
see
yesterday.
how high that got? Can you
386.
So it got up as high as 386 and it's 294. It IPO'd. Its original price was supposed to be like 180 or something. That's what the original agreement was. And then as soon as I remember hearing that, I was like, wow, okay. So it's still above what its value is.
It doesn't have options yet, but it will get them. So Cerebras. I don't know.
Yeah, but that's one of the first IPOs I've seen in a long time. And we're still on deck for a lot of good IPOs.
Speaking of, CoreWeave, we're usually in, and I don't think we're in right now. We're not. So CoreWeave it usually has pretty good margin in CoreWeave. So let's just say I look for a Jade Lizard here, 70 put, and they don't have dollar wide strikes.
So then if that's the case in here, just take it to the 75 and call it a day.
Yeah. 75 put for $1. It's only using $750. CoreWeave is usually pretty good on buying power.
Yeah. So then so you see what we did there. We were trying to get $1. You can either do it with 70 cents on a put and 30 cents on a call spread, but because we had to do a $5 wide, we're just going to bring it up to the 75s.
Mm-hmm. So and I just thought of it when we were talking about IPOs. This IPO'd last year. I think last year, maybe 2 years ago. Let's see, when was it? 2025, March of 2025. So yeah, a year ago.
Yeah. I know we are almost out of time, Jenny. I don't know if you have it pulled up. Do you want to try the most active real quick?
Sure. I do have it up. Let me see here.
And you have to refresh because I think you go up to that little, remember that you go up, refresh?
I know, Liz. But the Zoom was blocking it for a second.
Oh, got it. Okay.
I had to move it. Okay, so 7,500 is
Look
the
at that.
biggest.
So, yeah, 7,500 is the biggest call, and 7,400 is the biggest put, and they're both today's.
And there's actually more volume on the put today than the calls.
On the one put, but then you go down. It does look like calls.
Active.
Yeah, and the most active, it does look like that.
And look, NU was that was on the earnings list, and that's on the most active. New holdings. What did it do? It didn't do much.
Down a ton.
Well, from 13 to 12.
Yeah. 7%. I mean, I guess that's not, that's why, remember I was so mad when they put those percentages on there?
I mean, look at this 12 put uses only $239.
Yeah. Open interest, the volume.
I don't know.
It was, that's not the one. It was May 15th. It was today's.
Right. I was just looking at, and okay. And what I would like to see are equity options to see what equities are busy.
Nvidia,
Honeywell, SLV.
It's interesting to take a look at, right?
TLT puts.
SPOOs are down 90, Jenny.
I mean, I want a little bit of a down move. I want a little bit of a.
It's when we look at SPOOs down 90, right? If you didn't look at what had happened the last couple weeks, you'd think this was a bad move. This is a drop in the bucket right now. We need a little bit more follow through.
No, this is a drop in the bucket.
Yeah, we need a little bit more follow through than this, right?
I wouldn't mind. You know what I wouldn't mind happening is like
7,200, right? Something just a little bit lower.
And then we have a new range, and then we're just like bouncing around in a new range. That would make trading pretty easy if we started just having a new range up here, and that would be fine.
Okay, so we only have about a minute left. Take a look at the VIX, and then you and I are going to decide where we think today is going to end. Because this is my favorite part of the day.
All right, VIX is only 1850.
I know, that's surprising, right? SPOO's down 90, VIX is only 1850.
So it doesn't, to me, doesn't say this is the beginning of some kind of crash.
No, it doesn't. So where do you think we're going to end? Just in SPOO terms, like.
Oh, let's see.
So, like SPOOs are down 90. So where do you think SPOOs are going to down 90? Let's use it from that perspective, because that's what I always have on my phone. And when I look at it, I'm like, oh, we ended down
60.
Think we're going to be down 60?
I don't know. I don't think the VIX isn't saying that we're going to keep moving down.
You know what? I'm in agreement. Which means it's going to be one wild swing to the up or the downside because we both agree on down 60.
I don't know. Otherwise, I would think VIX would be at least at 19.
Exactly. And it's not.
So it's kind of weird.
Yeah, I agree. Down 60, which means that we're going to end unchanged or down 400.
I mean, what is this? The down 90? Again, it's a blip. It's where we were the day before.
It's a blip. All right, Jenny, good luck at Miami of Ohio. Congratulations on your recent college graduate. I cannot wait to celebrate with you when you guys get home.
Yeah, have a wonderful time at Annabelle's graduation. I can't believe both the kids are graduating the same weekend.
I know. It is nuts. It's nuts.
All right, everybody. Have a wonderful weekend. Remember to trade small, trade often.
Laugh with us, learn with us, and watch Liz and Jenny show. I'll see you on Monday with TP, ladies and gentlemen.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is so good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know what I know, it's time that I go, 'cause baby, your love is too good. Baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it, you're helping me through it. Baby, your love is too good. Touch me, hold me.
What's up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike, and it is a solo YOLO Friday. Market's down 80, NASDAQ down 400, Bitcoin down 2,300, ETH down 3.5%. You got crude oil back up above 100 in the N contract, and natty gas creeping up as well, which is good for our position that we've got. But yeah, lots moving here. Microsoft up 13 points. Love to see that into this market sell-off. That's really interesting, all things considered, with the NASDAQ down 1.4%. But seeing some single name stocks move and shake around here. And we'll take a look at the platform and walk through the entire portfolio from the follow page today. So if you have any questions or comments on any of the trades that I have or any trades you're looking at for this week, that's only a few hours left, but into next week, we've got Nvidia earnings next week. That's going to be awesome. Could be a market mover for sure. But yeah, let me know in the YouTube chat if you want to join me there. Just pop over to the Tasty Live YouTube channel. You can put in your trade ideas, questions along the right-hand side chat. I do have the PDT rule elimination article that we put together linked in the YouTube chat. It's pinned at the bottom of the chat. So if you're looking for more information on how the PDT rule going away will change, it's ultimately being replaced with intraday margin standards, which basically just means you have a lot more flexibility. There's no more 25K minimum. There's no more day trade calls. There's no more starting day trading buying power. All that stuff is being replaced with the new intraday framework, which basically just says, if you close a position to free up some cash, then that will be realized or be accounted for right then and there, as opposed to waiting an extra day and all these things. So it's going to be great for the active trader, especially those with accounts under 25K, because now you are not at the mercy of the pattern day trading rule. You can manage risk, close risk, exit positions. You don't need to hold anything overnight anymore. You don't need to add more contracts to offset risk. We talked about that too. Like if you had a put spread, you could technically box it off to free up the risk, but you're just, adding more positions and it's not as clean as just getting rid of the position. So June 4th is the day where that will take place. You don't have to do anything on your end. It'll just happen automatically. Tasty Trade will be ready day one, and we're excited for it. Can't wait. But yeah, let me know if you have any trade ideas, questions in the chat, and I'll get to them shortly. But how's about we talk through some of this portfolio here? So MES Strangle, we can start there. So MES Strangle working marvelously. And this is really just a proof of concept that we went through with last year's IBIT strategy, where if you have the ability to sell premium in an underlying and keep selling that premium for an entire year, eventually you will end up with a ton of premium and really wide break evens beyond your strikes. You can manipulate risk completely. And that's what I've done with this MES position. So at the beginning of the year, I should say at the end of last year, into a pretty big sell-off, we entered into this position, the 6,600, 7,100 strangle, collected 93 points. So what's really fun about this is like the MES contract is small. It's a $30,000 notional value. Takes about $1,800 in buying power to hold that risk. But these credits, if you were to extrapolate this to SPX, a one lot in SPX, this is $9,300, 93 points. This is $4,700, $4,750. So the P&L on this position, if you were to extrapolate this in SPX, if you were to just do the exact same trades that I've done, you would have already collected $53,000. You could close the position for $28,000 right now. So you're basically sitting on a 20K winner, even with the craziness that we've seen with the market selling off and then rallying and now selling off today. My whole thesis and my whole position with trades like this is just to never have upside risk, because we see time and time again, like even after a 10% sell-off, 15% sell-off, the market has a much higher probability of recovering over time. So I want to account for that. I want to make sure that my put is in the money, never my call. And if my call does go in the money, I can make that manipulation and just roll the whole thing. So moved from a 6,600, 7,100 strangle from Jan to Feb, moved it up a little bit because I rolled into a new contract. I then closed Feb, rolled into March, and that was just a straight up roll, used the same exact strikes, picked up another 54 points, went from the 6,650, 7,200 strangle at the end of February. So this is where things started getting a little wild. Rolled that out in time from March to April and up 50 points. This one actually I rolled into a new contract from the H6 into the M6, and then into the sell-off when it started happening at the end of March here. Rolled the 7,250 call down to the 6,900. So I rolled it down a bunch, picked up some more premium. So I was sort of under hedging my in the money short put at that point. And then I ultimately rolled from April to May in the M6 contract still, bought back the 67, 6,900 strangle and rolled to the 6,700 straddle. So this is when the market was selling off. Picked up almost 100 points there, almost 10 grand in SPX equivalent value. And then we started to get that rally. Early April, we went from the 6,700 straddle, moved it from May 15th to the end of May, staying in the same contract, the M6, and rolled it. This is a delta roll. This is what I was talking about, never taking upside risk. So moved it from a 6,700 straddle to a 7,100 straddle and moved it out just a couple of weeks, picked up another 30 points. And then the market kept ripping. I was tested again on the upside in the 7,100 straddle. So I went from May to June, still in the M6 contract. That was April 17th. Went from a 7,100 straddle up to a 7,400 straddle. So you can do literally whatever you want with any position, especially undefined risk. So if in this case, the 7,100 call was in the money, again, I don't want any upside risk. So I just shifted my short delta into bullish delta in the same contract. And I literally just bought back the 7,100, moved it out to June to pick up some more premium, but created more wiggle room there. And then the market just kept ripping. At a certain point, maybe you would start to lean short delta. But again, my whole thing is never taking short delta on this position. So I went from a 7,400 to a 7,600 straddle in the same exact expiration. This was a straight up delta roll. Picked up a little bit of value, but it was basically just a delta adjustment. And now we sit with the 7,600 straddle. We've picked up 534 points. So again, 53K in SPX equivalent. And that means my downside break even is at 7,100 and my upside break even is at 8,100. Crazy. And some change because we got a little bit more than 500 points there. So big wide range to be successful now. We can absorb a ton of variation and volatility. And because I picked up so much premium, I have a straddle at 7,600. But if I really wanted to, I could go 100 points, 200 points, 300 points, 400 points inverted if I want to. But I'll probably just keep it as a straddle because, again, the further we fall, if we do fall, I want to make sure that any rally and reversal, I'm getting all that value back. So I'll probably just roll this out in time. We're getting pretty close to the 21-day mark, but looking at the extrinsic value here in both of these contracts, there's about $300 of value of extrinsic value that's still left to decay. So I'm just going to hold on to this even into this sell-off. You can see it's not really moving too much. I'm losing 70 cents today on this 80-point sell-off. And that's largely because the extrinsic value loss is offsetting my intrinsic value loss here on the put. So yeah, great trade. Love it. And this will be a core position that I have at all times going forward, just because similar to iBit, like we're just picking up so much premium. We've collected a lot. It's a $1,200 winner right now with just one contract in MES. And we've got another half year to go and more. So very excited to see where this ends up. But again, the nice choppy market we've had in the first couple months has really helped pick up that premium along the way. So that's that. Micro natty gas. So I got into this a couple days ago here, and into the sell-off, I just bought the MNG position straight up. It is a $2,900 notional value product. And the NG contract, I sold a little premium against it. So basically just using two products. MNG is 10 times smaller than NG. So I realized, if I sell this 3,305 short call spread, even if we get up to 3,305, both of these are in the M6 contract. They're moving in lockstep here. Even if we get up there, I will have a couple $100 of a win on the static contract that would offset a lot, if not all, of the risk here on the upside. So it was just a way to pick up $100 and offset or underhedge some of that downside risk in MNG, the contract that I'm long. AMAT. Oh man, this was a 1 day shot trade. We put it on yesterday on last call. AMAT sold off about 1%. And this was just a really small $1.40 risk. If we got any kind of rally above 460, there's a 15-point wide butterfly. So that just goes to show that this was only $1 for a 15-point wide butterfly. AMAT's implied volatility was through the roof yesterday. And we're kind of rallying up here. Got as high as 440. But again, with this position, we need this up at 460. You can see all these are worthless. I'm not going to close it. Pending a miracle, this will just be a $140 loss, unfortunately. But super small risk. That's what we wanted to do for a 1 day trade anyways. Just keep it real small. Costco. This has been a fun position. I'm going to jump from Costco to Nvidia also because Costco, I really love these setups where we got into this position. It was a long June, short May, 1100 strike calendar spread. And we knew that selling the May 22nd cycle, this cycle right here, the 7-day, was before the earnings announcement. You can see there's a 24-point implied move there. And then you jump 1 week later and there's a 46 implied move with a big implied volatility boost. And that's because earnings are in the May 29th cycle, which is what I rolled into. So I knew that even if Costco had sold off from when I entered this trade, I would be able to roll just 1 week out and pick up a ton of premium. And in this case, the trade is a $400 winner right now. I intend to hold on to this, but if Costco rallies up to 1100 before earnings, I'll probably just close it and then get into something new, simply because your max profit at any point in time on a calendar spread is when the stock is at your short strikes, because this is a pure extrinsic value trade. There's no intrinsic value profit potential on this trade. So your best case scenario at any point in time is if Costco is at 1100. So if we get there before earnings, I'll close it. It'll be a big winner. But right now, as you can see, started with $500 of risk, rolled into the earnings cycle, into the rally, reduced my cost basis from $4.90 all the way down to $1.70. So if we look at this from an analysis standpoint, I have a ton of room for this thing to work out simply because my cost basis is $1.70. And even if Costco sells off after earnings, you're going to get a big vol crush in the short option. And as long as my long call has $1.70 or more, I'll be profitable on this position. And right now it's trading for $1,200. So big wide range to be successful here for earnings, but best case scenario is a rally towards 1100 after earnings. This could be an absolute home run position, but lots of wiggle room there simply because the debit is so low. So I'm going to hold on to this position and see if we can get a little more out of it. CoreWeave, 150 strike call, worthless. That was from a trade gone wrong, likely an earnings trade gone wrong. IBIT, this was my year-long trade from last year. And if we look at the order chains here, you can see last year made a ton of adjustments, started with a 50-65 strangle, rolled, kept rolling, just manipulating it, never took upside risk. Same story with MES. I was always just moving it up and up and up. And then I finally ended with a 65 put that I took shares on. IBIT's at 44. However, along the way, I picked up $3,100 of extrinsic value. So even though I took shares at 65 because I was moving my strikes up and up and up to follow the price of IBIT, I collected $3,000 and change. So my cost basis and break even is down at 35. So we are profitable on this position. And I wanted to have a short call against it. So what I did was when IBIT was hovering around 40-ish, I entered into a 41 short call, sold that for $1, and then that got tested. So similar story, bought back March, rolled it to April, moved it from 41 up to 43, picked up a small credit, and then moved it down from 43 to 42, going from April to May for $1. Then moved it from 42 to 45 into the rally in crypto for a 25-cent credit. So this was not a credit that I was seeking. It was the space away from the current stock price. So I moved from May to July, 42 up to the 45 strike. So that frees up $300 of profit potential on the shares. And then IBIT kept ripping. And I was like, you know what? Normally I don't go this far out in time, but my whole prerogative on this trade is to just free up as much upside room as I can with this short call that I now have against my shares. So I bought back July, rolled it to December, long-term trade, but I moved it from 45 all the way up to 55, and I did that for a 30-cent debit. So ultimately, started with a 41 strike call with $1, ended up with a 55 strike call all the way out in December with a total credit received of $221. So I've doubled the premium that I initially collected and freed up another $1,400 of profit potential on the shares. And yes, this is going to be a slow-moving trade from here on out, but any chop around this price point, 44.80 or above, we're going to be good. And again, my break even is down at 35-ish, a little bit better actually because of the premium that I've collected with the short call. And if we do get a sell-off, let's say from 44 to 35 or 30, this call, even though it's further dated out in December, it's still going to lose all of its value. It's going to go from $3 to, let's say, $1. I could then buy it back, bring it to a near-term cycle, start the process over again, start selling a call near the current stock price. But my intention will always be to buy back the call if it's tested, roll it up and out, and keep doing that to alleviate the pressure on the shares. So it's been a great trade. This P&L open is misleading because it reset after I took the shares, but this is a great trade overall, and this is kind of like a 2-year long trade now. But MES, IBIT, Jamal has won an MNQ. We're basically just selling premium on both sides and just eliminating upside risk at all times. And so far, it's been a nice trade. Iron, got this yesterday from the YouTube chat. Shout out the YouTube chat. I'll pop over there in just a second. But yeah, this was a stock that Ryan Grace had brought up. Iron and Wolf, if you look at TerraWolf, both of these products have ripped from the teens up into the 20s. Iron was in the low 30s up to the 50s and 60s. Both of these were crypto miners turned data centers, ultimately. So the market has liked that so far, but plenty of premium here. 100% IV, even with an IV rank of 43, you still have 100% IV. So that goes to show how high implied volatility has been in here. And that means there's plenty of premium here. You can sell something against a long. That's exactly what I did. So the YouTube chat person that suggested this trade, it was a 60 strike August call, and then an 80-100 crab component where you're selling two 80s, buying one 100 strike, and that is out in June. So this is also a position where max profit is pretty heavy up here at 80, but any rally above 60 and this thing will be good, especially if we look at the analysis tab and we push this out in time. If we go to June 1st, you can see you got plenty of profitability up here if we get a rally anywhere in this range. So I like this trade for a debit risk-defined trade with a lot of upside profit potential where you have a ton of implied volatility, which allows you to get into a 20-point wide crab trade for less than $10. Microsoft up 15 points today. What's going on in Microsoft? You love to see it. If you are a Microsoft bull, I'm just going to see if there's any news that has come out here. Looks like there's some disclosures of big wealthy people having positions in Microsoft. Okay. We sold Google and bought Microsoft. Okay. Cool. Great. Yeah, I mean, it's easy to get wrapped up in the narratives of some of these stocks, but at the end of the day, Microsoft is a Mag 7 name that has not participated at all in this recent rally. It did rally from the low of 350 to 425, but as you can see, like if you look back from last year, the stock had hit 550 twice, sold off from there. But if we get back to 550, this still has a lot of room to grow. And my favorite part about Microsoft is the implied volatility is super low. So if you believe that Microsoft can have a nice rally, like look at this rally we're seeing today, up 15 points, and the 30-day implied move is only 28 points. So we're actually exceeding next week's implied move, 14 points in just one day, a couple of hours here. So seeing a big move here, good for anyone that bought the Microsoft dip. We'll see if it holds or if it continues. That would be great. So we've got the 500 strike calendar spread here, and that's working out nicely. This one's a really long-term one. So this is another thing that's interesting is like the further a Mag 7 or really any stock that you think is going to recover goes down, the more inclined I am to get into longer-term positions and kind of just remove my trying to time when the rally is going to happen. So that's what we did with this long-term position. We got into a 500 strike call calendar spread, long January, short September, and we got into that for $5.80. So this is a really high conviction, low risk from a debit perspective for an entire year. Paid $5.80. It's trading for a $500 winner right now. But I want to hold this because we've got plenty more time. We've got a couple more earnings announcements in this calendar spread. So yes, it's up nicely, but I think if we continue to see this rally, this could really come in. And 500, again, is not even near the high. It's where we sold off from initially. So we'll see. Maybe this top end range here, we can get a little more juice out of it, but we'll see. I do have this position on though. This one I'm much more inclined to close earlier. We're seeing a nice rally here. We're in the money now. This was a long July, short June, 15-point wide diagonal spread that we bought for $11. This one I will close. And really the reason is because the actual risk here is significantly more than the 500 strike calendar, because the 500 strike calendar is all the way out in January of next year. This one is only in July. Now, July is still plenty of time for things to work out, but near-term trade, plus if we get another move like this is going to be a $1,500, $1,600 risk trade that I still have on. So I don't want to let this thing get too out of control in terms of the value of it. The calendar spread is up more, but it's still worth less than the debit diagonal spread here. So I'll close this diagonal spread first, especially if we get a continuation of this rally here. Netflix, long call gone wrong. This one was from a calendar spread, I believe. Diagonal spread. So this was an earnings trade, long June, short the 1 day. $4.65 debit, and Netflix tanked. So we're just holding on to this. 34 days left, 110 strike. It's trading for 15 cents. Not probable that we'll get a rally up to 110, but hey, we just saw a 16-point rally in Microsoft into a big market sell-off. So that's another thing about Microsoft. The fact that it's up big today into this red day in the NASDAQ, I think is a good sign for if the NASDAQ reverses, you could probably see more get out of Microsoft. But yeah, Netflix, nothing to do here. It's worthless. We'll see if we get some value on a rally. Nike, this is another example of the stock is at decade lows and implied volatility is pretty low. So here we are at 42 and we haven't been here since 2015-ish. So went all the way out to January and just bought the 60 strike leap. It is a 2028 leap. So again, you can get into some more near-term stuff, but it was a $500 debit. And my thought is, would I be surprised to see Netflix or Nike get to 60? That's all I'm really looking for. It's just a move from 42 to 60. If that happens, this option will be worth $1,000 or more for sure, considering the 40 strike is trading for $1,000 now. So this would probably be trading for $1,500 if you just extrapolate 40 into 60 is a 50% gain. So let's add 50% to this call option. If it happens in the next couple months, it'll probably be trading for around $1,500, probably a little bit less. So we'll see. But it's still profitable even right now, just by a hair. And I got into Nike this call when it was a little bit low, a little bit higher, I believe. Maybe implied volatility is expanded in there. Silver selling off pretty big today, unfortunately. But this is another one where started with a strangle and couldn't have timed this any worse. The entry point here. I sold the strangle on this day, this green bar. Sold the strangle, said, hey, let's just capture this premium, and then bam, dropped from 110 all the way down to 60. But the good news is we collected so much premium. The 87.210 strangle was an $8.60 credit. So that's one of the reasons why I really liked that trade, because I knew starting with $8 gives you a lot of flexibility, especially because silver had such high implied volatility. So we had collected $8 and change, kept rolling, rolled the call down, ended up with an 87 straddle after a couple more rolls. But as you can see, picked up a lot of premium here. And we have $20 of premium, $2,000 of premium against an 87 straddle. So my break even is right at 67. So we're right there. Unfortunately, this move took out a lot of the extrinsic value that was in this position, but still profitable overall. And we'll just be rolling this thing around the 21-day mark. I will keep my eye on the short put extrinsic value, because assignment risk in the short put is starting to get pretty real, just because anything less than, let's say, 50 cents, you have just a higher probability that someone would exercise the option to get the shares if they want the shares. So if this drops down to like 30, 40 cents, I'll just make the roll out in time. But I can go from June to July here and just keep the same strikes and pick up a pretty decent amount of premium. $2 right now, even into the sell-off where I have really high delta options. But this will prevent assignment risk. But I'd rather do this roll into a rally. This roll the other day was trading for like $3.40. But still thought it was a little too soon to go to July. So we still have that in our back pocket. We'll see what happens with silver. Oh man, SMR, 100 shares, got whipsawed here, sold the 40 put in SMR. And I was like, oh wow, I can pick up $5 to sell this 40 put. Why not? And then SMR is now trading at 11. So unfortunate move there. Pretty decent loss for 100 shares here, but I will hold on to these shares. We saw this thing get as high as 60, so maybe we get a little juice here. If we can get up to 25 or 30 over however long that takes, that will enable me to sell some premium against it. I guess technically I could sell some premium against it now, but I'd rather not have the 75 cents selling the 13 strike just in case something happens and there's a huge rally in this thing. I don't want to get caught since my basis is at 35. Snapchat, similar story, 100 shares. I think I sold a 10 strike put or 11 strike put. Yeah, and took the shares there. So we'll see. Maybe there's a buyout. That could always happen. But $5 stock, $500 left to lose if it goes to zero. We'll see what happens. SPX. This SPX position is expiring today, unfortunately. It was an iron condor, a neutral iron condor that I put on with the intention, of course, to extract some value out of it. But the more SPX rallied, the more this just became a bearish hedge on the portfolio. So that's how I'm operating these days is I'll put on this neutral trade. This one is also in the money, but about to be out of the money if this sell-off continues here. But yeah, neutral trade, trying to extract some value, but I have all these other bullish positions that I'm placing in single name stocks. So if I'm able to take off winners there and have this iron condor on that's in the money, currently this one is trading for $1,300. If we get a sell-off below 7,400, this will be a $1,300 gain back to the portfolio if it expires out of the money. So this is now a downside hedge, very slightly. Same thing with this butterfly. Pretty big downside hedge. 2 weeks ago, though, we would need a big washout in this market for this to come into play. But this was a 100-point wide butterfly that I rolled the long put up in to just give myself a lot more bearish delta if we did get a sell-off, because now I don't have a 100-point wide put spread against a 100-point wide long put spread. I've got a 25-point wide short put spread against a 100-point wide long put spread. So big hedge there. If we get a massive sell-off, this will hedge the entire portfolio because it's like a $7,500 max profit if it's in the money. And then this one is the new neutral iron condor, 7,600. And we'll see what happens with this one, 33 days out. But yeah, any sell-off below 7,400, this iron condor and this iron condor would both benefit. And that would hedge a lot of this portfolio for sure. Under Armour, 100 shares, nothing to do there. And USO, unfortunately, did not get the reversal in oil. This thing is just sky high at 150. And USO is certainly benefiting from the backwardation that we still have in crude oil. So USO is a fund that uses crude futures to create its returns. So crude oil is right now has a 5-point backwardation. It was as much as like 15 points back in the big oil rally. And that's what created this USO gap higher. It's very similar to a volatility product like the VIX or VXX, UVXY. When you get into a big backwardation, those volatility products tend to have the ability to explode because in USO, when they rebalance based on their crude oil futures exposure, they're selling out of 100 and buying 95. They're selling 95 and buying 91. So they're getting so much more delta exposure with the same amount of capital, and any rally in crude oil, it just sends USO through the roof. So that's what you saw here. And until we get the backwardation out of crude oil, I would not expect USO to drop like a rock. I think it'll still chop around here. But I was playing for, just a downside trade here in USO, longer term. But yeah, if we do get the backwardation out of the crude oil futures, USO will sell off closer to 90, and we'll see if that happens in the next month. I doubt it will, all things considered. But that's that. That is the full portfolio overview. Hopefully that is helpful for anyone that's been watching the follow page or checking it out. But yeah, you can find all of our trades on the network on the Taste Trade follow page. You can filter for my stuff. I put comments on almost all of these trades. I like to keep track of my cost basis and just throw it in here. So almost all of these, I'll have a comment, even if it's just a short one. So check them out. All right. Pop into the YouTube chat. Thanks for tuning in. Let's see what you got. Am I holding my SPY called Brooklyn Butterfly? Thank God it's Friday. Indeed. I do not have a SPY called Brooklyn Butterfly. Maybe it was someone else. But probably, yes, if you had a Brooklyn Butterfly on the call side, making it a symmetrical butterfly for a scratch into a sell-off today is a great move. Free up that buying power and free up that risk. Does that mean that zero-day trades are margined at overnight rates from the start? I assume you're talking about the intraday margin rules. that replace pattern day trading. So the buying power on short options shouldn't change too much, I would imagine, but don't quote me on that. But yeah, 0-day trades, if you have a spread on or something like that, it'll probably still be the max loss. If you're like selling a credit spread, it would likely still be the max loss there. But it's more about just having the ability to close positions to free up capital, and you can utilize that capital to trade right then and there. The starting day trading buying power rule, where if you had 50K, but you were using 49K in positions, your starting day trade buying power was only $1,000 for the next day. So if the next day you closed a position for 10 grand and then you started trading that 10 grand, day trading it, you would have gotten a day trade call because you would have exceeded your starting day trading buying power. So that rule is going away on June 4th. And it's becoming a really seamless thing. Ultimately, if you have options buying power above 0, you can use that to day trade. There's no restrictions around it. On the tastytrade desktop platform, rolling up a short put, keeping the same expiration, will the credit be added to the original put credit? It depends on what you're looking at. So on the platform, if you want that credit to be added to your overall position, you need to group by order chains. If you group by symbol, you will see a different value here, because group by symbol just means you've got your positions in the symbol. And if I make an adjustment to a trade, the P&L resets because I'm opening a new trade. I'm closing the old trade, opening a new trade. So the symbol, group by symbol, will only show you the existing position here. If you group by order chains, now it will bring in all the premium you've collected or adjust for your actual cost basis. So you can see here, I've got group by order chains. My Costco position has a cost of $1.70, which is exactly what my cost basis is after I made the adjustment a couple days ago. So bought this for $4.90, made the adjustment for $3.20, difference is $1.70. So now when I look at this P&L open, it is reflective of the adjustment that I made. So again, if you want to see your positions in real time after you've made adjustments, you need to group by order chains, and it will show you that. If you roll a put up, it will account for that in your new cost. So I would also make sure, if you don't have your portfolio like this, I've talked to some people that don't have their portfolio listed like this. I have, the way that I like it is probability profit, IV 5-day change to just kind of bring your eyes to changes in implied volatility, extrinsic value to see if anything is getting close to 0. Like if I know I have a debit trade or maybe I have a short option that's in the money, if that extrinsic value gets low, then I would be at assignment risk, stuff like that. But definitely have this. I like to have cost, which is your overall cost on the position. If it's a debit, it's red. If it's a credit, it's green. Net lick is the current value of the position. So cost, my Costco cost is $1.70. If I sell it for $6.05, then my P&L open is the difference of $4.35. So cost, net lick, P&L open, P&L day. Of course, P&L open is your overall P&L on the entire position, and your P&L day is just for today. So if you don't have these 4 next to each other, I think you're doing yourself a disservice and you're making your trading a lot more difficult than it needs to be. But yeah, cost, net lick, P&L open, P&L day, you can see exactly where you stand in all your positions. My AMAT, poor man's covered call, pulled 15% overnight, closed on the open. Nice. Yeah. Yeah, this is a pretty neutral move. Unfortunately, this was a 1-day trade where it's like a make or break type trade. But if you had any short premium here in AMAT, you can see in the 1 day, even in June or July, you're going to see red numbers across the board here in the net change. Tons of extrinsic value collapse here in June. And of course, same with the 1 day. Look at all that value. $1,500, $1,200, all gone to basically 0. So yeah, that's a nice little trade there. Let's see. Compare the MES year long to the 42 in, 21 day out MES strangle where you can recenter each month. Yeah, you could do that. However, if you had done that this year, you would have deep in the money calls because you wouldn't have been making delta adjustments. You would have just been doing time-based adjustments, which can be good for mechanics' sake. But if you're trying to manipulate a single position, you would have to make adjustments based on the market. So like that mechanic, getting in at 45 days, getting out at 21 days for whatever the P&L is, and then just recentering the strangle, that is a mechanical strategy where you're not looking at the price. But that also allows you to take on a ton of delta risk without making any adjustments. So like the MES position, let's say you recentered like down here, from this point where we're at 6,600 all the way up to 7,000, this is only a week or two. So you'd be taking on a ton of risk on the call. Your put would have been worthless, and you would have just been like kind of waiting until the market sold off. Where I'm kind of blending both, where I'm not taking on any upside risk. I'm moving the strikes up, manipulating the strikes up and out. Of course, if we get closer to the 21-day rolling period, I'm going to roll these positions, just go from June to July to stick in that 30 to 60-day window. But delta will always be your biggest driver of P&L. So with that in mind, I don't ever want to have short delta in this portfolio, in this MES position, I should say. So just been making adjustments that way. And I would venture to assume that my adjustments, because I've been eliminating the upside risk into this crazy rally, I doubt the other strategy where you're just closing the strangle and just selling a new one would have outperformed, because you would have had a ton of upside losses that you'd be harvesting. What do we got? Microsoft is the new VIX. Yeah, seems like wherever we're green, Microsoft's red, and vice versa. Yeah, crazy move today, but yeah, I think it's this Ackman announcement, new position in Microsoft. I mean, yeah, eventually I think we'll recover. Maybe we don't get back to 550 for a while, but I think there's room to grow, especially if you get a rotation out of some of these hardware names into software names for whatever reason. It's always possible, for sure. Let's see. Microsoft might break out. That'd be great. Put on a new Microsoft call diagonal, fingers crossed. Yeah, even into a rally like this, like, of course, it's better to do it into a sell-off and then you catch this rally. But to your point, like, if we're getting a 15-point rally today and the E-minis and NASDAQ are red, pretty red, could you get a continuation on a green day? Sure. But just keep that risk defined, which it is in a diagonal spread, and make sure you're comfortable with it. If I do a wheel strategy with ZB options with the June expiry, I can be delivered a basket of bonds if I hold ZB futures June contract, right? I'm pretty sure it's cash settled, but that's a great question. Wow. Look at that. Wow. What's going on with these probabilities of interest rates? Are we getting a hike sooner than later? Wow. 20% probability that we get a 25 basis point hike in September. 30% probability in October. 40% in December. So an interest rate cut is basically off the table if you go out to the December CME FedWatch tool. Crazy. And they're pricing in a potential for a 50 basis point hike. Things are wild. Things are wild, people. But yeah, if you're in June, I believe, so yes, the option will settle. If you're in the money, this option will settle to the contract itself, but I believe it is a cash settled instrument. I'll see if I can find out real quick. Oh, wow. Looks like they are physically delivered. Interesting. Could have sworn they'd be cash settled. But so yeah, I guess if you want bonds, you can get them. You can get them. Diagonal versus calendar. Can you please elaborate? Sure. So we can take a look at Microsoft. So a calendar spread is simply a position where you are, maybe this is a bad example because the losses up here would be, there are losses up here, but we're cut off because the strikes aren't available. But basically, a calendar spread where you're long one option, you're long one call that gives you unlimited upside profitability. You're short another call in a different expiration that gives you unlimited loss possibility. Both of these are offsetting in terms of intrinsic value, right? Because if you get a long call and you're in the money, you would make the equivalent of 100 shares of stock. If you get a short call that's in the money, you would lose the equivalent of 100 shares of stock from an intrinsic value standpoint. So they wash out. So an extrinsic, a calendar spread is a pure extrinsic value trade because, again, if you get an in the money move up to 550, 600, 650, you start to take losses on this calendar spread because you are losing extrinsic value as you get further and further in the money. So calendar spreads, they are cheaper than diagonal spreads because you don't have any intrinsic value profit potential. A diagonal spread is where you have the same sort of calendarization of the options where you are long a longer dated one like I am. So in Microsoft, I've got long July, short June. But as you can see on this risk graph here, I have intrinsic value profit potential. So I'm basically buying a vertical call spread, but I'm calendarizing it by pushing the long option out in time. So buying July instead of June means I can make money on my long call, I can have the short call go to zero, and I can make money on both of these legs. I'm also taking advantage of the near-term implied volatility that we're seeing in Microsoft. So slight bump to implied volatility, but you can see here, 27-point implied move for 30 days and only a 38-point implied move for 60 days. So if this implied volatility or these implied volatilities were linear, you could just double this value. You'd have a 56-point implied move 68 days out if you double the time, right? You're not seeing that. You have way less of an implied move relative to time against the June. Again, if you had 34 days and you were looking at a 68-day cycle, twice the amount of time, and implied volatility was linear, you should expect to see 28 times 2, 56 in the implied move here, which you are not seeing. So I really love diagonal spreads and calendar spreads because you take advantage of the short implied volatility that's heightened, you inventory longer term delta that has a slower decay, and you give yourself the ability to make money on both, right? Because if Microsoft goes to 430 on June 18th, I'm going to make money on this long call, and this short call that's currently trading for $1,100 is going to go to zero. I'm not going to hold it for that long. If we get another nice rally like this, I'll just close this position. But again, the risk graph here, as you can see, you have no risk to the upside because you have $1,500 of intrinsic value profit potential, and I paid $1,100 for this trade. So that is why you have this, $400 in change of max profit here to the upside. And that's why I favor diagonal spreads if you're leaning directional, just because you don't get caught with losses if the move is too great to the upside. Retail earnings, how are you positioning for that? XRT, I am not trading any retail earnings other than Nike. I just have a leap there. But yeah, if you're bullish on retail, XRT could be the way to go if you're trying to get an exposure to a basket of underlyings that are announcing. But this is another one, like I would probably go to a diagonal spread or calendar spread. You've got 26% implied volatility, super low. You could do something like an 80 call and like an 85 short, something like that, and reduce basis while still giving yourself some nice profit potential to the upside. How do you decide when to buy the dip? Or is it just as long as the VIX doesn't go into backwardation or sell off? Yeah, great question. I think if you are trying to buy the dip, if the VIX is in backwardation, so that is a great call out. Like right now, the market's selling off, vol's ticking up just a little bit, but we still have $1.20 of contango between the M and the N. You've got 40 cents of contango between the N and the Q, another 40 cents between the Q and the U, and 60 cents between the U and the V. So we are in contango across the entire curve here. So this sell-off doesn't spook me yet, but if it continues, if we get another 100-point sell-off on Monday, 200-point sell-off on Tuesday, you will see the vol future flat, the curve flatten out. Contango will probably go away. You might tick into backwardation, and that's where you have the door open for a greater move to the downside. So to answer your question, if I'm trying to buy the dip right now, I would say I'm okay with buying the dip right now because volatility is not really moving and you're getting a pretty decent sell-off without the pairing of a vol increase. But if you're looking for a bigger macro dip to buy, you would want to see backwardation. And in which case, if you see backwardation, you probably do nothing and wait for the market to tumble. And eventually you have to kind of step in, right? Because like SPX, we saw this, we were down at 6,300 and then boom, 2 weeks later, we were back at 7,000. So eventually you kind of had to be like, okay, we're down 20% in the S&P 500. We're down 30% in the S&P 500. Historically, we've gone down as much as 40, 50%. So we're getting pretty close to that. And maybe that's when you start to layer on some positions to the upside, but you got to do it in a risk-defined way, I would assume. Or if you're doing undefined risk, maybe you're selling puts in SPY, something like that. But that was what I did with Microsoft, right? When we put this long-term calendar spread on, this was, when did I place this? Let's see. 500 strike calendar. Yeah, so it actually was a little bit of a diagonal spread. No, I'm looking at the wrong thing. Where are we at? Here we go. March 25th, I put this long-term calendar spread on. Where was Microsoft on March 25th? Here you go. March 25th was right here. There you go. So I almost caught the bottom here, but this was like, I was like, okay, this is just too much selling. This was like 2 weeks straight of selling from 420 down to 360. So I was like, okay, I'm going to step in here, put in a long-term position and play for a reversal to the upside. You could do a very similar thing in SPX. And coincidentally, I did have a position in SPX that I just luck boxed out of. I mean, I ultimately had a long call that was worthless, and I was able to sell out of it for a nice profit into the crazy rally we saw. This was February. Yeah, there's so many positions in SPX. But yeah, I had a long-term calendar spread on. Here it was. Here you go. Long-term calendar spread into the sell-off, 7,300 strike, and then we dipped. I bought back the 73.50 for 30 cents, and then into the rip in mid-April, I was able to sell out of this 7,300 for $1,600 and book a $400 profit. So you could always do that too. If you're wrong and the market keeps selling off, eventually you can buy back your short if you get into like a longer-term calendar spread. That is pretty much it. What is your criteria to move or recenter your short calls? Is it when they get at the money? Yes. Not break evens, because my break evens now are way further in the money. So when I get tested, and another thing to consider is like, if you are trying to roll an in the money option, let's say you have the 400 strike, which is now 25 points in the money. You're trying to buy this back in June and you're trying to move it to July. You can't really move it, right? You're buying this back for $30. You can move it up to the 405 for $1.85, or you can pay a little bit to move it up to the 410. So that's not terrible, but if you are trying to move an at the money option that does not yet have intrinsic value, it is way easier to do. So buying this back for $1,500, rolling it out to July, now you can see, oh, I can move this up 10 points and pick up a credit. The adjustment we were just looking at is moving up 10 points and paying a $1.30 debit. So that's the value of making an adjustment before it goes in the money, especially if you're trying to manipulate a short call. You don't want to be buying back intrinsic value and trying to replace it with extrinsic value. It's a lot harder to do. So when you're tested, or when I'm tested, is when I make those adjustments. That's it. Thanks for tuning in. If you've got any further questions, you can find me on Twitter. I'm at Trader Mikey B. But again, check out the pattern day trading rule elimination article I've got pinned in the YouTube chat. That one goes over the intraday margin rules. So that's what the pattern day trading rule is being replaced with. But again, it's going to be a lot easier to understand. It'll be pretty seamless. If you've got buying power you can use and you're opening and closing positions, you'll be okay. But of course, if your options buying power dips below zero, you can still be in a margin call. And if you let those lapse, that's when you can still be freezed out of your account. But again, just make sure you've got available buying power, which we talk about all the time. Trading small will certainly help you do that, and keeping cash on the side. If you're doing those two things, I don't think you'll have an issue in terms of pattern day trading, playing a role, or I should say margin calls playing a role after June 4th. But scan that QR code. You can check out some more info on that. And we'll continue to blast out content on the YouTube channel as well as tastylive.com with information related to that. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And I will see you same time, same place, 11 a.m. Central on Monday. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Happy Friday. It is the end of the week. We are getting a little bit of a dump into the end of the week. I am here just solo today as Errol continues his journeys in Colorado. Perhaps that makes it risk or reward today. Am I risk and he's reward? Is it the other way around? I'm not all too sure. I wanted to take this opportunity at the end of the week to just, sort of hang out, have a look at any tickers that anybody wants to throw out in the chat. We'll do a little bit of analysis of a few positions that I have going on in my portfolio as well, particularly silver, which has come through for me in the 11th hour. But I'm happy to be here with all of you today. And I think it's following up a Mike solo stream is big shoes to fill. All right, I'm a little bit nervous, but we're gonna do our best and we're gonna have a good time. We can jump straight into the Tasty platform here. And we'll have a look at what I got going on. Silver is the first thing that I would like to take a look at. I alluded to this position while I was on air yesterday. Needed it to come through for me in the 11th hour, and it has in big fashion. I got an 8% down move in silver today. I've been short silver for some time. Let's zoom out a little bit here for some context. I've been short silver in this position for some time. 81 days now? 81 DTE at the time that I put it on, obviously expiring today. And there was a long part of those 81 days where this looked like it was just going to be home. I mean, I needed it below 75, and I mean, it pretty much immediately took the dip below 75 and very seldom rose back above it. We had one small test of that 75 level, and after rejection, I thought we were home free. I took one off down here at the lows, and then I said, you know what? It's silver. It's not a product that moves fast. And we're so far on the dance floor, I'm going to hold for 10 more days just to squeeze the last $20 out of this thing. I almost paid dearly for that decision as silver promptly rallied back to over 80 at 3 DTE, at which point I obviously started to feel like I was on the hot seat with this one a little bit. But we got a big dump yesterday. We closed right above 75, right on the dance floor in between my two strikes. And then fortunately today, we get the giant dump. I didn't even need anything this pronounced, but I will certainly take it. And this one is going to cash for max profit. So very pleased with this one on silver. A very stressful $77 winner over time. Additionally, I have rotated now to about 50% cash going on in the account as we're at all-time highs, and as all-time highs seem to be getting a little bit shakier today. I'm feeling pretty good about that stance, sitting on some cash and waiting for the market to make up its mind, particularly with Nvidia earnings coming up in the middle of next week. And then additionally, I have been slowly rotating into a more neutral delta stance. I do still have a long bias, which is why you see more losers here than winners. And then funny enough, most of my winners actually are still longs that just happen to be moving correctly for me today. IBM and Microsoft both trading in the green for me today, though IBM still obviously slightly down in aggregate. But Microsoft logging a pretty solid day, up about 4%. IBM up a little bit less than 1%. Netflix is also a long that I have going on here. This is the second leg of a ladder that to begin was 84.85 and then 88.90. Those 84.85 have since expired for max profit, or maybe I got out with like $10 left on the table. And we're continuing to hold out on these 88.90s, which as we approach 30 DTE, still trading just below that 88 level, I feel fine about, although, I would like it if they were a little better. This is another one that has severely faked me out. We got this big run to 110, and you think, oh, surely we're not going to get a dip back below 90, and then, the market hears you when you say such things. What's going on, everybody in the chat? Ranch, Jared, Agent Per, Sergio, happy to have all of you here with me. If anybody has any tickers that you want me to take a closer look at, I'd be happy to do so today. We have the time to do it, that's for sure. I'll cash in my call spreads I sold today. Will be 95% cash in the trading account as well, fam. Heavy cash after Nvidia for sure. How about that? 95% cash. That's pretty steep. I really was a little bit more overexposed than I would like to be, but as the broader market, just takes this ridiculous rally towards all-time highs, I wasn't really regretting that decision. It was just as we sold, I kept getting longer and longer and longer to a point where at the peak I had something like 80% of my cash deployed, about 20% cash in the account, which is probably a little bit more cash in action than you ever really want to have, but I felt like we were going to get this parabolic recovery whenever the war is over headline finally came through. I alluded to that numerous times as we continued the sell-off, and we did. So as we've climbed back up, just through profit taking back down to around 50% cash. Would like to hopefully push that a little closer to 60 before tomorrow. A contributor to that was Nike. I closed a losing position on Nike just before I hopped on air here. I had a 44.45 short put vertical, I believe. So needed it over 45 by today. Could not get that move. I bought it after this gap down on earnings. Just felt like a good spot for it off the big gap down, off the lows. Nike is still a resilient company. Just was a little bit too aggressive with my time horizon for when that recovery would come to pass. But this is one that I may look to re-enter here sometime soon, maybe early next week. I don't really want to re-enter the longs into this sell-off in the broader market, despite Nike actually logging a good green day today. Just a little bit sketchy, and I don't know how we're going to open on Monday, so it feels like unnecessary weekend risk to have on. But come Monday or Tuesday, this is one that I may be looking to leg back into a little bit, just because I don't think Nike can stay suppressed at these levels for very long. We're still talking about a premier sneaker athletic wear manufacturer and still the kind of the face of that industry. I don't care how many people run a sub 2-hour marathon in Adidas shoes. Okay. Thank you, Ranch. Appreciate it. Can you look at Tesla? I'd be delighted to. Let's take a look. Yeah, Tesla kind of in an interesting spot here. Big sell-off coming through today. Obviously, this looks to be a real decision point for Tesla. Is sort of my first thought when I take a look at this. Has followed the broader market trend with the sell-off and then into the steep recovery. And then even into today, logging a negative day. Obviously, a little bit more pronounced than the rest of the broader market. Tesla is an interesting one. Obviously, a very volatile and strong short-term trading vehicle if you can be directionally correct or neutrally correct. But I'm very interested to see what happens with Tesla later this year with the SpaceX IPO. I'm curious whether just the additional hype surrounding Elon is enough to push Tesla up. If people who, if people miss the exact IPO price on SpaceX and suddenly it's up 100% in a day, which I think is probably very likely. If Cerberus can do it yesterday, I'm sure SpaceX is going to have similar enthusiasm behind it. If that will cause some people to turn to Tesla and there's a little hype rally that happens there, or if we see the inverse of that, where people who just want to back Elon and have been holding Tesla for some time decide to rotate that cash out of Tesla and put it into SpaceX instead. But SpaceX and this SpaceX IPO, I could go on and on, but I'll just say this: it's becoming it's becoming a mailman is talking about it situation with this SpaceX IPO. I think a lot of people have a flawed view that this SpaceX IPO is going to be like the Tesla IPO. Like if you can get in on the ground floor, it's going to be this crazy 20, 30, 40x thing that you can get involved with. And that's obviously not going to be entirely true. That's a FOMO way to think about this. Tesla, when it IPO'd at $17 many years and splits ago, was a new, and I wouldn't use the word fledgling, but there was question marks surrounding the company at the time. And SpaceX is going to be arguably the most hyped IPO of all time, with only Anthropic and OpenAI really rivaling it. It's going to IPO at over $1 trillion valuation. If you want something to grow in the multitudes of 10 and 20 and 30x, and it's IPOing at over $1 trillion, that's probably an unrealistic way to think about things, because you're talking about it needing to become a 30 or 40 or 50 trillion dollar company in order to realize those types of returns. What else do we got going on over here in chat? Hey, the air came out of SLV. Maybe I can cash in my short call soon. Nice, Red. Happy to hear you're shorting into this as well. Cash? What's cash? That's one way to look at things, Agent Burr. Which way for PayPal? We're just firing Elon stocks today, aren't we? PayPal, this feels low. Feels low to me. I'm also aware that Elon no longer has involvement with PayPal. But this feels pretty oversold to me at this time. PayPal, really, this is very similar chart action to what we were just talking about with Nike. If you look at those side by side, that's very similar charts. And I have the same attitude towards both of them. I think that despite many newer competitors coming and entering their space and taking away some of their market share, we're still talking about the premier players in their industry, both with Nike and with PayPal. And I would find it hard for PayPal to stay too down for too long. I'm not really, I don't know if I'm in love with PayPal as like a long-term play, but I do think a return to, this 65, 70 sort of range will happen at some point. With what time horizon? That becomes a lot tougher to say. But PayPal makes revenue in so many ways that people don't even initially realize. I feel like everybody only thinks about their use case for PayPal, whether that be as a way to transact with online merchants, whether that be as a way to send money to your friends or do payroll for your small business or whatever it may be. But they have all types of revenue segments and only continue to add more. I know that they're really pushing for adoption of their debit cards right now. That would just be another way for them to generate even more revenue. PayPal isn't going anywhere anytime soon, and we're talking about multi-year lows here. How far back do we even have to go to find the last time we were at the $44 level? Well, longer than 5 years ago is the answer. So 5+ year lows on PayPal right now, and that feels like something of a discount to me, despite how much market share has been eaten up by the they own Venmo, by the Zells and Cash Apps of the world. Short Rocket Lab on the news. Are you saying on the SpaceX news? I think that's you're saying I see. Are we talking recent news? Or are we talking SpaceX news? In any case, this looks like a fairly reasonable position to get short in here with where we're sitting on Rocket Lab. And if you're talking about with the SpaceX news, perhaps, but also I think if you, and I'm not sure that you are talking SpaceX news, but if you are, I think that is more likely to push Rocket Lab up. I think we're going to see a similar substitution effect of what I was just talking about, where people feel like they're priced out of that SpaceX IPO and start turning to the Rocket Labs and Planet Labs and ASTSs of the world to try to get that FOMO into some company. How would you play retail? I see Macy's mentioned. I don't know the last time I thought about Macy's in a stock market context. I will take a look. Actually, having a not too shabby little run here off the highs. Macy's, Costco mentioned. I haven't taken a look at Costco in a little while either. Walmart is usually where I go looking for a retail play. Well, there's different angles of attack with all of these. In the case of Costco and Walmart, I think that these continue to be perennial growers with time. If you made me take a trade right now, I think that in the case of Costco and Walmart, if we're talking like a 30 to 60 day sort of thesis, I would be more inclined to get short. I just think, and as I alluded to yesterday, I think that, at some point we know that the market has to take a little breathing period. I know that there's been lots of conjecture in our chat and just in the broader media space about perhaps Nvidia earnings causing that downturn. I think that could be a plausible reality. I don't know that that's exactly the timeline that we'll get it on, but at some point the market is going to have to enter a breathing phase. And with Costco and Walmart both trading at their highs right along with the broader market, Costco a little bit off the highs right here of 1067. Walmart just trading at the highs right now, opened at the highs today, has sold back off a little bit. I think getting short would be the angle of attack. But if I were looking for retail companies to buy shares in to keep in my portfolio for the long term, then Walmart and Costco are the two that I would probably choose to attack. Nike I already touched on. Nike, I think, oversold. I'm looking early next week to get long Nike. That's probably the retail spot that I'm most interested in right now, would be long Nike, just because of how oversold we are and how long we've managed to stay at these levels. And now, coming back off the lows, we seem to have established the 42 level as a pretty solid point of resistance, or point of support rather. So I think that Nike would be my favorite play to the upside in the space. Macy's, I really don't like Macy's in general. That's not to say that I think it's going to go to zero. If you want a company that I think could actually go to zero, it's parabolic of its claim as it is. It's Target. Target, and I've said this before as well, I don't think Target does anything best in the retail space. I think Target is to retail what Sonic is to fast food. Target just has okay stuff, and they have okay prices on that stuff. It's the okayest retail provider, but I don't think that there is anything that they do that I can't point at another store and say this store does that thing better than Target. Like, I don't know that Target is really the premier player anywhere. Obviously, the market disagrees with me. 2026 has been very kind to Target thus far. Even through the broader market downturn that we got, Target was able to sustain some solid momentum here through early April. Only really two red candles before chasing down those highs again. But I think that if one of Walmart, Target, Costco, these Macy's, these big box stores is going to be gone 20 years from now, I think that Target is set up in the worst spot among that pool. What about McDonald's? Oh, check out SE. SEI, is that what that says? I thought that said SE exclamation point. SEI. I haven't seen this before. Solaris Energy. Looks to be a strong grower. These energy companies have been pretty kind over the course of the past few years. Don't know enough about this company and their fundamentals to really give too grounded of a take. Seems like a solid grower. What's the PE ratio? What are the legitimate prospects for this company? Can they catch up to their projected valuation? I do not know. If the answer is no, then this might be an attractive spot for a short. But this is an interesting one that I haven't had a look at before. What else do we have here? What about McDonald's? McDonald's so oversold. I am long McDonald's right now, so I'm agreeing with you on the oversold thesis. Where is my McDonald's position? Right here, one of the few green spots I have in the portfolio today. But yeah, McDonald's. I have this is 63 DTE now, 295, 230 short put vertical going on. Or sorry, 230, 295, 300 rather short put vertical going on. Looking to chase down the 300 level in the next 60 days. And I don't think that's an unrealistic timeline for that to happen. 300 level would still be, very far from the highs of we've tested this 340 level before. And yeah, McDonald's just feels really oversold here. McDonald's in a interesting spot. They keep trying to do these value things, but I feel like the public perception has shifted into like McDonald's isn't that much of a spot to go if you want good food value anymore. But I think McDonald's is another one that just can't stay down for too long, especially against a rally in the broader market. Strangely inverse to the broader market right now, sold off through the entire run. And then today when we're finally getting a little bit of pullback, it's actually green. That's not to say that I think McDonald's is a market inverse, just a interesting observation. But yeah, I mean, we're talking last time we saw these levels on McDonald's is January 2025. So what's that, 14-month lows, 15-month lows going on McDonald's? Feels like a discount to me. I like it in the same way that I thought Shake Shack was a little bit bloated until this recent sell-off when I was able to cash in on my shorts. I think McDonald's is primed to. I think McDonald's is oversold, and I thought Shake Shack was overbought. Question. I have a Hood Strangle, 7084, currently trading at $77. It's got 21 DTE. I initially put this on at 45 DTE. Well, that sounds like you're in about as advantageous of a spot as you could possibly be then with Hood. If 7084 are your strikes. I think that's a strong position. If you're asking if you should exit, I think you might as well squeeze a little bit more premium out of that. You could not be further from testing either of your strikes right now. So I don't hate it. I think you could squeeze a little bit more premium out of this if you wanted to. Thank you for the kind words. Furza? I don't know how to pronounce your name. Oh, I see. There's follow-up questions. I target 50% profits. Expected move over the next 45-day cycle is 15. Close at 10% profits or roll it? I don't know. This Robinhood is can be a volatile one, but this channel has seemed to be pretty stuck over the past few months here. I mean, since the end of January. I don't know. My personal bias is always towards not rolling. I would rather, if I want to roll, and it depends, obviously, this is a very subjective thing and depends a lot on the, your theses on whether you're in the green or the red. But I think I would say just take the profits, and that gives you a little bit of time to just wait rather than rolling it and having to keep it on. Take the profits, see if any volatility comes through, and then you could choose to reattack it at a later date if you want. But I don't think you would hurt anything by rolling it either. I think that it does seem to be pretty hard stuck at these levels. But this one, yeah, just when it moves, it really moves. But we have been hard stuck for the last couple of months. Yeah, 10% in the green after 25 days. Yeah, I think I would lean in the direction of just closing profits. To me, I'd usually rather have the cash than roll it and keep it tied up. And if you want to re-enter at a later date, you could choose to do that. And that would be my take on the situation. Thank you. I like Walmart too. I'm short XRT at this time. TL Bryant, XRT. Oh, yes. Wait, what is this? Yeah. Oh, just read this, the retail ETF. Yes. Well, yeah, I think that's a pretty good spot. Yeah, I mean these ETF products, there's so many good ones now. If you ever have a thesis that you want to express on a specific sector, these ETFs are such a great way to just be able to go after. I know IGV has been really popular in recent months for along the same lines. But I think that's a good spot to be. Maybe some resistance coming through at this 78 level. Or some support rather. It seemed to like this 77, 78 level as a low over recent months. I mean, this is dating all the way back to late July last year. But I think being short retail is a fine place to be right now. That all being said, without knowing exactly what makes up this ETF, but obviously I assume we're talking brick and mortar retail, not e-commerce. Thank you, Option Harvest. Appreciate. Doubled up some SLV lotto calls. Still has a chance to hit 300 in a month or two. That's an interesting thesis, Agent Per. SLV. Yeah, I mean, $300. Do you mean your position has a chance to hit $300, or do you think SLV has a chance to hit $300? SLV to 300 would be pretty insane. Some crazy things would have to happen. I mean, even among the Tulip Mania style rally that we got in SLV, we only touched 110 in February of this year. So 3 times that level would be pretty insane. But if you mean in the case of your call specifically, I don't hate getting long silver at these levels. We seem to have, there was this whole mania period and then a sell-off, and I think that kind of somewhere in the middle of this consolidation range is probably what fair value for silver actually is right now. We might be just a touch oversold, like 75 level. Maybe we retest and try for this 90 level again. It does seem to be gradually working higher here. But the metals are just difficult to track. They kind of have a mind of their own. Nope, silver does. Yes, it would be crazy. Okay. SLV to 300 is in the equation. I suppose that's hey, if you're that bullish, then lotto calls are absolutely the way to attack it. I'm sure you could get some real cheapies at strikes up in the hundreds and with huge gamma and upside if we are to get that move. I have long Nvidia 717 July 17th 205 255 call spreads already making 30% profits. Any take to protect my gains before earnings next week? Yeah, I mean, what are we at? 205, 255, Nvidia. Oh yeah, you've done well, right in the middle of that range. I mean, I would, if I were you, I would take profits. That's my answer to the question. I was looking for a more cordial way to put that, but I would just go ahead and take profits and be completely risk off headed into earnings next week. Nvidia, very, very scary into earnings. I said yesterday that if we get into a situation where Nvidia is just running up and all of a sudden pushing like the 250 level headed into earnings, then I think I would be inclined to get short into earnings or short after earnings. You know, there would be a short thesis in the equation. With this 3% dip today, I feel like we're in a much more reasonable spot, and I suddenly really have no idea what I think is going to happen following Nvidia earnings. But that's a huge volatility event. I mean, that's basically the Super Bowl of the market 4 times a year that these days is Nvidia earnings. And if you're already 30% in the green, I would say just be completely risk off and don't even. There's no reason to carry that risk through earnings to me. OSIS, nice dip. I can't say I'm familiar with this company either. Ooh, that is a nice dip. If this company isn't going bankrupt. OSI Systems. Yeah, I mean, this is straight through some strong historical support here as well, down to this 205 level. Talking, over year-long lows at this time. This does seem to have been a pretty strong grower over the course of the past 2 years. So, yeah, I mean, as long as bankruptcy or further terrible catalysts aren't on the table, I do think that this looks like an attractive dip. If you just showed me this chart in a vacuum with no name or no nothing and said, is this a long or short spot, I would say it's definitely a long spot, obviously. Of course, and more. Happy to help out. Bought a loaf of 12 grain bread the other day that had mold in it at Target. There you go, Ranch. That's what I'd like to hear. That's what I'd like to hear is a perma bear on Target. You bought moldy bread. Target. I just don't. They're just in such a weird spot. They're not the best grocer. They're not the best clothing spot. They're not the best home goods provider. And they do some of those things well, but they just aren't. There's nothing like, and obviously this is all very subjective and anecdotal to an extent, but to me, there's no item where I'm like, oh, I want this item, let me go to Target for it. And there are items like that for insert any other big box retailer. But Target is just never where I'm like, oh yeah, I think I could get the best price on this thing. I think I can get the best version of this thing. Target doesn't fall into any of those buckets for me. SMR now. SMR, every time this comes up, I know it's small modular reactor, but here's a deep cut. I think about the terrible weapon in Call of Duty Black Ops 2, the SMR. It was no fun to use, particularly in zombies. It was terrible. Multiplayer, it had a little bit more serviceability. But I like these levels on SMR. Nuclear as a whole kind of is. I don't want to say fallen out of favor, but kind of gotten put on the back burner. And I don't think that that's justified. I think this is still has very strong future prospects. So I'm here for SMR. Is GE Vernova in a similar spot? No, this continues to run. Do have to get out of here shortly, but thank you for the kind words, Troy. I will have a look at this. Your thoughts on a pairs trade? Short 1 Meta for long 1.5 Google. Interesting. I am bullish on Meta. I will lead with that. My bias leans bullish on Meta. But in the context of a pairs trade, I haven't looked at Google in too long, actually, now that I'm sitting here pulling this up. Interesting. Yeah, so you're playing continuations in both spots in that case. I don't know if I love it. Google at these levels, it's in a similar spot with the market where it's just had this crazy run up, and I feel like a breathing period might be imminent. Meta, the short Meta side I like more than the long Google side, but I don't know that either one of them is necessarily bad. If that aligns with your convictions, then I say go for it. I wouldn't do it myself because I like Meta too much. But anyway, that is going to be about all the time that we have. Production's giving me the cane right now, the comical 1920s cane pulling me off the stage. So I will leave it to the wonderful men coming on next with Futures Power Hour. That's all I have for everybody today. Thanks so much for hanging out. Thanks so much for keeping me occupied. It's hard to fill a solo time slot without good activity in the chat, so I appreciate all of the questions and all of the kind words. I will be right back here with Errol, same time, same place, 12 o'clock noon Central Standard Time on Monday. Be sure to come hang out. Thanks so much for spending this time with me today. Stay tuned for Future Power Hour coming up next. I'll see you guys next time.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I like how you do it. You're helping me through it, baby.
We're back. It's still Friday, May 15th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, it is a Friday defined by the end of the Trump-Xi summit, oil going back over 100, I should say. Bond yields breaking down and stocks coming in. I suppose there's only one question to ask. Did you buy the dip in stocks?
I bought something, but
You
it
didn't
was
buy
a put. But it was a put.
I figured. I bought the dip in stocks today because we fell back to our 1 week moving average, got right into that little comfy support band that's been guiding this market higher, and maybe it doesn't work out this time. But we're going to keep swinging on the upside as long as the trend's pointed higher. So we'll talk about that trade in a little bit. Josh, we can go to the slide title to ask a question of Ilya. Did you buy the dip? His answer is no. My answer is yes. Before we get to why we're having
I did
differences in that
do
opinion.
a lot of trading, though.
Well, we'll get there when we get to those sections. Macro calendar next week, Ilya. I see a bunch of
Slim
small
pickings.
things. Slim pickings. Nvidia earnings on Wednesday.
Second half of the week is where it's at, really. You've got the FOMC minutes. They're going to probably get overshadowed because Nvidia. But then the S&P PMI numbers at the end of the week, that should be interesting because that'll be a growth check at a time when, just look at the markets today, things look growthy.
The S&P PMIs are probably the only data that we might actually care about. The FOMC minutes, Ilya, I'm struggling to, why would we care so much about what this particular composition of the Fed has to say? Warsh isn't on there yet. Miran's going to be gone. Powell's no longer going to be chair. He's downgraded to governor. I suppose that, given the last meeting's results where we saw several people dissent, more or less dissent, not against Powell, but against Warsh and his forthcoming tenure. Maybe
I think that's the
interest.
interesting part. I think you've just hit the nail right on the head.
Because it's not about a rate change that's coming anytime soon.
Oh,
one way
no.
or the other.
Oh, no. Banish that thought. Certainly, we're going to hear a lot about what the committee has to say about the current environment. And to your point, I think you have it exactly right. This will be about what that committee and Warsh are going to agree and disagree on. Because he is one vote. He does get the bully pulpit, as it were, but he still has to build consensus. And Kevin Warsh knows this. He also, he's been at the Fed. He's been part of this consensus before. He's also been out of that consensus and knows what dissenting is. So this is, I think, what the interesting part is of the FOMC minutes is we're going to really learn the limits of Kevin Warsh's power because he can't unilaterally do things. Moreover, he does not, I would presume, want to cut off the branch upon which he sits.
Well, he would be going in with a saw right now if he tries to convince the rest of the FOMC to cut rates.
No one's cutting interest rates.
One of the wrinkles of today's market is that we've seen a rate hike yesterday at May 2027 fully priced in. Okay, at the close.
It's moved up now.
It's now December. We have a full cut priced in by March with an 8% chance of a 50 basis point rate hike. December this year now gives you a 63% chance of a 25 basis point
I mentioned
hike.
that in that email I sent you last night saying it's just edged past better than even odds narrowly. Here we go.
So your Nvidia, today's OPEX, we don't want to discount that. But Nvidia on Wednesday is probably the next big event for the market to digest unless we get some Iran headline out of the weekend, of course. Next week's calendar, Ilya, we're going to watch FOMC for the palace intrigue aspect of the vote. But in terms of looking for a cut or a hike clue for the June meeting, the market itself, 0.78% chance of a cut right now, even though the hike starts to become the prevailing view thereafter. Whether or not it's the 30-year year crossing 5%, we did have that 30-year bond auction earlier this week where the 5-year, the 30-year coupon was fetched over 5% for the first time in an auction since August 2007. We have the 10-year yield crossing 4.5% today, really breaking through a band that has been trading over the past few weeks. Oil back at 100, and it just hasn't been a pleasant mix for stocks where you sprinkle in the news that there was no significant technology deal made between the U.S. and China, and stocks found a reason overnight in particular, which I think is worth noting here, overnight to pull back. Asia selling, Europe a lot of selling, Asia goes offline, and as Europe liquidity starts to drain, the market begins to stabilize here. So first things first, Ilya, I want to just do a quick check on the technicals that we've been following in this market, which I think have been reliable to this point. The 1 week moving average has held up as support every session since March 31st. Today, that comes in on
you're seeing the
basis,
markets test that.
74.58 right now is that 5-day moving average.
Yeah.
We're currently back above it. Similar to what we did on Tuesday. I'm not saying it's going to be another green day tomorrow, but we're finding a little bit of footing here. You're seeing
take a look at the 4-hour chart, because I think
in a second,
I think we have this is where we are. I think this is a critical moment.
This is the support band. So we have ourselves holding the trend so far. And so my view is I'm going to keep pressing on this as long as we get our closes through there. So the chart that we shared yesterday was when we look at the 4-hour or really the 8-hour chart, you have this yellow squiggly line here where when we've gotten into this zone, we've bounced off of it. So Ilya, my first blush today was the market did something that it's done repeatedly for the past month and a half during the rally. The only thing that I know how to do in an uptrend as a momentum guy is buy at support. So I'm back long again. I got out yesterday. I'm back in right now. I'm looking for a move up towards 75.50. 75.
I want you to take a look at all of those circles you've just drawn here. And notice that the entire way up, when you get the retracement after the upside break, that retracement never takes out former resistance turned support until this one. Every single one of the circles that you have on this screen give you a rally and a break, and then a hold at former swing levels. You do not have that here. What you have is a break of the former levels on an 8 and a 4-hour basis. On a 4-hour basis, it looks much more dramatic, of course, because there's more of a break and then a backfill. So you'll see there's a break, and then there's a 4-hour hold of the break as if to validate that the market recognizes the break has occurred. Now, that's a 4-hour break. Let's not write home about something that isn't that convincing yet. But it is worthwhile to note, every single other instance that you've outlined here is different in this way. Every one of them. So this is a little bit different to me as well. Now, I did not go out and sell oodles and noodles of stocks here, but I did put on another put vertical, again, very risk defined, very small, just to probe the market, because this is how my strategy of implementing a macro view works. You put on little nibbles, and until they work, they're just little nibbles. And if they lose, they lose. So be it. That's why they're small. When things work, I add. We'll get to the dollar and the gold portion of the day in a bit. But those are places where I've been flooring the gas as far as exposure. But here, I don't know what's going to happen here, but I do know this is different.
Doesn't seem different to me. Markets are going to oscillate. It's an OPEX day. We're going to overshoot maybe a swing higher, swing low. The trend levels are holding, broadly speaking, here.
Could be.
So I'm looking. So for next week, Ilya, I'm trading this into 75.50, 7,600, May 22nd expiry. So we'll get another swing to the upside. If this time it's wrong, eventually, if you're a momentum person, you get onto a chain of trades. You keep putting coins into the machine until the machine stops spitting out prizes. And eventually it will. It's just one of the things that you have to be comfortable with. You just hope that you can feed the machine enough coins and it spits out enough prizes while the thing is still whirring. So I'm comfortable. This has been what I've been doing for the past few weeks, Ilya. It's been working out neatly. I'm not going to challenge. I've told you I've gotten away from my thinking here and just going back to following the lines on the charts and not trying to overinterpret stuff. And while you see it in the commodity prices, the inflation's coming. You see it in PPI, you see it in CPI.
You definitely see it. The data this week was ugly. Even the retail sales number was ugly if you look 1 inch below the surface.
Sure. There's also this odd tendency where over the past decade, when both PPI and CPI have beat in the same direction, surprise to the upside, the S&P 500 has returned over 2% in the following month. So just because we're seeing the problem for the market isn't the hot data. The problem for the market is when the Fed tells you that the cost of capital is going to change.
Well,
right
and
now
the hot
Fed is telling us
data,
it's not.
for what reasons? Also, I mean, sure, you look back at those stats and you go, well, yeah, when CPI and PPI beat to the upside, that's because most of the time that happens, it's not a supply shock. Most of the time, it's robust demand. That's not something stocks hate. Those aren't even rate hikes that stocks don't like. Stocks want rate hikes for good reasons. It means the economy is doing great. Why are stocks so scared of higher rates here? Not today, since a year and a half ago.
It feels like
why are they so scared of
little...
higher rates? Because the economy is not doing great.
It feels like they started to get a little spooked of the higher rates today. The 30-year auction the other day wasn't necessarily the problem. It's really the 10s, I think, crossing above 4.5.
Yeah,
which kind of rang people's bell here. You know, if AI keeps delivering productivity and gigantic revenue surprises the upside for these companies, that's fine. But if the cost of capital is going to abruptly shift and we're going back into a higher for longer mindset, it could.
Well, and that's the thing, that it's not even the AI, because you've made this point, I think, very eloquently. The AI boom is not an engine of job creation.
It's not.
And because it's not an engine of job creation, it's not an engine of consumption. And because it's not an engine of consumption, it's not an engine of economic growth. It was an engine of economic growth more so than consumption in the first quarter, because we have this incredible scale of build out. And at the same time, we have consumption that's been slowing for 2 quarters. So on the one hand, you have this burst of investment activity, which you're not going to repeat again. And the reason you're not going to repeat it is because already 40% of data center projects are delayed, that were supposed to come this year, delayed to next year, the year after that. In fact, the reason the microchip stocks are surging is because there is a bottleneck in supply of their stuff. Nobody's building this stuff in the kind of hurry where we're going to actually see the fruits of $750 billion in outlays this year. That's not happening. You're not going to continue to see data center building growing at 10.4% in a consistent way, not in this environment. And so if that's not going to happen, how in the world are data centers supposed to outpace a slowing consumer? They're not going to. And so because they're not going to, this is not an engine of growth. This is not the good kind of inflation. You're on mute.
Probably not the good kind of inflation. Several small businesses in the area, I saw this yesterday, started getting invoices with fuel surcharges put onto them automatically, which was never a line on them before. I was talking to a few people in town. Getting away from that, though, Ilya, for a quick second here, the NASDAQ looks more vulnerable to me than the S&P 500 because it tried to break out of a sideways consolidation only to return into it. But even so, you still need more wood to chop down here. This, again, the yellow blue line band here that's been forming in recent weeks and months, it fell back into that zone today, just like ES. I don't want to discount the fact of, again, given the trend here, Ilya, a bullish morning star engulfing pattern down here in that support region. This is a bottoming candlestick cluster in the support region that has been guiding the trend higher for the past several weeks. To me, is like, I can't not take a swing here.
I just can't.
I just can't help myself.
I mean,
what would I do? What would I do with myself? This thing swung into a new high and I wasn't on board with it again.
What do you think I would do if this thing cratered from here and I didn't sell more after naysaying it so feverishly over the past 6 weeks? I had to sell more. What are you talking about? Of course. Now, I didn't sell more NASDAQ because I couldn't get filled, but I'm working on that.
You are a madman, Ilya. SMH Semiconductors here are likewise finding some support. This is, I pulled this up on my platform today on TradingView here. I think it's worth just pointing out for semiconductors right now. While we're here, let's go to that lower panel, okay? This is the history of semiconductors, how far they are above their 200-day moving average. Do you notice what happened here recently? The top portion of the chart, which marked the previous all-time high above the 200-day, it got bumped up in recent sessions. Earlier this week, semis were trading 55.6% above their 200-day moving average. That's a lot. When we've had other episodes where we've traded more than 40%, even 35% above our 200-day moving average in semis, it's been a place where the market has stalled and has slowed down, not necessarily given up gains all the time, either move sideways, but stop going up, move sideways or lower is basically the takeaway. So this rally is very, very stretched here. We may be entering a window where over the next week or two, and is the market going to give up the ghost before Nvidia? I think not. I think it's going to try to run.
I would tend to agree with you.
But you get to the second half of May, and I know we like to buy through May, July, June, July, but maybe we get, like a week or two or three of a little bit of pullback, a little bit of a correction here, just to take some of the steam off the top. And we look for something like we saw last year, where when you get a pause in the tech stocks, when you get a pause in the semis, is capital leaving the market, or is it just sloshing around from one part of the market to another? And so, Ilya, if I'm thinking that we're getting a correction here, right? If the rally does stop, what would be the healthiest kind of correction that as a bull I'd want to see, where I could go out 2, 3, 4 weeks and say, I'm going to buy this dip no matter what happens? I'd want to see the Russell and Dow move sideways or go up a little bit. The NASDAQ should lead lower. The S&P should fall somewhere in between. So like a 5 to 7% correction in the NASDAQ, 3 to 5% in the S&P, Russell, Dow, they move sideways. That would be the bull scenario, because it means capital is not leaving the market. It's flowing back into folks are diversifying and trying to get all their eggs out of the single semiconductor basket. But this is the froth, right? Yesterday we said it's getting hot in here. Today you have a little bit more of a correction in stocks. That's why I was at 1 DTE and got out. It felt a little warm, trading 50% above our 200-day in semis. So is this where you want to chase per se? Tech could do well. Semis may have to pass the baton right now, because unlike everything else, Ilya, they will put in a close below their 5-day moving average today if they were to close here. And that's something that really, again, has not been happening since the end of March.
Yeah, I mean, I think it would be silly to look at this and go, I'm so shocked that this one-way bet that we've been seeing since April is finding a little bit of resistance finally. How dare they think that this one-way ticket melt-up is immune to a downtick on one day? What? I mean, semis are up 50% this year, more. And what's interesting is that when you start the year, there's an interesting sort of character to the market. So semis are slightly outperforming, software is slightly underperforming. In the middle of the band is the mags, which are basically the NASDAQ. And so they are generally tracking the main index. And the equal weighted index is lagging a little bit behind because, of course, that takes away a lot of the hyperscalers and mega caps kind of thumb on the scale. But you have a kind of middling thing of QQEW, the Qs, and MAGs.
QQEW is up 0.06% today.
It is. Because IGV is up. And that's something I'm looking at very, very closely, because talk about a thing I would buy. I try to...
Morningstar candlestick
I do. I've been trying
to get support band.
I've been trying to get filled here because I think this is actually a thing I could get long. This sell-off doesn't look very logical anymore. In fact, this incredibly looks a lot like Bitcoin, which is in a way software.
It's the same thing.
It's the same thing.
It's the same trade profile. It's a high duration asset. Right.
So I've been long Bitcoin. And I mean, you follow the logic here, right? Like, why is software beaten down? Because they think that the AI can do it better and can subvert what's there. Why is Bitcoin down? Because they think the AI can hack it and subvert what's there. It's it's the same kind of thinking. It occurs now that you sort of see how similar Bitcoin and IGV look. They're practically the same chart, sort of dynamics wise. So you look at this, and I think I've obviously already been long Bitcoin for a while here, off the break of that range. IGV is something, I never aspired to be a perma bear, and I'm not one now. So this is certainly something I can consider, and I've been trying to put on over the course of today. But I think when you look at the kind of overall picture, what the Iran war changed was you had this middling kind of envelope of the tech sector unraveling the next AI narrative, and then the war occurs and you get this sell-off. And it seems like the only people that come back, hence the diminishing volumes, are chasers of the overall SMH story. And it just runs off into the stratosphere. Of course, this was vulnerable to a correction. We've been talking about it for a long time. This is, if Paul Tudor Jones said that the 2000 crash was the most predictable bear market, that this would correct would be the world's most predictable sell-off. Of course. I mean, timing, obviously, who knows, but that this was vulnerable to just profit-taking and speculative unraveling, it's not exactly rocket science.
I was looking through the FactSet report today about the state of earnings here, and they're 27.7% growth, which is incredible. But the number of companies that have been reporting or citing the Middle East on their earnings calls jumped to very high levels, 211 companies. It's been more or less around 50 to 75 over the past decade. But what makes that number funny is that among the companies that have cited the Middle East as a problem, 60 of those companies, most companies are saying that it's not a problem. Fiscal year 26 EPS guidance above prior guidance. So yes, a lot of companies are complaining about the Middle East. They're talking about it. And yet the companies are also guiding higher moving forward. So it's a weird dynamic right now, Ilya. I like IGV here. This is a nice little setup. We got a nice little bounce after breaking into new lows. We have this nice little pattern here. Morningstar after a bounce off of the 1 month through a former pivot high. It does look a lot like Bitcoin. Bitcoin's not doing what software is doing today, though, and we can talk about that shortly here. Before we turn the calendar,
it's also not doing what stocks
though,
are doing, which is very encouraging.
Yeah, before we turn the page to oil, though, sector ETFs that we track, only 4 are in the green today. So a red day across the board, broadly speaking, no matter where you look, as those rates tick higher. And those rates are ticking higher because oil sees $100 again. $100 a barrel, Ilya, as we get these headlines out of China that China's really wants the Strait open, but they lost their keys. They can't figure out how to get to. So they can't help.
Remind me how you opened the Strait of Hormuz again. I forgot.
Well, oil here now crossing the triple-digit threshold again. I'm looking forward to another opportunity to try to sell some calls up here, Ilya.
I've been
playing. I know you've been long. I've been doing it both ways, right? On dips, I sell puts. On input spreads, and on rallies, I've been selling calls. I've been having it both ways, trying to eat my cake and have it too. At what point, as someone who is just only long, as opposed to me who's trying to ping pong this directionally back and forth, where is a level where you go, okay, I've had enough here, clearly to get this to go back to 110, 120, 130, it's going to take escalation beyond what we've seen. Where do you tap out and start taking some profits or adjusting how you express your long delta point of view?
So I don't really think about it that way. I think more about waypoints along the way in a trend that's building and that won't really be going away anytime soon, because we have yet to see. Let's say the war ends today. Well, everybody's got to refill their strategic reserves, especially in Asia, where they've been spending them down aggressively. I mean, Japan has even gone so far as to provide strategic reserves to Australia as an ally. Kudos to them. The situation is dire. And it's not going to get any less dire if you open the Strait of Hormuz yesterday. So the pressure on prices is going to continue. I know there's a ton of chatter out there about, the market is in backwardation. Yeah, but look at what that backwardation's been doing. It's been diminishing and diminishing and diminishing.
As the back end of the curve pulls up.
Exactly. The market is coming to terms with the fact that any kind of a pretense to this being some sort of a flash in the pan thing, that's not going away. This is not that. And so because this is not that, I more so think in terms of waypoints. So we're coming up on the highs here. Let's see if we break them. If we do, I'm only adding.
I hear you. I get that.
It's an uptrend, man. We've got momentum and a trend and resistance. And if you break resistance, what do you as a trend follower do? You buy more, baby.
Add more. Yeah, no, you're absolutely right. Ticker agnostic. It's a really nice looking chart. Maybe it's my biases coming into play where I'm afraid of trying to get too aggressive here on the upside. What I do feel compelled to do, though, right now, taking a look at the broad sweep of what I've been up to, is nothing. Because the market has provided the opportunity to sell calls up in the 120 area and sell puts previously down in the mid to low 70s across various strikes and expirations, Ilya. Mm-hmm. And it's been working. So why change the course? What I am really interested in, however, just thinking about building blocks longer term, and we did this on the last pullback here, okay? When we have chances where you get the elevator down type of day out in the U6 or the Z6 contracts, some of the levels that we had from April 17th, that's right around 70, and the U6 at 73, and in Z6 it's about 70. Just what are the odds that we're going to get back down to those oil prices this year within these strike cycles, given the total dislocation of the oil market? And
seems highly improbable.
Seems really low. And yet, given all the volatility that's pumped in here, I could go out to let's go to 186. We'll go 2 points wide here. I can sell the 69.71 short put spread in the Z6 contract still and get paid better than 2-to-1. And listen, that's some capital that you have to tie up for a lot of days here. And the max profit, if we wanted to think about this, if we wanted to go to max profit by expiration, take the max profit divided by the total number of days left. So this is not exactly like a trade you're making like $3 a day, Ilya, if everything works out really, really well. Is that worth it to put aside $647 worth of buying power? It might be for some people. Maybe these aren't the right strikes. But if you go out longer term, because of all the vol in here, there are some things to play with still. So you have your shorter term long delta view. I'm taking my long delta view on a longer duration cycle vis-a-vis selling puts. It may be a little bit less capital efficient on my side just because of the time that it's locked in now into that position for the next several months. But it's still something I'm comfortable doing because it's a diversification of the trading in oil. It's a time frame assumption that's different. It's a strategic assumption that's different, varied from what I'm doing in other asset classes. So thinking about the totality, the holistic view of the trading portfolio here, does doing something like this increase my correlation or decrease it, increase my beta weighted deltas or decrease them? It's decreasing correlations, it decreases beta weighted deltas. So adding a position like this in U6 or Z6, it checks the boxes for me as being reasonable enough.
Yeah, I mean, I think you look at this, you can look at this multiple ways. For me, it's simple. It's a trend that's higher and it's coming up on resistance, and we'll see. I've got plenty of duration in my call vertical, so we'll see how it goes. But my inclination is not to fight it as it unfurls.
Natural gas may have started to turn a corner here too. Yesterday on the show, we were talking about two ways to express this view. Whereas when you're looking in the N6 contract, I'll pull this up here, the inverse head and shoulders pattern hasn't seen liftoff yet. If this is an inverse head and shoulders pattern in the N6 contract, we're going to want to see something like the 3.2 level cleared out first. And maybe it's building into that, Ilya, because this looks like a nice little triangle that's forming down here. But the problem is that there's not a lot of vol. We're talking about what, like a 13 IVR at this point in time. On the other hand, the M6 contract, which is inside 21, is starting to poke through its neckline. And it's starting to poke above its 50-day moving average. And in recent sessions, if we really zoom in, or really zooming in here, we can see how this yellow line, the 1 month, was resistance on the way down, and then just in the past few days flipped and started holding as support each of the past few sessions. So yesterday we decided to let's take a little flyer here. The 3-2-3-3 long call spread, that's 11 days out. I could sell it for $20 today. Oh gosh, maybe I can go buy a few cartons of eggs with that money. But it's situated where if this is a loser, it's going to cost $90 at max loss. And if it's a winner, it's going to run up to about $900. So we have a short-term breakout potential. Volatility is low in natural gas. Natural gas typically likes to get jumpy when it moves. And the temperature forecasts for the next few weeks point to higher demand for cooling across much of the country when we're already in a situation where we have strained inventories. So I don't know. I think some long deltas in natural gas right now in the short term as the chart turns the corner. Why not? This feels like something that could have some fun over the next week or two.
I mean, as you know, natural gas is not my idea of a good time. And yes, Chip, sometimes you do have to race, but not me and not here.
What more could you ask for? A neckline break, 50-day break?
It's a great thing, but it reminds me of the rule that we used to have in our Spot FX days for a while there. Listen, you play with pound yen, you chase the dragon, you take your fate in your own hands. This is not the kind of instrument that I find gels with my strategy of kind of putting on small positions to test the market, not have a lot of exposure, lose a few of them along the way, and then have the big swing work out on net. For all my probing of the stock market, because I was short into the Iraq war, I'm actually up money shorting stocks this year because that was the trade that was in size. It got a chance to build. So here, this is not the kind of instrument that lends itself to that approach. It's big. There's no real good way to get smaller, more nimble exposure. And when it runs, if it runs against you, it really goes. No thank you.
Well, that's why I like risk defined tier. You know, when I was a child, I was like that guy Phineas Gage who got that rod through his head and it knocked out that little part of my brain that allowed me to properly assess risk. So to me, it just fits my risk profile very, very
perfect.
well.
That's perfect.
Yeah. Stocks are getting a little bit of a bounce here, Ilya. 74, 73 in the S&P.
I was able to sell some calls against the NASDAQ, whereby the put vertical that I have expiring in 7 days has actually been paid for with the premium. And I'm net up a little bit as long as this trade doesn't also go the wrong way. But I have 77 days to find out. So I've basically neutered all of my NASDAQ losses and sins from previous. I'm just going to let that part of it expire worthless and hope that this is a better entry. And similarly with the calls I've sold in IWM, in Russell, they'll still have plenty of time on the board and they're starting to work here. But really, most of what I'm doing is in the bonds. And I think here, actually, the 10-year, to your point, is a more interesting thing. I've just outright bought a bunch of puts here, not even verticals, just bought some puts. With a good amount of duration on them, 93 days at the sort of ZN equivalent. And then I've been doing a lot in currencies and a lot in gold. All of which is really just one idea.
Ilya, today we took off a few days ago, actually, before PPI and CPI, given how this market had run up into its 1 month and then was starting to fall back here. I said, we're long stocks. If there's a PPI and CPI scare that spooks bonds, spooks stocks, is probably going to spook the bond market as well. So what would be a way to express that, point of view here in the market? It would be to go and do the 110, 109.5 long put spread that was expiring today. And so yesterday, I know Thomas bounced out of the position 2 days ago and was able to take some money out of it. I had decided to hold on to it because I'm still trading stocks on the long side. It worked out really well. So we're able to, I think the debit was something like $1 and change. The credit back was over $3. I'm out. It did what it should have done. The position did what it should do, which was protect against any potential downside in stocks. But this is a bear flag break. And so you and I have had a little bit of a different approach here, but philosophically the same thing, which was it looked like bonds are going down. I wanted to see if I could catch the move immediately on the event of macro data, which I did. You now see the break that's transpired in something that's bigger, longer term that could be building into something worse, which to that point, the 10-year yield was trading basically between 4.86% and 4.22% or so for the better part of the last month. And now all of a sudden today, it just absolutely explodes, rips to the upside, 4.6%. The 2-year yield is not there yet, but we do get into this territory, Ilya, where even if oil stays at 95 or 100, if yields are continuing to move up, stocks are going to have a problem with that. If oil goes from 110 to 120, but the 10-year yield stays at 4.4%, stocks are going to blink. They'll shrug it off eventually. But when the cost of capital changes, not just an input, but when the actual cost of capital changes, that's when things start to get a little fuzzier. So this move today in yields really warrants attention. In my view, I know it has knock-on effects for what's happening in the metal. Silver's getting slugged today, down 10%. Thank goodness I didn't get filled on getting a second leg yesterday. That first one was obliterated, getting back in for the first time in 5 months. Could have stayed away. But the yield component of this now, it changes a lot. Now, how much of this is an overreaction in your view to the market pricing in the Fed hikes? I'm looking at the CME Fed Watch tool here on the platform from CME, of course. Sure. Today is the day where we see the hikes kick in for December. Oil collapses, you get it. I mean, wouldn't bonds be vulnerable to a neutralization of this scenario where we go back to expecting no policy moves whatsoever to the end of 2027, as opposed to pricing in at 1 and 3? Hell, by December, was it October next year? 45% chance that we have a 50 basis point hike?
Yeah, I mean, I think...
Is it an overreaction?
I think the larger issue here isn't whether we're actually going to get a hike, but the idea that the structure has moved. And the structure moving is really the big implication. I mean, you see it in the bonds. You see what the bonds are doing. So, and of course, that's going to echo over into Fed funds futures because these markets are tied at the hip. They need to reflect longer term interest rates. And that's really why I'm a lot happier to trade what's going on at the longer end of the curve. Because one of the things that's happened here is at the beginning of the year, the 5 and 10-year break even were basically the same. And what that told you was that longer-term inflation expectations were stable. You weren't looking for a lot of change between the 5-year time horizon and the 10-year time horizon. You were looking at the Fed being successful at landing the ship. Now, since this war began, a vast chasm has opened. Both have rallied, the 5 and the 10-year break even, but they are worlds apart. And the spread of the 10 to the 5 is significant. That's not a story about a price shock. That's a story about a persistent build in inflation over the longer period of time. That is a structural change. And that's what you're seeing in the bonds. I think it is very interesting to consider that what the market is doing is responding to this now, when in fact it saw all of this in CPI and PPI The damning thing there, of course, being that it wasn't just energy. Of course, there was energy shock. Everybody knew that was coming. What there was that energy shock spilling into services, core services. And once you start to see that, you go, well, that's the sticky part of inflation. That's the part that the Fed has been wrestling with since COVID and not winning. It's been able to squeeze everything else out except core services. And when you saw the stuff in both PPI and CPI,
I can't believe Warsh is going to be Fed chair now.
It's hilarious because he's a hawk. He's a hawk in dovish dress, let's say. And
he wants to end quantitative tightening and all this jazz. Like he can push a bunch of buttons to tighten policy and pull some levers and spin some wheels without having to raise.
And just think about the rhetorical game here. Warsh can do a lot more about the balance sheet than he can about monetary policy, but he can blame that on the other policymakers. He can blame that on the board. And then if Lisa Cook stays, there's nothing you can do about the board. Oops. And so you end up with a situation, I think, here where ultimately Kevin Warsh is going to do the right thing because he doesn't want to tarnish his legacy. He's been fighting for this job for decades. He finally got it.
And he has a SpaceX IPO coming up that he needs to.
He's not gonna burn his cred on this. So you look at all of that together with the retail sales numbers and you go, spending on gasoline declined. That's got to be good news, right? Well, did the price of gasoline go down? No. So how come spending on gasoline declined when the price of gasoline didn't go down March to April? Oh, yeah, retail sales numbers are not adjusted for inflation. It's just volume times price. So if the price didn't go down, what happened with the volume? Demand destruction is what happened with the volume.
Oh, we didn't make it up on the volume. Okay. Right? Speaking of not making up on the volume, Ilya, we do have a silver chart here that,
it's a magical spot here.
Yeah, I thought 83 was a magical spot because we got the breakout, the pullback to the breakout spot, the move into a new high, which was bumping up into
the magical spot. The magical spot now.
Right, you run up into the former highs, and you pull back and you pause there. Sometimes the silver markets, then liquidity is a blessing and a curse. I felt cursed earlier this week, so I went over to SLV. My goodness, am I glad I'm in SLV right now, not SI. But, I don't learn lessons that well around here, Ilya. So this is the pullback.
I mean, and you give me a hard time for selling the beginning of the end of this melt up. I don't learn lessons.
No.
All I know how to do is to bring the cost of my dead in the water puts down by selling calls.
Maybe you could make an adjustment here and bump this up. So long the 77, short 79s in SLV. What if we were to get rid of the 79 leg and add a little bit more convexivity there? We could make that work. We could make that work, right?
Why not?
Why not? Just change the structure of the existing trade because it's at 63 days. Right. And so we have a short call spread component that's made a little bit of money right now, or a short call component to it that's made a little bit of money right now. Let's see if this gets filled. Let's just switch up this up. Instead of being short the 79, short the 83. So if this thing gets another little bump back up into the highs, I'd like making the adjustment here. So we caught the break. This was the breakout, right? Got some of it. Obviously selling short the calls. We'll get rid of those, readjust them at a higher price. Change the profile of the trade a little bit, but there's 63 days left. This is the uptrend that's still in place. If we lose the uptrend in SLV and SI, then we can revisit. There's a lot of time left on the board for this particular trade. So if this was short dated and if it's an SI, I'd have a real problem on my hands today. And it's also why you pay attention to the product specifications, the amount of buying power it's using at any point in time. The other day, Ilya, when we were looking at SI, for a retail trader, it would be somewhere like the average retail account that we see in these parts. You're talking about 10% of your entire account balance for a single trade in buying power. not what you're supposed to be doing to have sustainable success over the long haul. So that's why we went to SLV. And that decision, keeping that in mind, is the difference between an uncomfortable trade that's like has a lot of time left on the board and can rebound and work out still versus one that I'm all of a sudden underwater with no time left and it's a futures product. And oh, by the way, it's a Hotel California trade because there's no silver liquidity to take the other side of my position.
Yeah, you just got to wait and see what the good Lord hands you there.
And that's not a good trading strategy. Trust me, I've used it in silver before. It has not worked out.
Yeah.
You're doing well in gold, though, it's just been such a crummy chart. I really could never bring myself to getting long. And now it kind of keels over, which on one hand, it's not good because of the metals that I own elsewhere. But on the other hand, it's like, okay, yeah, this is why we weren't getting long. The chart looked like crud. You're short, though. So what's the play now? We just hit the low that we had from May 4th, 4510.10. Today's low is 4513.80.
I'm short from 4670. So as this thing starts to really get going, I'm not selling more right here for the obvious reasons. You have the horizontal line there on the chart. Take me under that line. Give me a 4-hour, 8-hour close underneath there. I'm selling more. I'm doing it directly through the futures. I'm just selling the 1 ounce futures and I'm trading it as a Delta One instrument. But I'm keeping my risk managed by using the smaller contract here, the smallest one.
Yeah, I'm just seeing if there's an opportunity. Let's say some folks are like, we've seen that gold has come in, but vol's bounced back a little bit. Silver's at support. Gold didn't take out the May 4th low. Copper has not taken out the former swing high near 6.2. It ran up into the Jan levels. People trapped in there found their exit liquidity. Imagine being long the HGN6 contract since January 29th. Literally 2 days ago was the first time you could get out at break even. So now you have this rates move today. All right. So copper, I've been looking to get long copper, more copper. This is a gift to get back to 6.2, which is where the 1 month is. If there's a place that this should find support, it would be here. So I'm looking at gold then thinking, all right, same idea. What if I wanted to get some long deltas right now and just keep it to the recent lows? I don't know if that's a super appealing trade right now, Ilya. So we'll call it 45.10. So $60 from current price. That means roughly speaking 44.25 or so in the Q6 contract. So going 25 points wide, it's a 64% probability of profit, but you're risking more than 2 to make 1, closer to 3 to 1. And you're effectively calling the low, giving yourself $60 of downside. So 1.5%. Are you willing to risk 1.5% in gold to, make $1 for the 2.5 that you're risking?
Yeah,
not me. I mean, I'd rather just get more copper.
Not my idea of a good time.
I'm just going to get more copper.
Just let the breakout occur. The reason I've been focused on just doing it through the futures is I want to be nimble. I don't want to worry about, am I going to get filled on some option spread? Forget it. Just give me the small contract, the 1 ounce futures, so I can scale easily up and down. I'm short 2 of them. If it breaks, I'll be short 3. So I can peel things off, put things on, and I'll manage my risk the old school spot FX way, the way I do it in currencies, as just a position that has liquidity 23 hours of the day, let's say, 5.5, 6 days a week. I don't need to worry about getting an options position filled. I don't need to worry about legs in a condor or even a vertical. This is a very tenuous market. We're jumping back and forth here. I went from being down about for a floating loss of, let's say, something on the order of 5% of equity, maybe 6 over the past 8 to 10 hours, to being up about 2%. That's how much the dollar and gold have moved, because stocks haven't moved all that much. My bottom line hasn't changed there a lot. Oil has moved. I'm long that. Bonds have moved. I'm short them. But the really big thing has been the move in the dollar and in gold. And
dollar and gold.
I need to be real flexible there. So I'm not going to get overly creative.
Before we turn to the dollar for a minute or so, just looking at what the next leg in a long copper trade could look like, inverse head and shoulders pattern or range, you're looking for 7-1 or 8-1, depending upon how aggressive you're feeling about things. Technical analysis, beauty is in the eye of the beholder here. But for the more simplistic selling vol, short put spread kind of view, and simplistic, I don't want to, that seems condescending. I don't mean to be like that. May 4th swing low, right? If the series of higher highs and higher lows is going to continue, then this 6.2 or so area in the N6, it's roughly 6.25, 6.3 in the U6 contract, that should hold. And the recent pivot down here into this 1 month, 50-day band should likewise hold, and that's now higher. So 5.8 is right around there. 5.8 to 5.9 then becomes your 10-cent wide short put spread. Risk to reward, 69% probability of profit, 2-1, a little bit worse than that, but a good amount of buying power here. So not 10% of someone's account around these parts, Ilya, but closer to 5% for a single trade. Maybe this is better to do through CPER. Maybe it's better to express through FCX. Not a perfect overlay, obviously, but it's something that's kind of a corollary to copper right now. Ilya, we got to keep moving. Dollar up with yields today. Yields obviously being a big driver of what's happening in the broader dollar index, as is what's happening in the UK for what it's worth, because the Keir Starmer government.
That too.
I joked a few days ago.
Short pound, and I am only adding.
We joked a few days ago that maybe we should take out the lettuce head, and we said not yet, and that was also wrong because a lettuce
premature.
Head
we should have started to sear the lettuce head.
It's been bad. Right now there's a good deal of volatility in the currency space, higher IVRs in other products than oil, as it were, right now. The euro here, to me, is the one that we really want to pay most attention to because it is the largest component of the dollar index at 57.6%. So it carries the way that the euro moves, the DXY moves.
Yeah.
But break below 117, concurrent with everything else, suggests, as you would presume, a corner of sorts has been turned. We'll get that right one of these days.
It's coming.
So when you put these three things together, gold breakdown, silver breakdown, so metals are out, yields are up, the dollar is soaring right now.
Mm-hmm.
How are equities still skating, whistling past the graveyard? Because now these chickens, for the past month, these chickens weren't coming home to roost. Gold was sideways, yields were sideways, dollar was sideways.
Yeah.
Now they're not.
Yeah. Here's a theory. Stocks were moving with the war trade, which was the inflation trade, which is what this is. And then on the way back up, when everything found its interim bottom and turned, and you can see it all, late March, the dollar tops, gold bottoms, bonds bottom, stocks bottom. There's a ceasefire, everybody. Not complicated. A ceasefire is better than not a ceasefire, no matter how porous and constantly violated it is. And so, as ceasefires are, that's normal. And so you get a brief turn. That's where stocks diverge and go off. Now, when they diverge and go off, what do we know is happening? That's the earnings season. That's everybody going, hey, everybody, we're spending just mountains of money on all this AI capex. Where are we going to get the energy? And how much are the inputs going to cost? And what about the legislators in these places don't want us to build these things and are actively blocking them? Oh, wait, almost half of them are already delayed. Don't worry about that. The numbers are big.
Numbers are big. They're fine.
Okay.
Calendar
what did we
for
get
next
yesterday?
week.
What did we get
Calendar
yesterday?
for next week.
Cerebras, which
Calendar
may
for
have
next
been the
week.
top.
Monday is the 18th here. So we have some Chinese data due out Sunday night, if that's something you're watching. The Australian dollar's been moving with these yields. Chinese equities broke their streak of 5 consecutive weekly gains with today's move following the Trump-Xi summit. From the U.S. side of things, there are some speeches, some smaller data releases. NAHB Housing Market Index can be interesting. if you have nothing better to do and you don't want to put bamboo under your nails. So we're there. That's where we are in the cycle. It's FOMC minutes next week, and it's Nvidia. Otherwise, we're waiting on the Iran war headlines, which maybe we get one in the next hour, because you and I will be back together in an hour for last call here. We'll see everyone at 3:30 Eastern, 2:30 Central
Bamboo supply
time.
chain problems notwithstanding.
For Elias Vivek, I'm Chris Vecchio. Good luck trading. Up next, after we break, Dr. Jim Schultz with From Theory to Practice.
Whew, let's make this quick. I got to get going. I make $4.97 every second that I work, and if I don't clear 145,000 by the end of the day, I'm going to go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there. I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is we're trying to do. Welcome to the pre-vacation edition of what it is that we are trying to do. The only thing standing between me and like an 8 or 9 or 10-day vacation, whatever it is you guys. I love you guys, but you are the only stick in the mud that is left on the pathway forward through the forest. So thank you for being here, and thank you for being that stick in the mud, because it's only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the show. Man, you can celebrate if you are a bear today. You can commiserate if you are a bull, but I can assure you it will be a good time had by most. And of course, drop whatever questions you have for me down in the chat. I'll try to get to as many as I can right around the halfway mark of the show, or thereabouts. We may even pull the ripcord on the Q&A session a bit early today. Kind of a little bit of a weekend-itis, a little bit of vacation-itis. So we might do this. I would say the expected move on the number of questions I typically get to per show, as you guys know, on average, is between 0.001 and 0.0015. I would say it's expanded. I would say maybe now we're 0.003 to 0.004. And so that's good for you. So if you have a question for me, I would drop it in today, because today is your day, sir or madam. And of course, drop it in if for no other reason than simply for the love of the algo. So Ryan, bring us into the market. Man, they caught a little bit of a bid there a second ago, and now they're just squashing them again. Man, we are almost like 1.5% off of all-time highs now. Man, somebody called the plunge protection team. Even the S&P is down 78. Got the risk-free instrument, also known as the NASDAQ futures, down 353, which is an extremely high-risk product if you are brand new to trading. brand new to the broadcast. Got the Boomers down 513. That makes sense. They shut it down on Wednesday. You got the Russell down 68. You got bonds down, almost 2 points on bonds. That's a pretty big move. Man, that's a pretty big move. Now, again, Taco Friday is not a thing, man. Like, again, you can check the Constitution. You can check the Declaration of Independence. You can check all those things. You can check the Federalist Papers. Check whatever you want. You're not going to find Taco Friday because it ain't a thing. However, when the bonds are down 2 points, man, the bonds speak, right? And when the bonds speak, people listen, right? So I don't know. Maybe we will have a little Taco Friday. Time is running out. It's like that lunch window is closed. You are now kind of in that dinner window, kind of that hybrid between lunch and dinner. And so the administration better get on it if they're going to taco this Friday because the window is closing. But notes down almost a full point. Got oil up 433. Got UB40 down 2. Got the shifties. Man, they're getting smacked around pretty good. Got gold down 126. Got oil. I'm sorry, not oil. Got silver down $8. Man, that's some wild stuff. Man, silver, crazy stuff. Gold, crazy stuff. Let's look at these guys a bit more closely. You know, you look at gold, looking at is that a daily? What's that, a monthly chart? Man, we're long-term investors now. Okay. All right. Let's do a daily chart, actually. Okay. So that's a pretty, you got a few, 3, 4 black crows? I'm not even sure. That's a number of black crows in a row. That's probably not good for the gold bulls and, the Peter Schiff fans out there, the shifties, as we like to call them. And, thankfully, gold did hang on to, is that support? I don't know, man. Look at that. Got a little equal support right there. You got a little random candle over there, back there. It's like, okay, that might be a little something. Looks like gold held on to that guy. So I'll have to wait and see if that is going to hold into the future. But that's interesting. And then silver, man, if I look at silver, man, it's not good out there, guys. Look at that. Maybe it's not that bad. When you look at it this way, it's like, it's really nothing. Right? You're making higher highs, you're making higher lows, you got higher highs. It's like, okay, is this going to be the higher low? That's how it's setting up. Again, I'm no technician, as evidenced by, any day you might watch the show. I'm very mediocre at this at best, but it looks to me like this could be a little something. Now, of course, the expert technicians that might be watching this show are like, Jim, you're doing this all wrong. It's a travesty to what you're doing to TA, and I welcome that, and I own that. But when you look back at these previous highs, aren't we supposed to take these guys out? Again, I don't know. I don't even know what I'm saying, but I'm trying to figure it out. I'm trying to grow, and I'm trying to get better. And, the bloop analysis can only take you so far. And so I really want to improve. And so it looks to me like we need to take out those highs. But then again, it could all be random and unpredictable. That's another way to look at it. So silver down $8. You got gold down 125. It was all the way down to like 45.13 today. Silver was, I think it got under 76 at one point, or maybe it bottomed out right around 76. So pretty close to the lows, but there has been a little bit of a rally off the lows. And so we'll see what happens going into, the close. And then, of course, you've got the weekend, and you guys better keep it above zero while I'm gone. Like, I don't want to be coming back post Memorial Day to, SIL trading back in the 20s. Like, I don't really want the beans back in the teens, man. Like, I've gotten used to silver 70, 80, 90, even high 60s is okay, but keep this guy out of single digits if you guys could. And gold, can you even imagine if gold broke down below 4,000? Like, can you even imagine that? Like, and that's really not even that crazy. If we go back to gold, let's go back here for just a quick second. If I pull up like not a daily, let's do like a weekly. If I do like a weekly chart, like look at this. Gold 4,000 would be like what? Like right here, right? Yeah, there's gold 4,000. So yeah, I don't know. That might be pretty crazy. And so again, I don't even know what I'm doing, but I know that would be pretty bad. So even I know, okay, maybe that would be pretty bad. So let's try to keep it above 4,000. Keep silver above single digits. That is your dual mandate for while I'm gone. And so there's your market commentary. It's certainly not going to make you a better trader, but we had fun. We had fun doing it. You got volatility futures up 21 cents. You got spot volatility up 88 cents. And so volatility on the rise on our daily today makes sense. Even the S&Ps were down. They were down a hundo at one point, I think, right? Let me go back to a daily here really quick. I just want to get my bearings set before we look at the portfolio. Look at AMAT. Look at AMAT. Man, it didn't look too good on that number last night, did it? Absolutely not. Like, I took a quick little peek. I'm like, okay, I'm bearish. What's it going to do? I don't even care what they say. I don't even care what the numbers are. Double beat, single beat, miss on both, doesn't make a difference. This thing's going to rip. This thing is going to moon like it's never mooned before. And that's exactly what it did on the number. I'm like, here we go again. But it must have been the conference call or whatever it was. And they brought it back down. So it looks like we're actually going to be able to eke out a tiny little winner on AMAT. And so that's kind of nice. But look at EME S&Ps. They were all the way down to 74.20. So yeah, we were 30, just over 100 points down today on the lows. And which is kind of crazy though, right? Like you look at a day like today and you're like, it's bad. And I mean, if you get on the internet, like stay off the internet today, guys. Like go outside, touch grass, spend time with your friends, spend time with your family. If you haven't trained today, like get your training session in, stay off the internet, man. Because if you're on the internet at all in like the finance and investing and trading space, I mean, you would literally think the world is over. Like you would literally think, oh my gosh, inflation is back, which it might very well be. You would very well think, oh my gosh, like the US Iran thing is crazy, which it obviously is. But you've got the market that's what, 1% off of all-time highs? Like literally, what, 120 basis points off of all-time highs? And it's like, all right, man, like we could come down another 2, 3, 7, 11%, and we'd still be in pretty good shape. But not according to the internet, man. Johnny Pool's 47. He's having a tough go at it out there on the old interwebs. But yeah, EME S&Ps have rallied back a little bit, and so we'll see, man. If they take them all the way back to uns, I'm telling you, man, it's just nasty business, man. It is some nasty, nasty business. And so NASDAQ was all the way down to 29,000, just over 29,000. It's rallied 300 points off the low, so that's promising, I suppose. And then you've got the Russell 2000, soon to be Russell 3000. This guy is the weakest of the bunch. The low is 27.95. It's at 28.05. So you're basically right there, and you're not really too far off the lows really at all. So, all right, so there's your market commentary. We actually dipped back into the market commentary discussion, double dipped it, George Costanza style, and just like it didn't work out for him, I'm not quite sure it worked out for us. So let's go into the portfolio. Okay, so let's start with AMAT. So again, I want to clean things up. Let's tie off any loose edges, and then we'll go into vacation with whatever we go into vacation with. And, what's the worst that could happen? So we go into vacation, static short MES. What's the worst that could happen? So we go into vacation, static short MNQ. What's the worst that could happen? What could possibly go wrong? So let's start, though, with the things that do need our attention right here and right now. So the first one is going to be AMAT, which, again, if I look at, let's look at a 1 minute guy. Let's get Errol Coleman some of them royalties. Don't forget, if you click on a 1 minute chart or a 2 minute chart, even though Homeboy doesn't even use those anymore, like he's doing millisecond charts, I still think his royalty contract runs through the end of 2026. So every time you click on a 1 minute or a 2 minute chart, he gets 37 cents. And so I would definitely help our boy out and give him a little bit of something. So go back to, I don't really care about today. I want to see what happened on the drop. Man, look at that. There it was. Yep, look at that. That's what I saw. So I was, waiting for the number to drop, market close. I was like, all right, let me see how bad this is going to be. And I saw that right there. I was like, oh, this is pretty bad. And so I shut it down right about there. I was like, yeah, I'm not going to, it's whatever. It's like, I mean, could it have possibly been any other result? I don't think so. And so I actually didn't see it until this morning when it had come all the way back down to basically 440. And I was like, wow, that's crazy. It's almost like markets move and things change. And so I'm like, man, conference calls or whatever it was, I will 100% take it. And so for AMAT, I was going to take it off earlier, but I was like, nah, we'll go ahead and wait for the show. I mean, maybe it'll work out. I think I ended up costing myself about 40 or 50 cents, which again, at 1 BEU per 25 US dollars, that's 2 BEUs, right? Bonefish equivalent units. I mean, that's real money, man. Now that's real money. That's 2 solo missions to Bonefish since they're primarily solo these days. And so AMAT, we gave up about 40 cents or so by not closing it earlier, but it just as easily could have gone the other way too. And so I say that kind of jokingly. But let's go ahead and let's close out of AMAT and be done with this guy. And then we're going to see what else is cooking in the portfolio. So 623, let's give it a shot. No takers at 623. Okay. Let's see here. Now they're telling me it's 575. Man, what is up with these spreads? Hang on. What did I pay for this thing? I paid $5.10 for it. Wow, now I'm only going to make 65 cents? Man, they really kind of lulled us to sleep there. Like they really had us feeling good about ourselves, and now we're only going to end up with, 2 BEUs like total. I thought I gave away 2 BEUs and was going to still walk away with like 4.5. No, I'm going to get 2 BEUs when this thing is over. Still better than I thought it was going to be on the original move last night, but a little bit of a kick in the kidneys there. So, all right, let's go for 575. Whatever. Maybe we can reject it. Oh, I already have an order. I'm like, now they're not even going to take it? That's brutal, man. Yeah, that makes sense. They don't want to have 2 orders in there. That makes sense. Let me go close out of this this other order. And let's just go right at the mid price. 575. Let's do it. Boom, we got filled. Okay, so there you go. So we made 60 cents on the trade. I'll take it. I mean, it absolutely could have been worse. And so, all right, so we'll do MES and MNQ at the end here to kind of build in a little bit of drama. IBM, this guy's not going to work. You can clearly see these guys are both going to expire worthless in the next hour unless we get a miraculous Taco Friday, which is it impossible? No, I mean, it's not a zero delta, not by any stretch of the imagination, but chances are this guy's not coming back. So the mark price is 0. It's even a red 0. That's a little bit disconcerting. They won't even give me like a gray 0, even a green 0. Like throw your boy a little optimism on the 0. Like, no, they're giving me the red 0 mark. Look at how nasty that is, man. That is some nasty business. That's kind of like when they rally this thing back to unched on the close today. Man, red 0 on the mark. Man, I got to email support at tastytrade.com. And so, yeah, IBM, not going to work. Don't have to worry about closing it because it's going to be gone. Red 0 and all. Netflix, we have on our short 90 put, and so we are going to sit tight and do nothing here. This was an in the money put that we put on, just slightly in the money, just to try to see if we can't reinvent the wheel a little bit here with the short put, and just be a little bit more bullish. All kidding aside, and so you can see like we've got about 62 deltas of bullishness in Netflix. And so clearly, you know, that's greater than 50. So that indicates we are in the money. Well, when we put the trade on, it was in the money. It was maybe not this in the money because Netflix has come down a little bit since we put the trade on. But it was definitely a little bit in the money, maybe 55 or 57 delta. And so you can do that if you want to try to reinvent the wheel and you want to try to, you know, be a bit more bullish. Because remember, when you sell an in the money option, you're not only selling extrinsic value, but you're selling intrinsic value too. And so if the market does rally and the option goes out of the money, you are in line to keep both the extrinsic value, which is what we're used to, but also the intrinsic value. Because the intrinsic value is going to go away, right? Out of the money options, by definition, do not have intrinsic value. And so if I sell an in the money option, when it has intrinsic value, because it will have intrinsic value, because in the money options always have intrinsic value. If the market accommodates, which in this case would be the market going up because it's an in the money short put, the intrinsic value is going to go away. And so if I sold the option for whatever I sold it for, what, 4.25? You can see that right here. So when I sold it for 4.25, I don't want to go back and figure it out, but let's say that it was $1 of intrinsic value and 3.25 of extrinsic value. If this thing rallies back above, my strike is 90. If it rallies back above 90, then the intrinsic value of that dollar is going to go away. That's going to be no more immediately. That's going to be gone. And then I've just got to whittle down the extrinsic value, just like I would with any other out of the money option. It's effectively just kind of, you know, doing what we always do at that point. And so for Netflix, we'll sit tight because that's an interesting little project. And again, what could possibly go wrong? Starbucks up to 106. I mean, that's good for us. If it stays right here, that would be great for us. I mean, this is a really good price for us. Right around 105, 106 is really good. And so I'm really happy with the Starbucks position. Have no qualms about this guy at all. And then, of course, Snapchat. This has become our core position. I mean, you guys are my core position, right? But Snapchat, it's in the conversation. It's in the discussion to be included alongside you all. So Snapchat, we're down about 50 cents on the trade, and then that's that. Okay, so let's go to MNQ and MES. So first and foremost, let's do MES because there's only one part to it. It's fairly simple, fairly straightforward. You know, it's a deep in the money short call. We've still had this trade on. We've had this trade on for a while. You know, you can see we've been rolling this guy it's been a few months now at least. I like staying short here. I like being a little bit short here. It's effectively going to be our static position for a little while. This is going to be, all kidding aside, our core position for at least some time. So I'm just going to hold it. And I understand that when I come back, EMEA S&Ps might be 7,700. They might be 7,600. And this is the beauty of being small, right? This is only 50 short delta. And so, you know, understanding the sizing of the trade is so critical in being able to recognize this is what I have. This is what I have on. This is what I've signed up for. This is the gimme I'm going after. This is the gotcha I'm absorbing, you know, along the way to get that gimme. And here's my game plan, right? It's gimmies, gotchas, and game plans. And so I'm going to sit tight and do nothing because it's only a week and a half. Again, what could possibly backfire? I can't think of anything. Can you? If you can, put it in the chat because the algo would love to hear that. For MNQ, this one's a little bit different because we have two pieces to this guy. We have a ratio spread that's up about 40 points, and then we have our short call. And so I kind of go back and forth simply because the ratio spread is nice to have on, just to balance out the delta. Here, let me grab a different color just because I can. We'll do a little glacier freeze here. You can see the delta on the ratio is 12. The delta on the call is 41, 42. And so I'm taking off about 30% of my directional bias with the hedged component of this position. I really like that. If I wasn't going on vacation, I would 100% keep this position on. What I'm considering is taking the ratio spread off and just going short call only, effectively for the same reasons I'm short the call in MES. I would just be short a call in MES and short a call in MNQ. Still not crazy big by any stretch of the imagination. But, we're running into a couple X's in terms of our leverage to the downside there. And so I actually think, in thinking about this a bit more, we're going to leave the ratio spread on. Now, the reason why I was going to take it off is simply because ratio spreads can be a little bit complex and they can kind of require a bit more active management that since I'm going to be out for the next week or week plus, I'm coming back the Wednesday after Memorial Day. So it'll end up being about a week and a half. But Memorial Day, the markets are closed. And so, the futures might be open, but the regular trading will be closed. And so, because I'm going to be gone for a week and a half, I was kind of thinking about taking it off because, ratio spreads require a little bit more babysitting, I would say, than kind of your standard strategy. But I do like the fact that we are mitigating the directional bias a little bit. We are still a good ways away from our strikes. Like you can see, the NASDAQ is still 400 points away from the long put strike. Now, this morning it wasn't. This morning it looked like that thing was going to go in the money, and that would have been a different discussion. But I really feel like the NASDAQ would really have to move down significantly for the ratio spread to be kind of underwater. And if that happens, then my short call is obviously going to be doing well. And so that's not going to be a bad scenario for me. That's going to be a good scenario for me. The really not so great scenario for me, I guess, would be if the NASDAQ goes down like a ton, like 1,500 points in like a week and a half. But, what is the likelihood of that happening? Which essentially the fact that I said it just now, and I said it the way that I said it, effectively guarantees that it is indeed going to happen. But we're going to leave all this on and we're going to sit tight. And this is it. This is the portfolio. I will not make any changes over vacation. This is what you will see unless if I get assigned or something and I have to close something, that's a little bit different. But assuming that doesn't happen, we're going to sit tight. And this is what you will see when I see you guys back from vacation. So, all right, so where are you guys at, man? You guys are putting in some work in this chat. Let's go. I see you guys very clearly in the chat. And so let's go ahead and let's see. Let me see if I can surprise and delight some people. Well, I see Brian Hool is in the house. Brian Hooley. I'm going to go with Hooley. That sounds cooler on my end. It may not be correct, but it sounds cooler. Let's see. Brian Hooley says, where's Brian Hooley at? Brian Hooley. I had him. Oh, Dr. Jim, let's go. Running a butterfly to the upside on the algo today, man. I appreciate you so much. I appreciate you a whole lot there, Brian Hooley. Thank you, my friend. Let's see. And then I also see, I see PB Krista's in the house. What's going on there, PB Krista? You're not really a new person. You've been around for a while, but still, you're not like as old and crusty as like some of the old crusty people that are here, like myself. And so I think I'll surprise and delight your question too, since this looks pretty good. Dr. Jim, for a defined risk strategy like an iron condor, should I still look to exit the position at 21 days to go if I'm down 200% or continue to hold to the end and hope it turns around? This is a fantastic question. Get this question a lot. Haven't addressed this question in a while. When it comes to defined risk specifically, in my humble opinion, I would not close at 1x, 2x, 3x of credit received or what have you. Those are the rules that you apply to undefined risk. For defined risk, I much prefer, and you guys just saw it yesterday in ASTS. What is ASTS doing today? Are they up again? I'm curious to see if... Okay, so they're about honest. I think we would have ended up maybe losing everything, though, because of our strikes on that guy. So ASTS came back like $9 yesterday, and it was going to expire today. And so I was able to take a position that wasn't totally at max loss, but it was moving in that direction for sure, only worth maybe 30 or 40 cents. And then it came all the way back yesterday, and we got out for a scratch. It was maybe like a small loss, like 10 cents or something like that. But that was really, really nice. And so when it comes to defined risk, I much prefer to size such that I can just stay in the trade all the way to the end and give it the maximum amount of time to come back for me. And if it doesn't work, it doesn't work. In my opinion, that's a better strategy than trying to, take off my defined risk strategies earlier at 2x of credit received or 3x of credit received or what have you. I prefer to use those type of strategies with undefined risk. And so with an iron condor or a vertical spread there, PB Krista, I would leave it And, if the position is making you nervous, then that means that it's probably too big based on your risk tolerance and your risk appetite and what you're trying to accomplish, which is different for everybody, right? What's big for one person is not big for another. What's small for one person is not small for another. And everybody kind of has to find that out on their own. I much prefer size it correctly on entry such that you can run it all the way to the wire if you have to. And if that's what it comes to, that's what it comes to. And so let's see. Man, let's see. Can we surprise and delight somebody else? Man, I'm going to surprise and delight somebody else. I'm going to surprise and delight somebody at the very end. Man, what is going on there? New Home Nation. What is going on there? New Home Nation. Hey, Dr. Jim, if you open an option position, I should say, for a debit, is the max you can lose the debit? Is that always true? Ooh, that's a good question. And I'm going to say no, because there are situations where you can open up. If I'm not mistaken, I'm going to try to do one right now. Most of the time when we think of debits, we think of defined risk. We think of like vertical spreads and butterflies and diagonal spreads and things like that. I mean, vertical spreads and butterflies, the most you can lose is going to be the debit that you pay. If it's a standard vertical or a standard butterfly, if you're doing broken wing butterflies, you're doing broken heart butterflies and broken toe butterflies that we've done in the past, then all bets are off. Like those are going to have to be treated on a case-by-case basis. A lot of those are typically credits on entry though. And diagonals and calendars are debit strategies, but you have multiple expiration cycles. And so sometimes you can lose a little bit more than the debit paid because of the multiple expiration cycles, but it's not typically that much more. Like I buy a calendar for $2, you're not going to lose $10. You might lose $2.20 or $2.30 or $2.60 or $2.70. In a very rare instance, typically the debit that you pay is going to be a reasonable approximation of your worst case scenario. But they're New Home Nation. Let me take a look at like, let's go to Procter & Gamble. Look at Procter, down 57 cents, man. That's not good. The apocalyptic trade is down 0.5%. That's not good, man. That can't be good. So if I go into like June, I think if I set up a ratio spread, depending on my strikes, I can do it for a debit and have unlimited risk, which if that doesn't make any sense to you, it shouldn't. And that's going to kind of make the point that I want to make. So typically we do a ratio spread, like a 1/2. Right. Oh, look at that. It just happened. Wow. Look at that. So look at Procter & Gamble. They're coming for us, man. Look at that. I didn't think it was going to be that easy, but look at that. That is a 20-cent debit on a ratio spread, right? And so New Home Nation, you pay a debit on this strategy, but you most certainly have unlimited risk. In fact, guys, we're going to do it. Let's go to the curve view. Man, let's take a look at this strategy. Look at this. You lose money. It doesn't even matter what happens. You're losing money. Look at that. If you land in the tent, like you're good to go, right? But if you don't land in the tent, like you are not good to go. If Procter & Gamble rallies, or doesn't even rally, if it stays above 140, you're going to lose the debit that you pay on entry. If it crash, boom, bangs down below 135, and then obviously below your break-even point, now you're going to be exposed to effectively unlimited losses. Now, of course, it's capped at 0, but if Procter & Gamble drops down to 0, we've all got bigger fish to fry than our 1/2 ratio spreads. And so in this guy, no, it is not the debit that you pay. You can clearly lose more than that, which you can hopefully see right there on the downside. Great question there, New Home Nation. I felt like I was having to take a pop quiz there, and that was kind of fun. Remember when we used to do the quizzes back on the show? Oh, we should figure out a way to bring that back in. Oh, that'd be so much fun. Back when I did Where Do I Start with Brittany back in 2017, I did quizzes with her every Friday, and it was amazing because the way I used to do it, and I don't know if I could still do this now, but maybe we can figure something out to be fun. What I used to do was I used to tweet out the answers or tweet out the questions before the show, like 2 hours before. And so you guys could all like chime in and like we would see like, the answers and the polls and whatever. And then I told Brittany, I said, hey, stay off Twitter until the show. And then she could actually, while we were on air doing the show, taking her quiz, if she needed to turn to the audience, she could go to the audience and say, well, what does Twitter think about this? And it was so much fun because you guys took her down all the time. Oh my gosh, it was amazing. Like you guys would be like 60, 65, 70%, totally wrong answer. But I'm like, oh, this is going to make for some amazing content because that's all wrong. But it was great. It was so much fun and I enjoyed it. And so maybe we'll do that again. But let's see let's go back to the beginning. I mean, we're almost done with the show. So I think it's probably about time. But, I see you guys before I place my comment. And I see you, Point B. I appreciate you so much. BBB Fine is here. Ron Bashar is here. Ron Bashar says, let's go, Dr. Jim. Squeak out a Home Depot earnings trade before you go for the algo. I can't do that, man, because, again, I mean, I'm not going to be here for it. Is it Monday? Are they really doing? Oh, it's Tuesday, so you're making me pull the trigger a day early. Ooh, my birthday? Oh, man, I mean, I've been bullish on Home Depot from the beginning. You can check the tapes. But a birthday Home Depot trade? Got to be mega bullish. I mean, this is just really straightforward stuff, man. You don't need a chart. You don't need quants. You don't need 10Ks. Like, play it to the upside however you want to. You'll be totally fine. And by that, I mean, make sure you know how to adjust whatever strategy you are going to choose. So, Danu's in the house. Hello, Dr. Jim. With who do we have to talk for us to get a Dr. Jim watch list? Have a great time with your beautiful family. I don't know. Maybe I'll just make my own. Like, maybe we'll just, we'll kind of BYO DJW. Maybe we'll just go ahead and do that guy. And because you can make your own watch list. So maybe I'll just create my own and we can use it on the show. But the problem is, I don't know how you guys would have access to that. And so it would have to be one of those things that's like universally available inside the platform. And as of right now, we don't have quite the street cred that we need to pull that off. Sam L's here. Doc, enjoy the holiday next week. Time to finally step away from the charts, the bloops, and the chaos. Hope you get some real rest. Well-deserved, man. I appreciate you so very much. Yeah, I'm really looking forward to it. We got a lot of fun things playing. So today, my wife has already left me. She's already gone. When I get done with the show and the market closes, the first thing we're doing is I'm going down because my son is very interested in baseball now. I mean, he just turned 9 like a month ago, so this is about the time. I mean, some kids start when they're like 5, 6, 7, 8, whatever. But I think 8, 9 is about the time to start playing if you want to give it a shot. And so he's very interested in it. So it's been a lot of fun. And we actually live right next to like it's not a baseball. Well, I guess it kind of is. It's a huge like complex. They have like volleyball like pits, and they have basketball courts, and all outside, of course. And they have like 7 or 8 baseball diamonds. And I mean, it's walkable. Like we can walk there within 2.5 minutes. And so we just go right around the block, and we can go to the field like, earlier before a lot of teams come in for practice. Like if I zip over there at like 4:15, 4:30 when the market closes, we typically have about an hour to an hour and 15 minutes before teams start showing up for games or practice or whatever. And it's a lot of fun. So I'm actually going, well, we're all going together to get him a bat. So I'm going to go buy him a bat, and that's going to be fun. It brings back a lot of memories for me too. And so it's going to be a lot of fun. But Wolf is here. Happy Friday, Dr. Jim. Let's stay off the rails for 3/4 of an hour, man. Let's try. We're going to do our very best for the Dr. Jim Power 3/4 of an hour. Yes. Wolf, word is up, my friend. Thank you so much for being a part of the show. Point B, Doc, when correlations across positions spike to 1 during a market sell-off, how do you think about true portfolio diversification as a premium seller? Is it even achievable, or is it an illusion? This is a great question. And, obviously when the correlations kind of converge to 1, nobody's safe. Like there's nowhere to hide when that happens. And so it doesn't really matter. I mean, think about it, right? I mean, it's for premium sellers, but it's even for like a passive investor. Like if you're a passive investor, if I'm a passive investor, what am I going to do? I'm going to buy the market. I'm going to buy some bonds. I'm going to buy some metals, right? I'm going to buy some lean hogs, like whatever, but I'm going to be long across the board. Well, if correlations, converge on 1 during a huge market sell-off, then everything gets hurt. Like there's nowhere to hide. And so everybody's kind of in the same spot when it comes to that. And so in that regard, yes, there is no where to hide from a correlation equals 1 type of situation. But even if we just zoom out from that and talk more regular day to day, because that doesn't happen that often. It does happen, don't get me wrong, and it's important that you understand that, but it's not something that happens like weekly or even monthly, really, in my opinion. You could go back and you could have your AI agent look at this for you. I mean, it'll all be wrong, but at least you'll have data. At least you have something to look at. And so I don't think it happens that often, but when it comes to just thinking about selling premium in general, it can be very difficult to find truly independent observations. It can be very difficult to find truly independent positions because everything is so interconnected and everything is so, correlated to one degree or another. And we just talked about yesterday how the correlations were breaking down. And look, now today they're right back. So that's just crazy, man. Like yesterday, you had the market up fairly big, but the metals were down fairly big. And now today, market down pretty big, even bigger than the up move yesterday, I think. And the metals didn't go up. So the correlation, this is exactly making my point. The correlation broke yesterday, and then today it broke again. So it broke yesterday. They diverged, and now they have converged. And so again, you don't know before the fact whether they're going to diverge or converge or resurge. Like you have no idea what's going to happen. So it can be difficult. So that's why, generally speaking, diversification wise, I much prefer to think in terms of underlying exposure, of course. Different asset classes, not going to hurt you. Think about volatility. Think about strategy. Think about duration. Think about, type of product, like whether you're using options, whether you're using futures, whatever, options on futures. Like there's so many different ways to diversify, that we've been talking about inside the Tasty ecosystem for many, many years now, that I would not concentrate your diversification just on asset classes, because you can run into some problems when you do that. And so hopefully that helps. I think I maybe answered your question in like a very roundabout, not really kind of way, but I gave it my fair shake with 9 minutes to go before I'm on vacation. So you got very much a C plus effort. N1C is in the house. What's up there, N1C? I appreciate you. Point B says, Doc, did you talk to the fence guy? Are you going all in on the kids and let them teach you something practical? No, I'm going all in on the kids, man. Like I said, we're going to get the bat. And I've told my kids very clearly, I'm like, listen, because sometimes, especially Eli and Amelia, they're like, they're 100%. I am going to be bailing them out of jail at some point, and they're going to do it together. Like, it's not going to be just one of them. They're going to do it together. It's going to be a team effort. It's going to be some kind of co-conspirator type of thing going on 1,000,000%. So I'm like, hey, listen, we're going to get this bat. It's going to be metal. This is not a toy. This is never a toy. If I ever see you swinging this bat, I don't care if you're swinging it at a mosquito, which obviously would help everybody. That is not good. Do not do that. That is not okay. And so I've tried to make myself clear, but I don't know, man. I kind of have a feeling I need to put a stop loss on that position before it gets out of hand. But Sergio in the house. Greetings, Doc. Table for one at Bonefish, right? Yeah, see, that's 100% right. Other than the fact that we just sit at the bar, man. That's the beautiful thing about rolling solo Jason Derulo style. Like you can just go right up to the bar and there you go. Right. And you think the bar at Bonefish is packed? Absolutely not. You're going to be the only one there. So you can take your pick of a seat. And that is how we do it. And so Sebastian is here. What is up there, Sebastian? Appreciate you, my friend. Weiss is here. Happy Friday, Dr. J. I'm excited to see what May expiration brings. I know it's OPEX today. It's brought a lot, man. We've already kind of seen, I think, most of it. We've only got an hour to go. And so hopefully it's not too much crazier going into the future. Brian Rakuten is here. Afternoon, Dr. Jim. What is going on there, Dr. Jimbo? Appreciate you, my friend. Look at Brian Dowdy in the house. Man, look at Danish Dynamite is here. Not much of a snap, but better than nothing. Have a great vacation. Man, I thank you very much. It's going to be great. I'm looking forward to it. We're all looking forward to it. And it's going to be awesome. And again, I get to spend the first weekend, the first part of it with just my kids, which is cool. I laugh and I joke, but that's a really special time because, we get to do all the things that Autumn won't let us do. Like, it's so funny. Like last night, Autumn texted me at like 9:30. Kids go to bed at 8:30, right? Autumn texted me at 9:30. She said, hey, did you have a problem putting the kids to bed? And I'm standing there with Penelope and my other two kids, but it was mainly Penelope. And we hadn't even finished baking our peanut butter cookies yet. And I just texted Autumn back. I'm like, go to bed. I'm like, we're just getting started. Like, we're just getting going. So it's so much fun to be able to do things we can't normally do when the boss is in town. And so it's gonna be a fun weekend. Let's see. Luke Sotos is in the house. What's up there, Luke Sotos? Dr. Jim, thoughts on some ARM? Have a 220 cost basis. I want to get rid of these shares, sell weeklies, or got out at 30 to 45 days, leaning towards drop back to 200. I don't know. Let's take a look at it really quick. ARM got the stock at 209. You said your basis is 220. Okay, so you're underwater by a little bit. If you go to a table view, like if I did a June monthly, oh yeah, you got lots of premium in here, man. Yeah, you can roll into the weeklies if you want to, but there's a lot of things that you could do. I'd probably get some premium coming in against this some way, shape, or form. And if you just want to be done with it, then I would probably sell something, I'd probably sell something in like the 220 to 240 range. You could sell the at the money, meaning at the money with your basis. You'll bring in more premium. You're capping your profit potential, of course, but if it doesn't come back, it's going to give you more protection to the downside. Or if you want to give yourself a little bit more room, maybe you sell like a 240, for $8 or so. I think anything in that range or in that region is probably reasonable when it comes to ARM. And of course, you can roll up to the weeklies if you want to do that instead. Let's see. Stockton is here. What is up there, Stockton, for the algo, man? Look at you. Brian McBee is here. Friday is leg day for me, man. That's a great way to show the weekend who's boss. So nice job, my friend. RML, Doc for the algo, appreciate you. Michael Ellison is here. Tacos and Snap, what a show. That is correct. We don't have the tacos yet, though. We only have an hour to go. Although our boy usually does it after the market closes. Does he not? Like, typically, it's coming in, like, he won't even do it. He'll wait till the futures are closed, too. Like, he'll wait till, like, 5:15 or 5:20, and then it's just all you can eat, like chimichangas and fluatas and kind of whatever you need there. And so let's see. N1C is helping out Point B. That's what I'm saying. Anta is in the house. What's going on there, Anta? Give my best to Uncle Da. You are 100% correct, Dr. J. There is no Taco Friday except for bonds. Again, they're talking, man. They're yipping. They're yipping. Down 2 points. I don't know, man. Something might happen. We will have to wait and see. Let's see. Ron Bashar, Taco Bell just launched a taco pizza in time for the rescue. How about a Xeon Strangle? We go from taco pizzas to Xeon Strangles. That's my From Theory to Practice fam for you. Good job out of you. And so I'm going to pass because I'm going on vacation. But remind me when I come back. Let's see. Saltwater Wizard. What's going on there, Saltwater Wizard? Why is CopX set to closing only? I don't know. I've never traded them before. That's just a copper ETF? Interesting. Well, copper's been pretty crazy as of late. Let me see if I go to sell something. Yeah, that's crazy. I don't know. I don't know. I'm not as familiar with the product, and so I would just email support at tastytrade.com. They can square you away and let you know kind of why that's set the way that it's set. Let's see. TL Bryant is here. I'm sorry. I was going to say Nibs, but it's not Nibs. NBIS. What do you say? I've never heard of it, which hasn't stopped me before. But Nebius Group, $220 a share. Liquidity is 3 stars. Okay. Trade page, you got your weekly options. Okay. You got the monthlies. It's actually not that bad. I mean, looking at the at-the-money strike, you're only about $1 wide on both sides. For a $220 stock, it's not the best in the world, but it's not the worst either. You could do, you got IV rank of 95, and so I don't know what's going on with Nebius, but something's going on in there. And so I would just make sure you're small, make sure you got your position sizing in check. I don't know. Something like a short put, something like a short strangle. Obviously, define risk. You could do a bunch of things. Vertical spreads are in condors, what have you. And so I can't really analyze it anymore because I've got 1 minute left. And so I want to get to at least a couple more before I get done. CK is here. I'm here for the Bloops technical analysis, my man. I appreciate you so much. Brian Anta's talking about the CopX two-factor authorization. That may be what will do it for you there, Saltwater Wizard. So give that a shot. Let's see, Brian McBee. Are you guys going to hit Bonefish, Starbucks, and Bojangles on your vacation? See, probably not, because again, well, not Starbucks, because Starbucks is a joint venture. Bonefish and Bojangles, they're typically solo missions. And so since I will be spending most of my time with my wife on our vacation, I don't know that we're going to do that too often. I'm going to push for it. I'm going to lobby for it. But, this is not necessarily a democracy. It's a lot more of a dictatorship. And so we'll do some Starbucks. I can almost assure you of that. But the other two, the deltas are not high. And so let's see. N1C, the old idea is that bonds are a safety net is showing the weaknesses now. Maybe so. That could be true. All those portfolios with 60-40 are hurting immensely now. Sort of, right? But it's like, the bond portion is dragging, but the stock portion is still doing pretty well, of course. And then I see you guys, man. Reggie Sharma's here. Absolute Beginner is here. Away from the Numbers is here. DTM Lau is here. Viggy Sags, Organic Farming, Absolute Beginner. Man, I got to go. I got to run and get you guys to Tim. Man, I appreciate you guys so much. I'm going to miss you guys, man. I really love the show. I enjoy the show. I look forward to it every single day. And so it is going to feel weird to not do it. But I am going to be out until the Wednesday after Memorial Day. But still, I'll try to check my email at least every couple of days. So if there's anything I can do to help you, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys after Memorial Day.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Let's celebrate, dance to the beat. Forget the wars and stop the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we're side by side. Hey, side by side.
Hello, everybody. Actually, it occurs to me this little intro doesn't make the YouTube clip, but so this is kind of pointless. But if you've ever seen the YouTube stuff, they have like a few words to describe like the thrust of the show. It's been funny lately because it's always been some variant of like lifetime highs, still short. And it's like, could you put some nuance in there? Because it makes me seem psychotic. It's not that straightforward. It's sort of like, oh, wow, it's sweltering out here today. Yeah, Tim still has his down coat on. What's with that? Anyway, but it's red today. What I have been resting upon is the fact that even with lifetime highs, excepting yesterday, portfolio's been making progress like a salmon swimming up against a furious stream. And today, the salmon's kicking back in an inflatable raft. It's just whoosh. Because what I was saying yesterday is true. It's sort of like peak happiness at these summits. Give it a week, like I said yesterday, or give it 6 days at this point. You're not gonna, the peace, love, and understanding is gonna be quickly forgotten. The CEO's already wondering, like, why did I come out here? Because nothing came of it. I said that they were going to like form a committee to talk about trade or something. No, that's thrilling. That's marvelous. Maybe they'll make a binder in a year. So the key is, I keep going back to my anchor position, bonds. Kevin Warsh ain't going to save anything. Interest rates are going up. They will continue to go up. And ain't nothing Mr. Warsh going to do about it. The $40 trillion in debt will be more and more expensive for the U.S. to service. And sooner or later, equity is going to be like, what are we doing up here? And we're getting a little taste of that right now. So bonds are the anchor position. Whether you're long TBT or long TLT puts like me, or short TLT, big trade, that is going to break this madness. And it's nice to have one day of it, just a little bit of sanity in the sea of mayhem. So yay bonds. And I was right about Bitcoin yesterday too, because I was decrying getting out of that short, saying, this is probably a great place to get short right here because it's right at the trend line. That's exactly right. That's exactly what happened. And we'll look at that in a moment. I wish the YouTube videos would include this bit. I mean, it's not like me talking about my experience at the marathon or something like that. It's just this is important exposition about what's coming. But regardless, you're live, so you get to see it. They won't. So now we'll begin the YouTube part. So here we go. We're going to look at symbols now. We're going to look at charts, and we're going to start with the spider, which is the odd color of red today. Yes, basically the Xi-Trump summit thrills have been undone. We've Control-Z'd that whole thing. Who knows what it costs to fly them all out there? $100 million? It doesn't even matter anymore. But total waste of time. An email would have been fine. So it's over. Nothing came of it except, some committee or something. And so there's this kind of letdown happening with what was that all about? You can see this reflected particularly in the FXI. I had shorted this on Tuesday. If I had just cross-mental arms, I would have been fine. Because Wednesday, there's this big fake out. There's this weird, won't things be great now spike. Totally dead. By yesterday, that was gone. And today, it's super gone. We're basically back to where we were like a month ago, 2 months ago. Put it this way. We're trading where we were trading in March. Okay? In March. Can you imagine if U.S. stocks were like that right now? So yeah, China's back to where it was in March before the mega rally. EFA is also down about 1.65%. All this buying aside didn't change a thing. The gap has never been violated. It's nothing but lower highs. EFA doesn't have Nvidia and Apple and Google propping it up. A little broader, a little more realistic, because I've spoken before about the dreadful breadth of this market. Fewer and fewer and fewer and fewer companies are holding this circus up. And when they stop, when Nvidia shareholders decide, 8 billion % profit is enough, I'll trade that for some cash now. Look out. But the EFA is reflective, I think, of that kind of more broader global reality. SMH, the semiconductors, are down pretty hard, 3.2%. We're basically where we were a week ago. Yesterday, I went crazy and basically looked for the most egregious bottle rockets I could find and shorted them. Micron, AMD, Seagate, Western Digital, anything that looked like this, I finally decided to short. And SMH, I think, is indicative of the kind of selling we're finally seeing. Because if SMH is down 3.26%, you're going to find stuff that's down 5, 7, 9, 10% easily. Like I said, Micron was one of those, down $43 right now, about 5.5%. Just undoing all the, whatever they thought would come out of this China thing didn't happen. And so that's gone now. GLW Corning Glass used to be just a glass maker. Now it's all about fiber optics and hyperscalers and data centers, down 13.38, 6.4%. Once again, putting us, basically, we're teleporting back to Monday morning. Everything that's happened this week has become undone. And the war's going to be put on pause all this time. No one's talking about that anymore. They'll be talking about it again, real soon. AMD, another short, down almost $20. Down about 4.5%. And strictly speaking, the next kind of support on this is really more like there. And we're seeing similar stuff with SMH. You'll find that the gap that took place between these 2 days is fairly ubiquitous. And so if the selling continues, look for that as the first meaningful support zone. It's not like, the 6.5 hours of selling today will just take care of everything. It won't. Another short, Marvell, MRVL, down a little bit, about 1 3/4 yesterday with so many stocks. It was a lifetime high. Intel I was not in, but it is worth noting that it doesn't look that dramatic here, but Intel has gone from around 133 to around 103. In other words, around $30 for this week. Or I can't do the math that fast in my head, but like 24%, something like that. That's a lot. Now, it's only undoing some of the obscene gains that it made already. So it's not like if you bought in April, you're kicking yourself. But it is worth noting just how quickly these things can get undone. Because whatever the percentage is, somewhere in the low 20% in the span of this week, which one would assume is a very bullish week, God knows Goldman said it was. Goldman was like, buy Chinese stocks. Why? Well, because Trump's flying to China. Thank you, Mr. Sachs. You see how well that worked out. And younger stocks, too, here and there are getting blown to smithereens. Here's gambling.com, fittingly. I saw 2 days ago a research analyst came up with a strong buy on this. And it's funny because even on days like this, what the analysts will do is like they'll revise their price targets down like 50 cents or something and maintaining the buy rating. So anyway, heading quickly to zero, it seems, is down hard. Gambling.com down 43%. I made mention of gold yesterday by way of dust, particularly. I talked about how dust was, which I spent way more time than the other symbols on dust, talking about what a bullish-looking setup it was, which implied weak gold, weak miners. Well, that came true. Look at this. Here's GLD down almost $10 and 2.21%. And I think it's got way more to go. GDX, the miners, are down much stronger. They tend to be an exaggerated, amplified move based on whatever gold's doing, down almost 6.5%. So what I was raising a stink about with dust yesterday turned out to be very appropriate. Dust is up 13% today alone. We really focused on this one yesterday. I talked about the higher lows it was making, the clean gap. Didn't do anything about it, but maybe you did. So yeah, dust is looking real good. And silver, which we haven't looked at in eons, is doing quite poorly. SLB down 8.38%. Maybe it'll find support down in this gap. But yeah, I mean, I've anecdotally, I've mentioned going into my local dealer, which is usually empty, and it was just crowded with people. And it's like, okay, this is a signal of the top. But yeah, January 29 seems to be the peak, and we are down about, about 30, 40% from there, quite a lot. But in general, the fever is definitely broken for the moment. If you look at SOXL, the leverage bullish on semiconductors, this is down almost 10% today, as with the others, basically going back to around Monday morning with the price. And I haven't looked at Cerebras. How's that doing today? Well, there it is. This came public yesterday and peaked at around 385 or so. It's trading around almost $100 lower than that now. So you can see how well this has done so far. But they, like I said yesterday, this came public at like 200 times sales or something like that. Just something it feels like the globe.com, back during the internet bubble. Basically, all right, we're gonna IPO the craziest stuff of all. But I'm telling you, nothing real is going to happen on the downside until SpaceX comes out and maybe Anthropic. Once those are in the rearview mirror, yeah, it's not the beginning, it's the end. So I don't think anything big is going to happen until then. But after they're done, yeah, you might be seeing some bars like this. But I'm going to keep going back to bonds. So important. Here's TLT. Look at this. This is the peak back on February 27. Spot the trend if you can. It is just weaker and weaker and weaker. And interest rates turning, getting stronger and stronger and stronger, way over 5% now. I think I read the U.S. is spending like $4 billion a day on interest payments. I think that was the figure. It adds up after a while. Soon you're talking real money. And of course, this is helping my LEN puts, Lennar, LEN. down almost 3% on the stock, and so the puts are doing even better. And XHB, just broadly speaking, home builders, look at this, down about 3.33%. Bonds weaker, interest rates higher. Home builders, whether you're talking FND or HD, anything to do with houses, it's all weakening. And so very broadly, if you look at ZB, well, look at that. I didn't even notice this. We're cracking below support there. And, we've been here before from time to time, but there's going to come a point where the selling really starts. But these are bonds. Remember, they usually just inch a penny here and a penny there. Today we're down 1.61%. That's enormous. That'd be like the Dow being down 2,000 points, relatively speaking. Not in percentage terms, but just in terms of just how big a move this is. Oh boy, almost out of time. I'm going to put my sneakers on and jump to the very bottom. Bitcoin. I said yesterday that the fact that we were pushing up against the broken trend line probably represented a great place to short, which was paradoxical because I was out. That is exactly right. It was exactly right. We have lost all of yesterday's Clarity Act gains, and we have traded even lower a little bit than Wednesday. So my point is, at long last, that uptrend is broken, and I would not be surprised to see Bitcoin get into the mid 70,000s next week. Okay. I am 9 seconds away from the bottom of the hour, so I'm going to say goodbye. Next week's a shortened week because, no, is it? No, it's not. Next week's a normal week. Then the following Monday, we're off. So anyway, I will see you here on Monday, and hope you're doing all right. Have a good weekend. Bye-bye.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Ilya, we're back. We're here for the final 30 minutes of the trading day, final 30 minutes of the trading week. We're here on Last Call. I'm your host, Chris Vecchio. He's Ilya Spivak. Thanks for watching Tasty Live. Let's get right to it, Ryan. To the charts we go. S&P 500 peeling back some more over the past hour. 74.43 here on the chart, threatening a close below the hallowed 1 week moving average. Same thing for the NASDAQ, down over 1.3% right now. Russell also down 2.25% here on our chart.
This has been the one that's really been working.
We'll get to it.
And it's because tech's not in it.
We're going to get there. We have bonds here, which are really the perhaps tail wagging the dog over the course of today's session. Yes. At the long end of the curve, yields are running up 5 years. With that bad auction earlier this week, 5% coupon for the first time since August 2007. We're seeing now some follow through on the other side of CPI, PPI, and the Xi Trump summit here. Yields above 4.5% in the 10s right now, which has proven to be good news for the US dollar, bad news for gold, for silver, for all of the metals in the market. Silver especially down near 10% right now on today. Oh, reminiscence of early February price action. Never want to think about that again, and yet that's very much what we're doing. Ilya, we look at oil, though, and that is on the march as we head into another war weekend where President Trump did not get much of a firm commitment from Xi about helping ending the war, which I don't think that
or
was
anything else for that matter.
Yeah, but not that I thought that was the expectation going into it.
No.
But maybe there were some people holding out hopes. And if you just look at the broad positioning today, yields up, dollar up, gold down, stocks down. It's kind of the war trade again with oil running back through 100 here. In terms of the sector rotation for today's little dance that we're doing here at the end of the day, most of it's bad. We track now 28 sector ETFs. We had to add DRAM, of course, and DTCR to the mix because who knows? Those things are hot. Maybe that marked the top. But now 28 sector ETFs we track here. And we only have 4 that are in the green. So, Ilya, it's a pretty bad day overall for the market. It's red most of where you look. It's also an OPEX day. And we also have Nvidia earnings next week. So help us sort through this noise right now. Is this just war repositioning or something more afoul?
So in my mind, there's 2 things that are occurring here that mark what is seemingly let's not say a sentiment shift, but certainly an attempt at one. And I think the sentiment shift in the bonds is very clear. The sentiment shift in the dollar is very clear. They're both not just up and down. They're taking out key levels. Bonds are breaking a major range. The dollar is breaking a major range. So there's things on the move here. And I think the fact that stocks decided to care, having ignored this narrative for really the better part of a month and a half, I think speaks maybe to something of a sentiment waypoint having been crossed. I think we saw the inflation data that everybody is freaking out about now, and all the articles are breathlessly writing about, did you see CPI? Did you see PPI? Oh, okay. Why didn't the markets react at the time? Because at the time, I would argue, you still had the week's biggest we can ignore the war story. And that was seemingly the Cerebras IPO, which encompasses within it all of the hot potato-ness of the melt-up, led exclusively almost by chip stocks. And this is the chip stock of chip stocks. It's wedded completely to the fortunes of hyperscalers, wedded completely to the fortune of, in particular, Amazon and OpenAI. And so, an explosive IPO. They were, I think, pricing it at $185, and it came off at $360 odd. So that felt like something of a sentiment marker, maybe even before Nvidia, because frankly, what's Nvidia going to say that we don't know? They're going to come out and they're going to give explosive numbers, and we know that. You're right.
Did you say that about Cisco earlier this week, though, too? And that still had a, what was it, 17% pop after earnings?
It did. And so I think it's important to consider that, by the way, this is not just pulling and cherry picking stories from today, right? The divergence in the war dynamic, stocks versus everything else, occurred at the start of earnings season. That's probably not a coincidence that stocks decided we're going to not think about the war for these next several weeks because the hyperscalers are going to tell us all about the oodles of money they're going to spend. Let's pay attention to that. Meanwhile, everything else has had the war trade on the entire time. Oil didn't unclench. There was no round turn reversal in gold or in bonds or in the dollar. They had a ceasefire correction of maybe 30 to 50%, depending on what you look at. Let's say 50% for gold and the dollar, 30% for bonds, and then everything came right back. Crude oil has been sitting in its range basically since February with about 101 as the midpoint. It's pinned right there. I think for stocks, maybe what the Cerebras, excuse me, who knows anymore, what that IPO, I think, showed you was kind of peak concentration in a story. And maybe that was that. And of course, the Trump-Xi summit on top of it, an important event risk as well that maybe delayed a reaction to CPI and PPI. I wrote about it earlier in the week and said, neither one of these leaders wants to have a fight. But they also don't want to have a deal. And so what we're going to get left with is status quo. And the markets are going to find that to be an opportunity missed to take some risk off the table, but by, for example, extending the tariff ceasefire from last year. Saying, listen, you get the rare earths, we're not going to throttle that, we're not going to bring tariffs back to 140-odd%. That deal is about to expire right around now. The least they could have done is, let's say, agreed on that and created some certainty.
Okay.
But they didn't.
They didn't agree on anything.
Opportunity missed. So the markets are back to a place that tells you, okay, so you've got higher inflation and more policy risk. The higher inflation crimps growth and gives you higher rates. More policy risk means you're likelier to make a mistake that needs for lower rates. It's not a happy place to be.
Who was expecting anything to come out of this summit?
I certainly wasn't. I think the great thing to have achieved was cordiality, and that was achieved. But again, the event risk is notable in its passing oftentimes, right? Like when the outcome is already priced in, what often happens? The markets front run the outcome. Chinese stocks have been rallying for 5 weeks. They've pointedly stopped. Why? Markets front run these things, saying, well, on the off chance that they manage just to prolong the status quo and say, we're going to kick the can down the road on our tariff conversation. We're not going to agree on anything. We're just going to kick the can. Nobody wants an issue here.
So
they couldn't even do that.
You're getting very bearish.
I mean, I'm not getting bearish. The market's getting bearish.
You sound very convinced that this thing is going to keel over.
I look at this and I say, look, would you go out there and sell everything under the sun here? Of course not. That would be crazy. In fact, I got long some things today. For example, IGV. We talked about it earlier. I'm long. I have no problem buying even a tech stock ETF if it makes sense. And this to me looks like Bitcoin, as we talked about before. It looks like a software disruption fear that's probably misplaced.
I'm curious, do you find that because AI was the driver of software's downfall, because you see that there could be a retracement in semiconductors in the AI infrastructure trade, that those that were punished on the way up on that trade, e.g. software, they're going to be rewarded when everything else comes back in. Looking for basically the gap to close between IGV and SMH a little bit here.
That's part of it.
Or is it just a...
That's part of it. I mean, I think people are going to choose their own adventure. I think there's going to be those that say, is it realistic to say AI is going to put Salesforce out of business, or is it realistic that Salesforce is going to figure out how to leverage AI and is best positioned because it is huge and has lots of money? Surely it can figure out a way to pay its way to effective use of AI. Who better to leverage the technology rather than wait for it to eat their lunch? I think it's much more plausible to say these big software names in aggregate, who knows about individual names, but in aggregate are probably going to figure out how to leverage the tool rather than stand there and fiddle while the ship goes down. So I think that part of it is probably overdone.
Oh yeah, we have about Yeah, maybe. We have about 15 minutes left in today's program. S&P 500, 75.41, loss of 84.5 points or so, 1.12%. The NASDAQ.
Holding that 4-hour break, baby.
1.32% lower, 29,299, 298, 386 points to the downside. The Dow here today is off by nearly 1% as well. It's 489 points. And then you have the Russell, which is your loss leader in today's session. Banks are doing poorly. The energy stocks, well, those are up. Nothing else really is. You see here 2.25% lower right now. A little bit of de-risking going into the weekend, Ilya, here. But before we get there, Ryan, do we have commission rebate lined up? Is that ready to go? Bing, bang, boom. He's the best. 30 days of double commission rebates for new customers who open and fund a Tasty Trade account. The rebate is tied to how much you trade, not how much you deposit. So the more you trade, the more you get back. This isn't a deposit bonus. It's a trading bonus. The value scales with your activity, which means if you're a serious trader, you get serious value. And I know everyone's been talking about the PDT coming to an end on June 4th. So lots of good reasons to be trading right now. Volatility up in today's session, Ilya. Oh, should I be mentioning where it is? Yeah, go to tastytrade.com commission rebate right there on the screen. That's the URL. Ryan, we can go back to the charts right now. The VIX here today, Ilya, is one of the more interesting parts of the market. One of the reasons why I can't I bought the dip. I got it basically right here.
I got more short, but selling calls. And that's in part to offset my prior sins. And also in part because just look at this vol. It's not going anywhere.
That's kind of the my point here. I'm looking at this today, and yeah, it gapped open higher, and it ran up, and it hit 1927, and the market decidedly said, "Nah, we're not going to go to 20." And in fact, we're not even going to stay above 19. We're up 88 cents, but where we gapped open to, and I mentioned this on Futures Power Hour, when you look at a lot of the weakness in equity markets and a lot of the move in yields, like in the 10-year note, that happened overnight. It has not, those haven't moved in 4 or 5 hours at this point in time. VIX opened up at 1807. It's going to close at 1811. So 4 cents higher for in the US hours. I can't be,
interesting about
can't be convinced. Can't be convinced that this is it yet. We have Nvidia next week. We're going to ring the bell. We're going to call the top before Nvidia earnings.
I don't think you have to call the top to get short here. Why would you need to call the top?
I think you might have a chance at better prices, which is what I'm saying. Like, I think you could probably see in the way that I'm positioned, I think we're going to get another run at 7,500 before Nvidia earnings.
Could be.
And then on the other side of them, you're looking at 7,500, 7,550, way better to get short on a vol crush on the other side.
Is that maybe too public?
I've
said something similar, but I'm starting to think maybe it is.
Nick and I were talking about this earlier today. Like, wouldn't it be ironic if, the top was yesterday, the day that President Trump's stock trades were all revealed, and he's basically telling people this is what you should be buying. That's how some people were talking about it.
The man owned Dell and said in front of a microphone, people should buy Dell computers while owning the stock.
Right. And so we have a great signal versus noise on this that was recorded today. So be sure to check that out on our YouTube channel.
I'm looking
over the
forward to
weekend.
it.
We went through. He made over 3,000 trades in the first quarter, which is noteworthy.
How does he have time? He's Superman.
So his assets are delegated. We explain this all in the video. Watch the video.
Watch the video. See, I'm trying to help you here. You got to stop me and tell the folks to watch the video.
And you need to watch the video too. So,
I'm looking forward to it.
So we have, wouldn't it be interesting that this is what happens? So you get the president's, ethics release yesterday, today's OPEX. But, hey, the 4D chess brain is, of course, people think that would mark the top. So you have to buy the dip. And of course, people are going to think that. So then you can't buy the dip. And you just chase yourself in circles, right? Getting too conspiratorial about things. My approach here is simple. You and I are on different sides of this right now. I've been looking at this little band here. 21 and 50 day mean nothing when you're going down to a 4 or an 8 or 6 hour time frame. But the behavior is all I care about. The moving average numbers really don't mean anything to me. I'm just trying to identify how the trend is operating. And since the April low, for whatever reason, when we've had these little dips into this zone here, we've seen the market pull up. 4 hour time frame, that's between the 21 and the 50. And that's what we got today here so far. It's not great. You're not getting that immediate rebound back, although other episodes, you didn't necessarily get immediate rebounds back. So I'm content with holding again, because it's market is in the area where it's fallen before when it's had a little bit of a spook. And today's an OPEX day after a huge run higher and some bad data this week. So
that break of former resistance turn support, though, is different.
Yeah, but this is where I got it. And so I'm totally comfortable being here at 74.40. And if we break down below 7,400, then I'm going to take a small loss after, bobbing and weaving in and out on the long side for the past.
And that'll be a good thing.
It happens.
This is what you do as a trader who rides the rails of a trend. Eventually, you run out of rail. And the idea is you make more while riding than you do losing when you fall off.
You know what I will do, though, if we do get a more meaningful pullback? Those 8,000 calls will be cheaper. They will be cheaper.
I mean,
don't have enough of those.
I mean, eventually we'll get there. The question is, what kind of a DTE parameter you?
Still December 31st. Still, that's where the exposure is.
I don't think that's unrealistic. Even if we get some meaningful fuzz here, I'm constantly reminded of how I felt in 2008 when I sold euro at close to 155. It went down to 118. I thought I was a genius. It then rebounded to 140 and gave me what felt like a series of defibrillator shocks over the course of about a 2-week span until it fell back down to the lows. And somehow I was stupid enough to sell more. So it was a magical year, but the rallies that happen in bear markets are notoriously violent. So if we really are starting something here, the incremental swings higher inside the down move, especially given how skewed this is and how illiquid, they're going to be aggressive.
I love that you say if this is the start of something. It reminds me of Tom saying, is this day one?
It could be. It could be. No one knows. You look at the bonds breaking a range they've had like this. 30-year bonds don't casually break out like this.
No,
you look at what's going on there and the dollar. These are deeply liquid markets. Much more liquid, by the way, than stocks. Much more.
Of course.
So you see that amount of liquidity. None of it skewed into semiconductors. None of it with most of the money, just looking at the volumes over the past 6 weeks, sitting on the sidelines. No, big markets that trade every day in a convincing fashion, that have orders of magnitude more money in them than all of the world's stocks put together.
You're bringing up the volume here today. It is 1.6 million. It's higher than it has been in recent days.
Yes.
It's higher on a red day than a green day.
Well, to your point, markets don't panic buy; they panic sell.
But it's also OPEX. And so for an OpEx day, given that we've been running at like 1.2, 1.3 million, I think we had a 1.4 million day earlier this week on a green
Could have
day.
been higher.
1.6 feels light for an OpEx day where you're having
Could
a
have been
1%
higher.
down move, right? If this was real, again, the conviction, where's VIX getting above 20 on this? It's up from 18.
How much of that, though, do you think is that this is all one thing? This is not about the S&P. This is about one sector. It's not even about tech. It's about one slice that has been pushing it higher on low volume. Maybe there's just not enough here to move the VIX. Maybe this is not VIX relevant.
The earnings have been good widespread, though. We've had
no, just mechanically.
You know,
the VIX is derived from S&P options. Maybe there's just not enough relevance there.
NASDAQ IVR is 60.7 or 60.1 right now, triple Qs. You know, going to the earnings there for a second, we talk about it's one sector, semiconductors, that's drawing in all the attention and helping drive the NASDAQ and broadly speaking, the market higher. The Russell and Dow have lagged, although we did get back to 50K in the Dow ever so briefly, and that seems to be a new ceiling of sorts. 91% of companies have reported 27.7% earnings growth rate. Ilya, for the non-Mag 7 companies, the earnings growth rate is sitting north of 16.5%.
Very healthy.
That's very healthy for the rest of the market too.
But also, if you think that matters, then you can explain to me why all of this rally has happened in a single sector and the equal weighted S&P is still below February's highs.
It has
if everything is so peachy on earnings outside of tech, why does no one care? And again, I'm not saying it's not peachy. I'm saying no one cares.
Well, no one cares for this reason.
Right.
We flipped today into becoming a market where now we're 35.5% chance that we have not one but two rate hikes by next July.
Only knew the power of the dark side, sir.
No, I'm not going back there. Never again.
But in fairness, right? This has been the broken record that I've been banging on for a year and a half. That the cost of money at the end of the day matters more than anything. That before you decide what you trade, you have to decide if you'll commit capital to a business venture, to a purchase, whatever it is. And that has to do with the cost of money. And if you make people uncomfortable with the cost of money, all of everything else is for the birds.
We got to hear from Warsh. We got to hear what Warsh says about the next move. I don't think he's going to come out strong on a cut. And to his credit, Stephen Mirren came out today with some comments about what he learned during his tenure as Fed governor. And he pointed out that it really is a committee, right? Yes. Unlike other parts of the federal government where you have agencies and agency heads, and this is the exact example he used, where it's basically an executive. And if you don't get along with that boss of that agency and they want you out, you're out. Too bad. The Federal Reserve is a committee, truly operates by committee. So this notion that, well, Warsh is going to just go in there, it's slow moving. Mirren pointed out that it moves very slow. It's slow to change because you have all these disparate opinions that all have equal weights. And so Warsh is not going to. So I guess what I'm looking forward to, I think what the market wants to hear from Warsh when Warsh speaks is he's going to tell us that he's not keen on cutting rates anytime soon.
Or at least that he's concerned about inflation and that he believes his own story about the eventual productivity victory over inflation. Powell has been talking about how he's been surprised about how productivity outside of AI has been building for a few years. This is not a crazy out of consensus idea. Kevin Warsh is not incorrect in citing that. He might be incorrect in wanting to cut rates right now on that basis. And so if he comes out and says, look, I still believe in my longer term productivity story, but this is not the time. That would be a sensible thing to say.
Yeah, he could turn the corner here. You know, it's interesting. A bunch of the dogs today are doing well. Microsoft, which has famously not been a winner because it's basically a, what did I see someone call it the other day? I can't repeat that on air. Microsoft is a dog. We'll just leave it at that. Microsoft is up. Intel is having a terrible session, down 6%. But Apple is still the narrative around it's so funny that it doesn't have enough AI at points. And then sometimes when AI stuff is down big, everyone goes to Apple and goes, thank God Apple doesn't have any
Oh, good. We can just sell more iPhones and call it a day.
They are in the news today, which volatility is relatively flat over the course of the past 2 weeks as we've seen this market rally. They had a partnership with OpenAI, which now apparently going to court over.
It's souring, yeah.
You'll now be able to get any model that can be pre-built into your new iPhone. It's going to be Gemini. It could be Claude. So OpenAI is not going to have a monopoly on that. In any event, you think that'd be bad for the stock today, but no, it's not, or at least an interesting insight into how the market responds. Stocks are down broadly, but here's Apple continuing to trade up. Tesla took a really big hit here in the end of the session, by the way, down 4.7% right now.
Yeah.
That's one of your loss leaders overall, and Nvidia coming back to earth a little bit here. But hey, Hefe over here still trading above its 1 week moving average. So let's, you really want to scare the kids, get Nvidia moving a little bit lower. But you know what? Nvidia at 210 ahead of earnings is a hell of a lot different than Nvidia at 235 ahead of earnings.
That it is.
It sets up a very different risk reward and trade.
Imagine
trade
if it's
incentive
190
structure.
after.
Oh, go! Stop getting ahead of yourself here. There's kids watching. Enough with that bear stuff. All right, S&P 500 7432 closed at 93 points, 1.25%. Nasdaq not that far behind. It's right around we're going to call that 1.54% here on the lows, and some technical patterns may have been broken, and we'll see if they stay broken come the market open on Sunday, Ilya, because we will be back this Sunday for a first call. There's no unannounced holidays coming up.
That's what I know.
Not that we are aware of. So 5:55 Eastern at 4:55 Central on Sunday. See you in 49 hours and 55 minutes, folks. But I hope you have a good weekend. Thanks for watching this week. Thanks for tuning into Tasty Live. Thanks to the production team for putting it all together. See you on Sunday.
Come on, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Our leading story. Breaking news. Our leading story. Breaking news. Coming across the wire. Our leading story. Top story. Just in. In today's headline. This just in. Breaking news.